Welcome back. You're watching CNBC-TV18 Budget Countdown. We're focusing on the defense sector. Joining us right now to speak about the budget wish list of the defense industry and what they expect from the Narendra Modi government 3.0 over the next 5 years are Mr. Rajinder Bhatia, President of Society of Indian Defense Manufacturers, Neeraj Gupta, Managing Director of the MKU Group, and the CEO of Third Eye Tech, a defense startup in India, Vrinda Kapoor. Thank you very much, ladies and gentlemen, for joining us. Mr. Bhatia, if I were to ask you about one key bottleneck that you see in the defense ecosystem right now, what would that be? And in terms of deployment of CapEx, how do you see that in the year FY25?
Okay, Prakshit, I'm going to take the liberty and give you not one, but maybe two or 2.5 bottlenecks. The first part is that if we really want to get onto there's a revolution in military affairs which is going on. What we call RMA 3.0 is on our doors. India did miss the bus for the RMA 2.0 and 1.0. We need to be at the forefront of RMA 3.0 as a nation. Now, what does this involve? This needs, we did announce deep technology fund of 1 lakh crores. But they should not go the technology development fund way, which got declared in 2006-07 and got only operationalized 6-7 years after that. We need to operationalize this fund immediately. We need to find a way. We need to have a framework so that this fund can be utilized for real development of technologies in the country. The second suggestion I am going to give, and that actually is that we need to keep a target of rolling out at least 5 to 6 Make One programs in the next financial year, and at least 1 to 2 strategic partnership programs going forward. These are all large-scale programs which have got the, I would say, the capacity to really give a big boost to the Indian industry. And the third one is that we need to find a way to provide capital at reasonable rates, especially to startups and MSMEs. Today, the cost of capital for them is too high, and we need to really find a way of giving them concessional capital for a long duration, maybe 10 years, 15 years, 20 years at nominal interest rates.
Right.
That's all from my side, Prakshit.
All right. Mr. Gupta, what kind of growth in exports do you expect right now in FY25? And if I were also to ask you, how is the indigenization policy? Just a few days back, the 5th indigenization list of 346 items was notified. Could you give us a sense of what would be the value of components which have been indigenized and are now made locally in India?
So I may not be able to give you the real numbers, but I would say that the positive indigenization list has multi-pronged positive effects. First is, I would say, reduction in import dependence. I think that has been a very, very major, I would say, initiative that has been taken by all the procurement agencies in the way forward. Encouragement to local manufacturing is a second thing that has brought in by the positive indigenization list. And especially, it is giving a boost to MSMEs and startups, and also building the manufacturing ecosystem in the country. Thirdly, I would say that it has given a boost to technological advancement within the country. And I would say that especially it is because of this that the programs like IDEX, Aditi are taking place, and more startups are able to bring in new technologies into country, which otherwise was available at multiple times the cost that we were buying from abroad. Then I would say this list also brings strategic autonomy and is of national strategic importance. By reducing dependency on foreign suppliers, India has enhanced its strategic autonomy and national security. Third, I would say it has also given an economic impact. The way I see it, that by reducing the import dependence and enhancing the local manufacturing, we are directly giving jobs into India. And I believe that each defense item that goes directly into the forces has at least 4 or 5 times multiplier effect. So I think these are the few things that I see as a positive step towards indigenization list.
All right. My final question to Vrinda Kapoor. Vrinda Kapoor, when it comes to collaborations with countries like the United States, ISET, for example, what does this do in terms of connecting the industrial, defense industrial base in India with the global value chains? And do you think we need more such partnerships with other nations?
100%. I mean, ISET was a watershed moment for India. Because it was the first time that we were having this kind of a collaboration, which usually is there only between treaty allies, right? The challenge with, at least from a startup or an MSME perspective of integrating into a global supply chain, right, is that you need the OEM to have a very long-term vision with you. It's something that in the US government parlance, they refer to it as vendor development and sustainment, right? That's something they take up as at scale across the entire value chain, from innovation all the way up to, the fighter jet product line. That's where if we're able to find connections into that, that's where we're going to start seeing, growth and acceptance of a lot of subsystems in import. So 100%, I think ISET was a watershed moment for our country on our own trajectory, also in terms of our relationship with the United States. And we need to see more such critical technology initiatives emerge with other countries in the world.
All right. We've run out of time, but thank you very much, Mr. Bhatia, Neeraj Gupta and Vrinda Kapoor for joining us on the program. What our defense ecosystem really needs from the budget and policy interventions over the next 5 years. Thank you once again for joining us. That's all the time we have on Budget Countdown. Thank you for watching. Goodbye.
As part of Young Turks, over 10 years ago, we decided that we'll visit the Valley every year to see what's happening in the Valley. And so the series is called Voices from the Valley. We've had everybody from Ram Shriram to Naren to all the Indian entrepreneurs, Indian origin entrepreneurs on the program, sharing what it is like to build a global business. And I think what has changed dramatically over the last 22 years of covering Indian entrepreneurship, first generation entrepreneurship, is the audacity of ambition and the fact that people are now looking at wanting to build global businesses. So that's really the context of what brought me out here and what keeps bringing me to the Valley. Before we forecast, rather, I'm going to get you to backcast because, you've got over 30 plus years of experience, 20 years with HP, and you actually helped HP set up HP in India. So as we look at the future and as we look at the opportunities that we can leverage on in an AI world, what do you think were the attributes that were responsible for why we saw this successful building out of the Indian IT story? And today what we see, HP started 20 plus years ago in India, and today we see global capability centers, hundreds of them, every American company, every global company now setting up R&D hubs in India. What do you believe is the attributes that drive that kind of success, and what do you see happening from here on?
I think one of the really interesting things about having this conversation is somehow a couple of decades get lost in the middle. Was very fortunate to grow up in Silicon Valley with the creators of Silicon Valley, Dave Packard and Bill Hewlett. And then having the opportunity with HP to set up Hewlett Packard in India, in a place that nobody associated with IT, that was Bangalore. And that was in the late 1980s, so quite a while ago.
Yes.
And you asked the question, and at that time, many of the IT companies were starting, at least 4 of them, right? Infosys and TCS and Wipro. And I remember the first $1 million of Indian IT export and celebrating that sometime in the late 1980s, 1988 actually. So what really happened with those domains of the Indian IT industry, which then became part of the diaspora here, created the diaspora here? Today we hear a lot of success when we use the word unicorns. That is the word you hear the most, right, MR? Yes. And that's what you hear, VCs, unicorns, absolutely important for entrepreneurship. But the societal applications, and the thing that most excites me today is the fact that we're creating jobs. My company has 5,200 employees, 53% are women in AI.
That does deserve a round of applause.
So, thank you. We're creating the jobs, and the applications of AI are in precision agriculture, and these are a lot of the things between India and the US. Precision agriculture, generative AI in healthcare, clinical imaging, autonomous mobility. You would think, where in the world are you going to have a self-driving car in India? But a lot of the mobility technologies around trust and safety and variety of different things, that's a specialty area for us we work on, is very applicable in both countries. So that's the history. And then there's the future.
And there's a future that's looking very bright at this point in time. But Naveen, you know, let me address and take forward what we just heard from Radha with you. In your experience at Mayfield of working with 80+ companies, taking 18 of those companies public, I think that's the last number that I remember for you. Many companies like Make My Trip, matrimony.com, and so on and so forth. As you look at the future today, what is exciting to you, and where do you believe we can do much more to build on this partnership and really get the diaspora involved as well?
Absolutely, right? So having come to the US in '92 to Stanford for my grad school, I saw the internet was just starting, right? So lived through that revolution as a serial entrepreneur, did like 3 companies, and then became a VC after 10 years in 2004, and have seen many waves, right? Like every time there is a new technology wave, not borrowing from some of the stuff that was said, there is a 10x impact that happens, right? Whether it was mainframes going to mini computers, going to desktop PCs, then the internet happens, then mobile happens, then cloud happens. I think AI is a 100x force. This is where the Indian diaspora is going to do extremely well. So first, my belief is everybody's scared of like AI taking away jobs, right? It was the same with offshoring and outsourcing, right? But what happened? The countries became borderless, companies became borderless, and more growth happened. Every country grew. US benefited, India benefited, right? Now with AI, instead of offshoring your teammates or outsourcing them, you're going to insource them. So we're going to have a new workforce where AI-based companions, AI-based assistants, AI-based teammates are going to work along with humans. And my belief is, being positive about the stuff, AI will elevate humans to become superhumans. And it won't matter where these products are coming out of, right? Because you will be able to do things from India for global markets, right? Because the way you sell, if you have a salesperson who's a digital teammate of yours or an SE, Indians can do extremely well from India. They understand technical products. Every salesperson wants a sales engineer, right? So I see now not only opportunities in cross-border, half our companies today leverage India for R&D. But I haven't seen that many product companies come out of India which serve global markets. Yes, there are examples. But now, given that it's not only a cost arbitrage, I think companies and people of Indian diaspora are going to solve deep problems. This is not building a game, right? You need to understand math, you need to understand science, and Indians, having invented the number 0, we have an advantage. So I'm extremely bullish about the possibilities of AI and what advantages it offers to Indians, and it's going to be up and down the technology stacks. So I'm extremely bullish. I think in terms of wealth creation, success, jobs, I think it's going to be 10x more than what we have seen in every decade. It's going to fundamentally change. And humans will get solutions which weren't possible before, but humans will also be able to do things which they were never able to do before. This is going to essentially amplify our creativity.
The S&P 500 and the Nasdaq close at record high as the earnings season kicks off. Investors also look forward to Fed Chairman Jerome Powell's testimony to the Congress for cues on the Fed's course of action going ahead. Asian markets trade largely higher on a strong handover from Wall Street. The GIFT Nifty is also suggesting a higher start for the Indian market. Crude prices correct. Brent falls to around $85 a barrel as Hurricane Beryl makes its way to the U.S. West Coast. Gold prices too correct as investors' risk appetite grows. Prime Minister Narendra Modi meets Russian President Vladimir Putin in Moscow as he travels to attend the India-Russia summit. The two leaders will conduct official talks later today. After heavy rains bring Mumbai to a standstill on Monday, the IMD issues another red alert warning of heavy rain in the city today. Schools and colleges have been asked to remain shut and citizens are requested to only leave their homes if necessary. Good morning. In the Mumbai News Center, I'm Sonal Bhutra and you're watching Power Breakfast. Those are the top headlines that we are tracking for you. We did see some of the US indices at record highs. So let's see what's happening with the Asian markets because of that. It's a largely green looking Asian market. We have the Taiwanese index, which is up around 130 points. The Hang Seng, though, is seeing some profit booking today. But apart from that, it's every index actually is in the green today. If we talk about the Asian markets, the Shanghai is higher by 0.1%. The Nikkei is also up 1.1%. A lot of action in individual shares like Samsung, Hyundai in that region as well. If we talk about the GIFT Nifty, that should come up for you on the screen, and that one is indicating that the start for our own markets could be absolutely flat with some negative bias. We'll have to see which way things go because yesterday as well we saw that recovery from the lows for our own markets towards the end of the trading session, but right now it is absolutely flat. Let's talk about the US markets. Wall Street ended mixed on Monday. The S&P gained 0.1% and the tech-heavy Nasdaq added 0.28%. Both the indices closed at all-time highs ahead of inflation data and second quarter earnings reports. The Dow Jones ended the session 31 points lower. Investors eye Fed Chair Jerome Powell's Congress testimony and the June Consumer Price Index due to be released on Thursday. Investors hope that a slight improvement in the headline numbers could prompt the Federal Reserve to start cutting the interest rates soon. And on the earnings front, PepsiCo and Delta Airlines will post their earnings on Thursday, while JP Morgan Chase and Citigroup will post their results on Friday. Let us now listen into what the market experts have to say about the inflation trends in the US and the expectations of rate cuts by the Federal Reserve later this year.
It's going to be slow to get from 3 to 2, and the issue will be services. Economy is cooling. We're moving in that direction, but I think the last mile will be more challenging. And there's a few reasons for that. Globalization has become deglobalization. We've got substantial fiscal spending and deficits that are actually still stimulating the economy. You've got a number of other issues. So I think the challenge for the Fed is this last bit will be slower, and they're very aware of that, I think. I think if I were sitting in my former seat, I'd be getting ready to cut the rates in September. I wouldn't make any commitments between now and then, but I think they're positioning to cut rates in September.
I think they're moving in the right direction. I think the Chair Powell has a script. He's going to continue to say that he needs to see a few more good inflation statistics numbers in the months ahead. I think he'll get them. I think inflation is, all the trend lines look good, moving back to target, and I think he'll get the numbers he needs. and I would expect them to start cutting rates in September. Now, if I were on the Fed, I'd been arguing for rate cuts at the end of last year. I think they're taking an increasing risk of putting too much pressure on the economy and financial system and ultimately potentially breaking something. And I don't think that's necessary because the economy is at full employment, and again, inflation's headed back to target. But I'm not on the Fed, and that they have a different judgment. But I think they'll have the evidence they need to start cutting rates in September.
Okay, all right, let's move on to another important news. Boeing agrees to plead guilty to misleading regulators in the 737 MAX criminal case over the 2 fatal crashes that killed 346 people. The move will brand the world's largest aerospace company a felon. CNBC's Philip Yu gets us all the details.
Shares of Boeing moving a little bit higher. I wouldn't call it a relief rally, but certainly investors in Boeing are saying, good, one more hurdle that has been cleared. And this case with the DOJ, it basically comes down to this agreement. Boeing will plead guilty to a felony fraud charge, conspiring to defraud the federal government. They'll pay $243.6 million, another $455 million they will commit to safety and compliance programs, and a judge will appoint an independent corporate monitor. Boeing is officially declining to comment on the plea details here. That's because it hasn't been finalized by the court. We'll still hear from the victims' families. They don't like this agreement. They think it's another sweetheart deal, and they'll be filing with the court as well. Perhaps in the next 2 weeks, we'll find out if this agreement is finalized. And that raises the question, what's next for Boeing? If you're a Boeing shareholder, here's what you're focusing on. Plea deal finalization, potentially in the next couple of weeks here. Corporate monitor will be appointed. And again, that person will be reporting back that Boeing is doing what it's supposed to be doing in terms of safety and compliance. And then the CEO search accelerates, and attention will be focused more on Boeing chair Steve Mollenkopf. So far, he has said nothing publicly in terms of where the company is in the search process. But the priority right now is to get this going, especially since current CEO Dave Calhoun is gone at the end of the year. I wouldn't be surprised if we see some kind of movement on this, perhaps in the next couple of months. Take a look at shares of Boeing. Remember the other big event that's coming up, Q2 results on July 31st, and we'll get a little more clarity in terms of the impact in terms of free cash flow. The company's already changed its guidance in that regard, but we'll see if there's any change in that. So those are the events that investors should be looking forward to over the next 2 or 3 weeks, guys.
Okay, all right. That is an important international story. We'll keep getting you more updates on this one. Let us now get you the final update on our global market wrap this morning. Stocks in Europe closed lower on Monday, capping off a volatile trading day as investors reacted to a surprise win for the left in the country's parliamentary election. The French CAC provisionally closed down 0.6%, reversing gains earlier in the session. The British FTSE edged 0.1% lower, while the German DAX closed flat. The Pan-European Stock 600 index also ended flat. The euro was flat against the dollar, and trading in bond markets was also relatively muted. Okay, that is the global market action, but how will these overnight cues impact our own markets? We have our research team joining in to tell you just that. What is the trade setup looking like today? The stocks that are likely to be in the news and the action from the F&O space as well. Hey guys, a very good morning to all of you. Hormaz, let me come across to you first up. What are the market cues we need to watch out for today?
Well, the setup has been pretty sluggish over the last 3 days. If you look at the Nifty price action and the closing basis, it's almost, the index has moved almost just 20 points in the last 3 trading sessions. So it's been pretty sluggish. But if you take a look at the contributors, it's been dominated by the 2 index heavyweights. It's been Reliance Industries that has been ensuring that the Nifty losses are being kept in check. And it's HDFC Bank on the other side. It pulled the market higher for a better part of last week, and then over the last 3 sessions has been dragging the market lower. So it's Reliance and HDFC Bank on either side that are putting almost a status quo on the Nifty, and it's back to square one almost for HDFC Bank now. It's almost down 9% from the record highs that it made last week. And on the other side, Reliance Industries over the last 1 month has gained 9%. So it's a battle between the 2 heavyweights as of now on the index. The broader market saw a slight bit of pressure in yesterday's trading session, underperforming the benchmark indices. But there was plenty of activity in the broader markets when it comes to specific stocks. The advanced decline ratio also tilted tilted towards the declines. Now, there were outliers as well. There was buying seen in the FMCG stocks. There was buying seen in oil and gas names as well, courtesy of Reliance Industries. But you have to watch out for the PSU stocks today. It's defense one day, it's railways the other. Today, we have to keep an eye out on the Nifty PSE index as well. It's just 100 points away now from recovering all the losses that they made on the 4th of June, which was a Lok Sabha election day. So we'll keep an eye out on that. There's the financial services expiry today, so that will keep the Nifty Bank in focus towards the second half of trade. The business updates continue, so there'll be reactions to that, and of course there'll be plenty of stock specific action in the broader markets, and the GIFT Nifty as well, suggesting an absolutely flat start for our own markets.
Oh yes, it is absolutely flat. Thank you so much, Hormaz, for joining us with all those cues. Let me go across to Sudarshan. He will list out the stocks to watch out for in today's trading session. Good morning, Sudarshan. A lot of quarterly updates.
Morning, so in the quarterly updates, we'll start with Godrej Consumer. It has come out with its Q1 updates. It was a mixed quarterly update. Overall sales growth is expected to be flat, with EBITDA growth is likely to come in double digits. India growth will be in high single digit in value terms. Container Corp, Exim volume remains a concern. Domestic volume growth is likely to come in at 15%, Exim at 3.3%, with overall volume growth at 6%. Mahanagar Gas has hiked CNG price by rupees 1.50 per kg and domestic PNG price by rupees 1 per SCM. Jupiter Wagon sources say it has launched rupees 800 QIP. Indicative price is likely at rupees 655 per share, which is at a discount of more than 9% to its CMP. PT Engineering has launched rupees 360 crore QIP, and floor price as per SEBI formula is at rupees 1054 per share, which is a discount of almost 9% to its CMP. Utkarsh Small Finance Bank, RBI has approved Govind Singh's reappointment as MD and CEO for 3 years. Company has already had in January 2024 had approved appointment of Govind Singh for 3 years. Effective September 21, 2024. HG Infra, it has signed MOU with Ultra Vibrant Solar Energy to acquire shares or voting rights in project companies. Polyplex Corp production at manufacturing plant at Uttarakhand unit is suspended due to rains. And last is Swan Energy. BlackRock Global Funds has bought 18 lakh shares via block deals at 668 per share. Keep an eye on these stocks that might be in focus in the trade today.
Okay, all right. That's a long list, but thank you so much, Sudarshan, for getting us up to speed with that one. Let's go across to Manglam. He's joining in with all the cues from the F&O space this morning. Hey, Manglam.
Good morning. So, there is consolidation which is underway in the frontline indices. So, you have the Nifty, which was marginally in the red yesterday, largely flat, despite the Nifty Bank down about 0.5%, and the mid-caps actually taking off about a third of that index as well. The biggest reason for that was Reliance actually contributing to the way up. But what's interesting is that despite the market consolidating ahead of big events like earnings as well as the budget, India VIX actually spiked, and that's begun to rise once again. So that's something we need to keep an eye out on. Yesterday, the India VIX was up around 7%. The stock that was contributing on the way up over the last few trading sessions has been Reliance, and that has led the Nifty to stay flat despite a big downtake coming in from the banks and other stocks as well. In the cash market, both the FIIs and the DIs are buying, but FIIs purchase was pretty small at around 61 odd crores. But over the index futures, it's been the second straight session where they've been unwinding some long positions, which is actually good for the market because we are seeing some money being taken off the table as the market consolidates. Yesterday as well, close to around 7,000 long contracts were unwound after 10,000 contracts being unwound the previous trading session. And despite that, the FII long exposure still stands at 84%, with net contracts at just under 3.8 lakh. Active Nifty options, 24,300. That's where the fulcrum is, because we have the 24,300 call, which is active for a premium of 120 rupees, and also the 24,300 put. That should come up for you on the screen. That too has been pretty active with a premium of 88 rupees. Both of them together having a premium of 200 rupees, telling you that the street is still playing for that range of 24,100 to 24,500 on the Nifty. Nifty Financial Services weekly expiry today, so that index will be in focus, particularly in the second half. And like we pointed out, Chambal Fertilizers has entered the F&O ban. Alongside that, we have Indus Towers entering F&O ban today as well.
Okay, all right. Those are some stocks that will be in focus, and that's the F&O setup as well. Thank you so much, guys, for joining us today. Let's slip into a break now. When we come back, we'll get you more news and updates on the other side of this short break. Stay tuned for that. Welcome back. You're still tuned into Power Breakfast. Hearing the NEET paper leak case in the Supreme Court, the NEET paper leak case, the Chief Justice D.Y. Chandrachud sought more details before deciding on a retest. The court also wants the CBI to submit a status report on the probe's findings so far. My colleague Ashmit filed this report yesterday.
To begin with, the Supreme Court started hearing the batch of petitioners who are seeking a cancellation of this entire exam. And to substantiate their position, what the petitioners are arguing is that on an ordinary year, it's about 1 or 2 candidates who secure 100% marks. This year, the anomaly appears to be 67 candidates who've secured 100% marks, 720 out of 720, 6 of them from a single center. The second aspect that has been cited by the petitioners is that there is a press release that was seemingly put out by the Bihar police, which confirms their fears about the papers being leaked a day ahead on May 4th on a Telegram channel. Now, this is something that the Apex Court took note of, but nonetheless did observe that any decision with respect to cancellation of the exam will impact over 23 lakh applicants, students. Their futures will be on the line. And to that end, the Supreme Court said that it needs to bear in mind 2 aspects. Number one, how widespread was this leak? Did it come only hours before the test? Was it on social media? Did it spread rapidly? Did it grow viral? The second aspect that needs to be identified as per the Apex Court is who were the beneficiaries of this fraud. The Apex Court at this point holding that there are no 2 ways about it. There is no point going in self-denial. There has been a leak. We need more details. We need more information. And to that count, more details have been sought from the NTA. How was this paper drafted? How was it deployed across various cities and centers? What were the modalities involved? The CBI has been asked to come back with a status report of its investigations. The center has been asked to clarify whether there is a scope for using modern diagnostics to figure out who the beneficiaries were. And all these data sets, we understand the Apex Court has sought by Wednesday evening. This case will get taken up for further hearing and for hopefully more clarity on Thursday, that's June 11th.
Okay, all right, Ashmit, thank you so much for joining us with all those details. Moving on, a day after heavy rains bring Mumbai to a standstill, the IMD has issued another alert warning of heavy rain in the city today. The BMC has also taken a number of steps to protect citizens. Sandhya is joining us on the phone line with the details. Good morning, Sandhya. What are you picking up?
Good morning. So yesterday was not a good day for Mumbai and the entire Mumbai metropolitan region. Keeping that in mind, this time IMD also has on time issued an alert. The category though remains yellow, which means heavy rainfall. Keeping that in mind, BMC has declared a holiday for all the schools and colleges in the city. Yesterday also BMC declared a holiday for all the schools and colleges in the city. Not just BMC, many more municipal corporations of Mumbai metropolitan region, whether it's Navi Mumbai Municipal Corporation or Thane Municipal Corporation or Kalyan Dombivli Municipal Corporation, all these corporations have also declared a holiday for all the schools in their respective regions. Other than that, as per the officials of Central and Western Railway, they have claimed that the trains on all the lines, Western, Central, Trans Harbour, Harbour, Fast, Slow, up and down, all the trains are running on time and they're running normally. As far as the road traffic and the road situation is concerned, there also only one diversion has been reported for a best bus. Other than that, the situation as of now seems much better than what it was yesterday.
Okay, it seems better. Let's hope it remains that way. Sandhya, thank you so much for joining us with all those details. We'll keep coming back to you for more updates. Definitely an important update to track for sure. Moving on to some international news now. Prime Minister Narendra Modi arrives in Moscow for the 22nd India-Russia Annual Summit for a bilateral meet with his Russian counterpart, Vladimir Putin. This marks PM Modi's first visit to Russia since its invasion on Ukraine. The Prime Minister reaffirmed that India seeks to play a supportive role for a stable and peaceful nation. The two leaders spoke on many mutual concerns, including energy cooperation, trade and defense as well. Russia has also decided to discharge all Indians working for the Russian army. Okay, let's slip into another break now. Up next, we'll get you all the cues from the commodities market. A lot of action happening there. Stay tuned.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back. You're still tuned into Power Breakfast. Let's welcome Manisha Gupta on the show. She's joining us with all the update from the commodity space. Hi, Manisha. Good morning. A lot happening in crude, silver, copper as well.
Oh, well, yes, there's some profit taking that we finally are looking at in many of these commodities. So while the first week of July was a great week, but today and overnight there has been some decline here. I'll start with the crude oil prices, which are now trading at a one-week lows. Well, the hurricane barrel has made a landfall and it has been less damaging than expected at the Texas coast. Remember, 40% of the U.S. crude and oil is produced at Texas and various ports and terminals were shut. But we do understand that the damage has been minimal. And then apart from that, senior U.S. officials are in Egypt for ceasefire talks between Gaza and Israel. Well, that conflict has been on for 9 months and the conversation seems to be progressing. It's also taking some premium off the prices. Not just crude, when you look at other metals, the weakness in US dollar while has been supportive, but it has been high inventories which continues to weigh onto the market. So whether it's about iron ore or copper, we have started the day slightly on the weaker note. And it's a similar scenario for gold and silver. Gold fell 1% overnight and silver fell 2%. China has refrained from gold purchase for a second straight month in the month of June. That seems to be weighing on.
Okay, all right. So some profit booking in some of these commodities. Thank you so much, Manisha, for joining us as always and getting us that update from the commodity markets. As we now wrap up on this edition of Power Breakfast, let's talk about the world waiting for the 2024 Summer Olympic Games to begin in Paris. Team India is getting ready to make a bold statement, not just in sports, but in fashion too. CNBC-TV18 Shivani Bajaj has this special report on the inspiration and symbolism behind Team India's ceremonial uniforms at the Olympics this year.
Paris, renowned for its luxury fashion, is set to host the 2024 Summer Olympics from July 26 to August 11. The opening and closing ceremonies promise to be a fashion spectacle, with teams showcasing designs that reflect their heritage. Team India's ceremonial outfit is designed by none other than Tarun Tehiliani in collaboration with Aditya Birla Fashion and Retail Limited's ready-to-wear label Tasva. Let's speak to the man himself and know his vision for India's Olympic couture.
These are Team India's ceremonial outfits from the studio of popular designer Tarun Tehiliani, created in collaboration with Aditya Birla Fashion and Retail's ready-to-wear brand Tasva. Tehiliani says that for the first time, Team India's ceremonial outfits will be a fusion of tradition and modernity, inspired by the most Indian symbol there is.
When I was doing my research on what athletes wore at the opening parade, the one thing that struck me, and it's something that India hadn't followed, was that they march with this big flag and the athletes wear something that always corresponds with the flag. So it seemed logical for me to use the tricolour as inspiration, right? And it's white, off-white, with the orange, the green, and then the very dark blue, which is used in the chakra, but we kept it in a very subtle way for just the buttonholes and a little detailing.
Tehiliani's vision includes elements that resonate with India's rich textile heritage while ensuring a contemporary sporty appeal. The design incorporates ikat weaves in the bandi jackets and details inspired by hunting and safari outfits, symbolizing the gladiator-like spirit of modern athletes. For the opening ceremony, male athletes will wear kurta bandi sets, while female athletes will don saris featuring digitally printed panels in saffron and green, symbolizing the Ashoka Chakra for peace and unity. Custom sneakers give this outfit the most modern twist.
This year, unlike other years where they march around a stadium, France being France, the Olympian teams are going to sail down on barges down the Seine. And so we imagine that this, because of the wind, the flag will be fluttering and all our 300 athletes will be standing behind. So we decided to give them a sneaker, but how do we do a sneaker that feels Indian? So we used the tussar gold brocade and made that into the sneaker. Such an Indian color, such a typical thing of India, beautiful, pattern. And that's how the uniform came about.
The outfits are made from breathable fabrics like cotton moss, ensuring comfort without compromising on style. Tahilyani says they reflect the impeccable tailoring Paris is known for, while retaining the essence of Indian tradition. And he's certain Team India will make a mark at the Olympic Games in both sportsmanship and victories in style. In New Delhi, this is Shivani Bajaj.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
It is kind of very important to be in companies, in sectors where one can be confident about earnings, both in the short term as well as medium terms. Because really the market multiples today are more elevated than most times in history. Broader consumption still has not picked up, and expectation is as government spending picks up, you will see a broader revival in the economy.
Well, first, congratulations to you for this initiative.
Certainly, whether it's on our campus here.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Tuesday, beautiful morning here in Mumbai. It's rained overnight, not raining anymore here, at least not right now. But it's sort of one of those dreamy, rainy, overcast, cloudy Mumbai mornings. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi, good morning. Well, one of those mornings when you just feel like sort of going for a long drive, heading to Lonavala or somewhere like that, right? Enjoying the rains.
Yeah.
But it's a tough situation after what happened overnight because I heard 50 flights have been cancelled because of the rainfall that we saw yesterday. And flights, trains have been severely hit as well. So yes, you know, logistics is generally a problem when it rains like this, but the weather has been awesome.
Beautiful weather, and but we've got a market to contend with, so let's get straight to the action.
You know, yesterday we had the IMD, the Met Department gentleman who was with us. He said, and you are asking him about the rain. He said, well, till last week people were complaining that bahut dhoop hai, barish kahan hai. But you know, his point was in Mumbai, it always happens like that. The rain comes and then it rains mostly during the night. And then, you know, you have one of those mornings when sort of lives are disrupted for a while. And hopefully then things get back on track. But as always, let's kick it off with market action and how we are poised. We are poised in a very, very quiet way. So yesterday was very quiet for frontline indices, but you'd be sort of completely wrong to say that it was a dead market. It was not. It was a vibrant market for stocks. You know, you looked at PSUs in the railway space, fertilizer space, and so much more, which was up and about. And really, I mean, under the surface, it was really bubbling with activity and action. We'll talk more about that. So mid-caps, small caps, micro caps, really a market for those kind of stocks. While the Nifty did nothing very much, mid-caps were down, Bank Nifty pulled back a little bit, but it was quiet there at a headline level. Similar kind of session overnight as well. So very flat markets did nothing. Equities, fixed income, the dollar, all consolidated. So just to give you the bullet points, NASDAQ was up about a quarter. The 10-year yield was down 1 basis point. That's it. A basis point change. The dollar index absolutely flat. We're at about 105 levels on the dollar index as well. Oil prices, they've slipped a little bit. Oil prices now down to about $85.6 a barrel. And that was basically a pullback of about 1%. You know, we're going to look ahead in terms of the catalysts ahead. So you got two this week at least. You've got Jerome Powell's testimony, which is, of course, you know, in terms of what comes out of there. I mean, you know, when I say catalysts, it could be dovish catalysts. I mean, just think about all the data we've got, all the commentary from Fed Chair Powell we've got and other Fed officials. It's all kind of looking like they really all want to start to ease. And will more data supported? I mean, I think more likely than not. You've got the core CPI on Thursday. You got Powell's testimony, which will be watched. And of course, later in the week, you've got the big US bank earnings, which will kick off the Q2 earnings season out there in the US. The big week for earnings in the US is, of course, the week of the 22nd. So we'll see. Just to circle back to levels, at the index level, I think, I mean, it could be entirely reasonable to expect another quieter session. The supports come in at the hourly averages. The 40-hourly average is 24,211. And I think as long as that holds, I mean, I think you can kind of pass this off as a bit of a consolidation sideways kind of price action, which is reasonable after the very sharp run-up. For the Nifty Bank, watch for 51,996 to hold. These are the very short-term support levels. Again, similar kind of view for the Nifty Bank as well. And of course, on the upside, a break above 53,357 will indicate that the market doesn't want to wait. It really wants to pull back right ahead. I think that perhaps is a little less likely. A little consolidation perhaps is in order as we look ahead into the earnings season here with TCS, etc., which will report this week. And of course, the budget, which is now the week after next on Tuesday, that is the 23rd. The Gift Nifty will come up on your screen to give you a sense of the start. There you have it, 10-point change. So it's a quiet start as far as the indication is concerned. Sonia.
Absolutely, and quiet is good, right? I mean, we've been building onto our gains in a slow and steady way, and I think that's something that can continue even in the next couple of days. So this morning, a lot of cues are positive for our markets. The Nifty has been holding steady around the 24,300 mark. Little bit of consolidation is what we've been seeing over the last couple of days. Now, domestic institutions bought in large amounts yesterday, so almost 2,900 crores was bought by DIIs yesterday. And global markets have been very steady. So the S&P 500, the Nasdaq continue to hit record highs and steady move grind on the upside over there. Stocks in focus, Reliance has been leading from the front. So if you look at it in the last 1 month, the gains in Reliance has been about 9%. And of course, you also have a couple of others that will be in focus just for today. Godrej Consumer is one of them. Remember yesterday, Marico and Dabur came out with their updates. Today, Godrej Consumer could be in focus. The company has reported a high single-digit organic volume growth and a mid-single-digit value growth in the India business. So just keep tracking many of these rural plays. In the budget as well, there is expectation that there will be some relief to the middle class, lower middle class in terms of some tax boosts. If that comes about, then the narrative is that many of these consumption plays could be a big beneficiaries of that. And then you have earnings season. On Thursday, you have TCS. On Friday, you have HCL Tech. And once again, the big question that we're asking, are we at the end of the tech earnings downgrade cycle? If yes, then there could be some traction over there as well. But this morning looks like it's going to be a slightly positive start. We're going to build on to our gains. GIFT Nifty suggesting a mild green.
Well, that's right, Sonia. I think the next couple of days, the tech sector will take a center stage. But in the near term, I think we'll be looking at stock-specific action. What did the FIs do for the second day running? Well, in fact, they went ahead and they unbound some positions. So they unbound close to around 8,000 contracts odd. They continue to remain net long with close to around 84% of their positions on the long side. In absolute terms, the FIs, well, they are net long with close to around 3.5 lakh contracts on the long side, while the clients, well, they are net short with close to around 2.5 lakh contracts, and that's been the case for the last couple of weeks or so. Looking at the options data then, the call writers, they continue to believe that they have this covered. They are not expecting the markets to get past the 24,500 odd mark. And that's why, if you look at it, the last few sessions, you have been seeing writing at higher strikes, 24,450 call as well, added closer on 9 lakh shares, which brings us to the levels. And I've been making this point, I believe that we are in this range of around 450, 500 points odd. So that's the broad range that we're looking at. The recent high, that's going to be important. If we can get past that, you'll get a little bit more confident. Once the Nifty gets past the 24,440, 24,450, then you believe that we are up for a fresh breakout. But otherwise, till then, that's a bit of a resistance zone on the upside. Or the July low as well, that's the one that we'll be looking at. We'll keep an eye out on the Nifty Financial Services Index. That plays out the weekly expiry for today. So in the second half of trade, that's going to be important. I just want to highlight a couple of heavyweights. ITC, it's been a rank underperformer. If you look at it in the last 1 year or so, it's still lower. The Nifty is up by close to around 25%. So, it saw a big phase of consolidation. And yesterday, it ended actually at the highest point. If you pull up the chart for yesterday, you'll see that it ended at the highest close in the last 5 months or so. So ITC is showing signs that maybe it wants to get out of that zone that it's been in. And also the delivery-based volumes is more than a crore shares yesterday. So we saw high volumes, a bit of a breakout on ITC. Let's see whether or not that can continue. And that's important because it's a larger weightage on the index. The other one we're looking at is HDFC Bank. You look at the 20 DMA, well, it's hovering around those lines, and yesterday it ended mildly below those levels. So that's going to be very, very important. It's at a crucial juncture. You don't want it to break decisively. My gut is that maybe it takes some support at these levels, and then we can brace for a bit of a bounce. But HDFC Bank, an underperformer, that needs to come to the party to take the index higher. But as I said, it's going to be all about stocks. And the one that I'm looking at today is Chambal Fertilizer. Remember a month or so ago, we had highlighted RCF, and it seems this fertilizer pack got something going for it. Even in yesterday's trade, we saw a big move on Chambal Fertilizers. I don't know whether it's in anticipation of something coming out of the budget. That could be one factor that the street is looking forward to. The Kharif season as well is expected to be good on volumes as well as demand. So that's going to be important. It moved up yesterday on large volumes. It saw a bit of a correction earlier in the month, but now it's moved up. And the traded volumes were higher. It was close to around 50% higher than what we see on an average. And yesterday there was a fair bit of delivery as well. So fundamentally, things looking up for Chambal Fertilizers. We saw a fair bit of delivery-based volume, and also you saw some long build-up. So I'll keep an eye out on this stock at around 500 rupees. That's where the 20 DMA is. That's important. It holds on to that level. But let's see where it goes from here.
Okay, thanks a lot for that. Well, we have a long day ahead, so let's kickstart very quickly. On the equities front, first up, we have Mahesh Nandurkar of Jefferies, who says
that a heavy election calendar has expectedly given way to increased populism at the state level. He says large states with elections have seen 25 to 45% non-capex expenditure jump over FY23 to 25 budgeted estimates at the cost of the fiscal. He says income transfer schemes add up to 1.5 to 4% of GDP. He adds this trend also raises questions on the union budget due on the 23rd July, but he believes that the central government has ammunition to please all. He says this trend should be positive for two-wheelers, telecom, QSR and footwear companies.
Okay, let's get you some money market views. Abhishek Goenka of India Forex and Asset Management says that the US labor market is showing signs of weakness. He says unemployment rate climbed above 4% for the first time in 30 months. Adds market implied probability of a 25 basis point cut by the Fed in September meeting has risen to 75% from 60% last week, with signs of weakness emerging in the US economy. He says Fed Chair Powell's testimony and US June CPI print this week will be crucial. Goes on to say US yield curve has shifted lower and dollar has weakened overall. Rupee, however, continues to remain extremely range-bound and he expects it to trade in a range of between 82.7 to 83.7 to the dollar in the medium term.
Okay, and on the bonds, Vishal Goenka of IndiaBonds.com says bond markets remain on firm footing as some index inclusion flows came through and also because of the lack of any significant macro data. He says all eyes are back on the CPI data this week from the US and India for further cues on direction. He expects the markets to be range-bound with the 10-year benchmark bond yield trading in a range of 6.97 to 7.02%.
We have a lot of stock-specific action tracked for you in our special Top 10 segment. For the time being, we run you through the list. We look at MGL, Godrej Consumer Products, Pitti Engineering, Utkarsh SFB and AG Infra. All of them will be reacting to positive news flow. Add to the list, Swan Energy. Well, on the flip side, you have Concor, Jupiter Wagons, Urja Global and Polyplex Corp that will be reacting to negative news flow.
Okay, well, let's get Phu Ken Yap. He's Senior Investment Strategist at Standard Chartered Bank. He's joining us. Phu, great to have you with us here. Thank you for your time. Appreciate it. So we are getting into the earnings season here and in the US as well. Markets have done extremely well. There is the budget session here in India. A period of consolidation and just stock taking would be nice rather than, you know, the really up and up non-stop rally that we've had. Gives people a chance to think. Just your thoughts, are we likely to get it or you think we are in this broad up move which continues?
Yeah, thanks. Thanks for having me. Look, I think in terms of the short-term consolidation, we do get a lot of investors as well looking for a kind of pullback before getting in. Look, it's hard to predict in the short term. Headlines can move things. You know, the big events, as you mentioned this week, is like a Powell's testimony, and then we've got a CPI print coming up. We've got US earnings coming up on Friday, they're kicking off. So some of these headlines could impact the market in the short term. I think we're looking out more at a 12 months horizon where we're still constructive, driven by the Fed being able to cut rate and extend the economic cycle and earnings growth really coming through. But in terms of the short-term signals, we do monitor our short-term technical models. We do not see any signs of it being stretched and pulling back yet. But our view, like I say, is more in the 6 to 12 months where we're still constructive.
Okay, so no signs of this market being stretched even in the shorter term. And you're still constructive on global equities. Got that, Phu. Good morning and thanks for joining in. This is, of course, for the global markets, right? Back home for India, we have a big event upon us, which is the union budget. The expectations are that the government can do both. Come out with populism measures at the same time, manage the fisc, manage growth, infrastructure, etc. Your thoughts on how to approach the Indian markets now?
Yeah, we do like India as a market because our focus, especially on the opportunistic side, is we're looking at earnings growth. And of course, as you know, India's earnings growth is up there and we think it can continue. The reduced mandate for this coalition government now, we think it's going to mean a bit more spending on rural projects as well as infrastructure projects, which is still pro-growth and perhaps a bit more on the green energy side of things as well. But it's really a continuity that we see and government still being pro-growth and the earnings we think will still deliver and the GDP growth that India has above other countries in Asia, we do expect that to continue. So within Asia, clearly India is our preferred market now. People talk about valuations, but with most of the world moving into a rate cutting environment now, we think valuation is bit of a lesser concern, and so we're really focused on earnings growth, and that's where India would really deliver.
All right. Hi, folk. Good morning and good to see you in. So we've got our elections out of the way, and the outcome is something that the street likes or has digested at least. But the other big trigger could be the US elections, and it appears that Trump is in the driver's seat, at least as of now. What kind of impact it could have for global markets and India in particular? Do you think it could be a bit of a negative?
Yeah, no, thanks for that. I mean, the polls clearly are showing that Trump is way ahead now, and there's a lot of questions on Biden, whether he stays in the race or not. And look, I think the market is already starting to price in some of the impact of what Trump coming into power could mean. Certainly, what we're concerned with really is any impact he might have on inflation. In terms of the tariffs that he's talking about and the spending plans that he might have, that's really the concern, that the impacts on the policies could have an impact on the economics. Otherwise, the geopolitics, the impact tends to be short-lived. Look, in terms of the relations, I think it's clear that the opposition towards China will increase. I think in the past, towards India, it's been mixed or more on the friendly side, I would say. But the impact, I think, for US could be one, if higher yields lead to a slightly stronger dollar. Again, the stronger dollar could have some impact on emerging markets. As you know, stronger dollar tends to be a bit of a negative for emerging markets. But overall, I think in terms of the world going to a multipolar world and the opposition towards China, I think the relations that Trump has had, at least what he said in the past, towards India is a bit more constructive. But really looking at the dollar and the inflation impact on the US.
Okay, folk, we'll leave it at that. Thanks a lot for joining in and giving us your thoughts. We'll slip into a quick break on that note. On the other side of the break, we have plenty of stocks to talk about. Our entire research team will be joining in for the list of top 10 stocks. Stay tuned.
Of our CSR activities, we do what we can for, if I may call it, green cover, conservation, environment, not just trees, but for water, for example, etc. But beyond that, I would say, especially because today we have launched the Bajaj Freedom, the world's first CNG motorcycle. So I'm reminded of the words of Microsoft. You know, their objective was to put a computer in every home. Inspired by your project, I feel like saying perhaps our objective should be to put one clean fuel vehicle, be it CNG or electric, in every home of this country so that every child can exercise his or her fundamental right to clean air.
See, I think this quarter is seasonally weak quarter, right? As we have seen in past as well. So why trends are now slowing, you know, like for some of them, it's going to mid to high single digits on growth. And I think the whole loan to deposit ratio issue, which is pressing banks to maybe slow down a bit. Plus, if you all remember last year, RBI tightened unsecured lending as well. So I think all that is now slowly reflecting, but a lot of it is seasonal in my view. Interest margins also have seen a decent rally in the last 2-3 years. A lot of it is because of external benchmark lending rate, floating rate book, which got repriced, while the CASA ratio has only gone down. So we would see some moderation in NIM.
Welcome back to Bazaar Morning Call. This morning, plenty of stocks to track. So our research team is standing by with that list. First up, we have Sonal joining in to tell us why MGL should be on your radar. Sonal, over to you. Good morning, Sonia. Well, after IGL and Gujarat Gas, Mahanagar Gas has also gone ahead. They've increased CNG prices. CNG prices hiked by 1.5 rupees per kg. PNG prices increased by 1 rupees per SCM. And the price now will be 75 rupees per kg for CNG and 48 rupees per SCM for your domestic gas. The company said that it is because of two reasons. First, the domestic gas allocation has been going down. Second, the imported gas prices, they have been increasing. For example, the spot LNG prices, they are up 11% on a month-on-month basis in the month of June at $12.6 per MMBTU. With this price hike, the gross margins coming at 17.9 rupees per SCM, which is the highest in the sector, and the stock also trades at cheaper valuations at 12 times FY25 EPS. So going with green on the stock today.
Okay, all right. Thanks a lot for that, Sonal. Green for MGL, but Mangalam joins us to tell us about a couple of business updates that did come in. Hi, Mangalam. Morning. Godrej Consumer look good, but I think Concord not so good.
That's correct. So, if you look at Godrej Consumer, the company on an overall basis has flattish sales growth, double-digit constant currency growth. The reason why reported sales growth would be flat is largely because of the currency depreciation in Africa as well as Indonesia. Double-digit EBITDA growth is what the company is speaking about, and that's good because India organic volume growth would be high single-digit, and reported growth, including that of Raymond consumer business that they acquired, would be double-digit in volume and high single-digit in value itself. Indonesia, while it saw good volume growth and good constant currency sales growth, the depreciation impacted the reported growth. And in Africa as well, a high base and some one-off problems in South Africa led to weakness, but EBITDA growth out there is in strong double-digit as well. The only concern, has the stock priced this in already? Yesterday ended at the high point of trade as well, likely to open in the green today, but will be important to see whether it sees some profit taking or not. On Container Corp, they reported their volume growth just after the market closed, and out there as well, the EXIM volume growth came in at 3.3%, whereas domestic volume growth came in at 15%. This led the overall volume growth to be at 6%. But remember, at the end of the fourth quarter, the company had given an FY25 guidance of 15% volume growth for their EXIM business and overall volume growth to be 18 to 20%. This is for the entire year, but the start of this year has actually been much lower than what their entire year's guidance is. So it'll be very interesting to see where Concord trades today. My sense is opens in the red.
All right, Mangalam, thanks very much for that. Well, let's move on to Abhishek now. He's got his eyes on Jupiter Wagons. Abhishek, morning.
Morning, Prashant. So sources tell that, Jupiter Wagons has launched a QIP. The base issue size is about 500 crore, which can be upsized to 800 crore depending on the demand. So if you take a look at the indicative price, it's about 655.5 per share, which is at a discount of 9.5% to yesterday's closing price and about 5% discount to SEBI floor price. That is about 4.9% discount. So equity dilution based on the just base size, that is about 500 crores, it would be about 1.8%. And if it is upsized to 800 crores, then the equity dilution could be around 2.9%. Back to you.
Okay, thanks a lot for that. So that is a couple of stocks that Abhishek is watching. But let's also talk about some more names, Pitti Engineering and Utkarsh Small Finance Bank. Why are you looking at those?
Well, Sonia, CNBC-TV18 exclusive have been confirmed. We broke last week that Pitti Engineering will be looking to launch a QIP, and they have launched a QIP. So the issue size is about 360 crores. Issue price is about 1,054 per share. It is at a discount of 8.9% to yesterday's closing price. However, it remains at the SEBI floor price of 1,054.25 per share. So lock-in is about 90 days for the investors. BRLM is Motilal Oswal only, and sources do tell us that demand is pretty strong over there. Utkarsh Small Finance Bank, now RBI has approved the reappointment of Mr. Govind Singh as the MD and CEO of the bank. He's been at the helm of the bank for 7 years and 7 months. So this is a continuity wherein he gets extension of another 3 years to be running the bank as their MD and CEO. The reappointment has been confirmed with effect from 21st September 2024, and it's a rare instance these days. RBI has not been giving too much relaxation with respect to tenure of MDs, and Utkarsh Small Finance Bank MD has got a 3-year tenure. Back to you.
Okay, thanks for that, Abhishek. Well, let's wind this down with Vivek, who's joining us to tell us some more stocks in the news. Morning, Vivek.
Well, good morning. Quite a few stocks with news flow that's come in post-market as yesterday. First on our list is HG Infra. Last couple of sessions, the company has been saying that it's been going ahead and setting up joint ventures to enter into the solar power equipment business. So yesterday, the company has entered into an MOU with a company known as Ultra Vibrant Solar Energy. Remember, Ultra Vibrant Solar Energy recently won solar projects from Jodhpur Vidyut Vitran Nigam Limited, and these particular projects were of almost 83 megawatts. So now what will happen is HG Infra will go ahead and take over these projects. The next stock on the radar is Urja Global. Some negative news flow there. The company is currently seeing search operations at its premises. This is under the CGST Act of 2017. The other stock on the radar, Polyplex Corporation. The company has updated the exchanges that it has gone ahead and stopped production at its manufacturing plant in Uttarakhand. This is due to very heavy rains. The company says, they're still estimating the loss, but they're also saying that they're fully insured for these particular losses. Swan Energy, a very interesting block deal took place in yesterday's trading session. Two BlackRock funds, so BlackRock Emerging Frontiers Market Fund picked up 0.7% stake, and Global Funds India picked up almost 0.58% stake over there. Amongst the sellers, 2i Capital PCC, an entity that had 1.9% stake, trimmed its stake over there, and also Dovetail India Fund also trimmed its stake. It had almost 1.4% stake at the end of March quarter.
Okay, well, thanks a lot for that. Here's a quick recap in case you missed out on any of these stocks. Stocks with positive news flow: Mahanagar Gas, Godrej Consumer, Pitti Engineering, Utkarsh Small Finance Bank, HG Infra and Swan Energy. While stocks with negative news flow: Concord, Jupiter Wagons, Urja Global and Polyplex Corp. But there are some brokerage notes to focus on for the day as well. Sudarshan is here to give us the latest on that. Sudarshan, good morning.
Morning, Sonia. So two major notes have come in for oil and gas space. So first, Motilal Oswal maintains buy call on GAIL with a target of 260 per share, and it is a buy call on ONGC with a target of rupees 330 per share. Speaking about GAIL, it says it's a structural upturn marked by first improving volume growth outlook, and there is a potential for 10 to 12% tariff hikes in transmission business in H2 FY26, and completion of transmission petchem projects will boost ROE and ROC. It forecasts rupees 4,040 crore of free cash flow in FY26. On ONGC, it says companies trading at 0.9x consolidated FY26 E price to book value, despite boasting consolidated FY26 ROE of 17.2%, and sharp re-rating in HPCL and other listed investments are key catalysts for ONGC. Next is CLSO Gas Company. It says global LNG markets have seen a surge in prices. Asian spot LNG prices are up 11% month on month in June 2024. Domestic consumption was up 20% year on year, and gas production was up 7%. But says consumption was largely met by big 33% rise in LNG imports. It says positive consumption trends points to a jump in volume for GAIL, GSPL and Petronet LNG. Citi has initiated coverage on FL India with a buy call, and target is rupees 1,600 per share. It says company is well positioned to benefit from recovery in mobile ad budgets, and ROE-focused M&A strategy should see business turnaround in large markets like USA, and it expects 20% top-line CAGR and 400 bips EBIT margin expansion over FY24-27.
All right, Sudarshan, good one. Thanks a lot for joining in and running us through all those brokerage notes. But let's turn our attention a little bit away from equity markets and focus on commodities. Manisha Gupta joins us to help us out with that. Morning, Manisha.
Morning, Nigel. Thank you for that. Well, I'll start with the crude oil prices because they have slipped to a one-week lows. The Hurricane Beryl has been less damaging than expected at the Texas coast. Remember, various terminals and ports were shut ahead of its landfall, but we do understand that almost negligible damage is what we've seen on the facilities here. Also, senior U.S. officials in Egypt are there for ceasefire talks between Gaza and Israel, so markets have taken that premium off the markets as well. But yes, the elections in UK, France, Iran, on how are they going to impact policies and geopolitics going forward is something that crude watchers are looking for. We have seen the metal prices also see some pressure. Copper prices have seen some decline as well, trading 0.5% down in the Asian markets right now. You have rubber prices, which are trading at a 7-week lows right now. Even with the weakness in US dollar, it is the concerns about demand coming in from Asia that is weighing on many of these industrial commodities.
All right, Manisha, thanks very much for that. We'll come back to you for more. We'll take a break. Amnish Agarwal, Head of Research at Prabhudas Lilladher, will be joining in with some stock ideas on the other side. Stay tuned. That's coming up a little later. After that, we'll also be joined by the management at Senco Gold. We talk about their business update for the first quarter, which came yesterday. Stay tuned.
Dr. Saneen, you know, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, you know, one of the statistics that or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Welcome back. Hope you're having a good morning. Well, let's get straight to a CNBC-TV18 exclusive from the aviation space. SpiceJet has not deposited Provident Fund contribution for its employees over the last 2.5 years. According to the EFPO responding to an RTI query by CNBC-TV18, the EPFO has confirmed that the airline has not deposited dues all the way since January 2022. SpiceJet is yet to respond to a query from CNBC-TV18. CNBC-TV18's Madhya has more details on that. Well, Madhya, it's another instance of SpiceJet not paying its dues and more evidence of a cash crunch at the airline. Tell us more.
Well, not depositing mandatory statutory dues is a clear sign that the airline is struggling with cash. We have been reporting on how the airline has been defaulting on various payments. CNBC-TV18 had also sought a response from SpiceJet on 28th May on the delay in PF deposits. We had sent this query after learning from sources that SpiceJet has not deposited PF since December 2021. The airline had denied the information in its reply and said it is regularly clearing the dues with a lag of few months. But now, according to the EPFO's reply to CNBC-TV18's RTI query, SpiceJet has not deposited dues since January 2022, pretty much confirming what we had learned from sources. EPFO said the last deposition period of PF contribution by the establishment is for the wage period January 2022 in respect of 11,581 employees. The Provident Fund body also said that it had sent notices along with summons under Section 7A of the EPF and MP Act 1952 against the establishment regarding non-deposition of PF contribution. Now, non-payment of statutory dues has consequences. In March this year, the EPFO had warned companies of damages if there is non-compliance in PF deposits. The employer will have to pay an interest of 25% for a default of more than 6 months. Now, there have been more instances of non-payment of dues by SpiceJet. Remember, on the 7th of June, CNBC-TV18, upon receiving a confirmation from the Airports Authority of India, had reported that SpiceJet is operating on cash and carry mode at all its airports in India. The airline is also facing various litigations regarding non-payment to lessors in different courts. So yes, signs of severe liquidity crunch in the airline. CNBC-TV18 had sent a query to SpiceJet. The airline is yet to respond to a query.
Got that. Thanks for that, Madhya. Well, let's move on then. Amnish Agarwal, our head of research at Prabhudas Lilladher, joins us on the show. Hi, Amnish. Thanks a lot for joining in. Well, I wanted to ask you about the gas price hikes that we saw. MGL has gone ahead and increased prices. Some part of the street expected that because input costs did go up. The stock trades at a discount in comparison to some of its peers, and its profitability is relatively better. Your view in MGL in particular, and how would you weigh it against IGL as well as Gujarat Gas?
This is a problem with MGL. Hi, Nigel. The problem with MGL in the past also has been the, you can say, visibility on the volume growth. Because MGL has been more focused on, say, more like your MMR region, and you can say the volume growth there has not been that great. So that is one reason that the visibility of growth in MGL has been lower than some of the other city gas distribution companies. Now, coming to, you can say, other players like IGL and all, I think if you look at, say, past 5-7 years, the entire city gas distribution sector has got derated. Primarily because, first of all, the amount of margins which they make in the, you can say, your distribution to the households, okay, which is a piped natural gas. So that doesn't give you, you can say, much of a margin in the near term. And as far as your automobile is concerned, there has been a shift happening towards EV, more so from the fleets which are operated by the state, by the, you can say the best buses in, you can say, your Mumbai, or the buses which are operated by the Delhi Authority. Okay, so that is why the visibility on the volume growth has not been that great, and that is why if you look at the sector has got derated from where it used to trade, say, 5-7 years back. And I think the scenario is not going to change much from where we are standing in terms of P multiple. Whatever re-rating was to happen, we have seen in the past 12 months that the re-rating has already happened.
Okay. The other stock I wanted to talk to you about, Amnish, was Reliance Industries. I mean, it's come back in a big way, right? So this month, Reliance is up almost about 9% in the last 1 month, that is. And it has provided a lot of leadership to this market. Is there more on the upside, you think?
You see, if you look at the near-term numbers, whether it is, you can say, the petchem segment or the refining segment, you will not get any big excitement from there. But a stock like Reliance, I think it is not moving on that. First of all, last time we talked about the expected tariff hikes. So that has happened, which will improve the profitability of Jio. So incrementally also, I think Jio, then your retail, plus some, you can say, your news flow on the new energy side is something which is going to be the bigger driver of the stock rather than the core business. So I think as the markets continues to get clarity on these 2-3 new businesses, I think the stock will continue to make new highs.
Amnish, hi, morning. This entire railway/fertilizer, but PSU, common thread, RVNL, IRFC, IRDA, IRCON, you know, in the fertilizer space, RCF, NFL, FACT, GSFC. I mean, if you want to take a shot at either of the two sectors, comment if you will. I mean, you know, monsoon rains are finally picking up, and it seems like they're starting to progress well over much of the country. I mean, at least that's the feedback we got from the IMD. So what does that do for consumer-facing sectors, agri-facing sectors, etc.? Go on.
Okay, so hi Prashant. So I will take things one by one. First, you asked about the fertilizer stocks. Now, as far as fertilizer is concerned, my view is that the inherent growth in terms of volumes is not very great in this industry because your land mass at the end of the day is limited. Now, this year you might do better because the monsoons are normal, but the kind of re-rating we have seen, and then you can say the news flow around the nano urea and all. So I don't think, yes, there could be a case where some of these companies which are into ammonia and all, so there might be some sort of a play, but the core fertilizer companies which are into urea and all, so I'm not much excited by that. On the second basket you talked about was companies like which are into railways or PSUs like you can say IRDA and all. I think railways is more like a long-term story. The visibility of growth there, if I compare, say, a fertilizer company with a railway company, the visibility of growth is starkly very different. Fertilizer companies, except when you increase capacities, can't grow by, say, more than low single digit to mid single digit in volumes. Whereas the railway companies over the next, say, 5 to 10 years, they can give you a easily double digit kind of a sales growth very easily. So these are the two baskets. And when it comes to a stock like IRDA, you see it's expensive. At the same time, the kind of investments which are happening on the renewable energy and the kind of targets which India has to go to 500 gigawatts of renewable power, I think their overall loan growth as well as the disbursements, they will continue to move up. Now, where the valuation will settle, I think that is anybody's guess in today's market. But as far as growth is concerned, the growth is going to be definitely there.
Okay, growth is going to be definitely. Sure, please go on.
Yeah, so now coming to your last question on the consumption stocks. The monsoon has been good, it has picked up very well. But at the same time, one also has to look at two other factors. One is you can see the margins which the companies are trading at, and the second one is your valuations. Now, even if the growth rates pick up, I see a very limited possibility of very sharp increase in margins for most of the companies in the consumption space, more on the staple side. Now, what seems to be happening more, and it might play out more, that once the volume growths in the industry pick up, there will be some increase in the margins, okay, in line with your operating leverage. But the place seems to be more like a sectoral churn again, because most of these stocks, they had not done anything from the last 3 years. And today, in an environment where even the industrials, where even some of the other commodity sectors, they have started trading at very good valuations, then it's more like that there is a flow of money into the consumption stocks. And given the fact that the basket of stocks never changes, and so the market will assigning your higher P multiples. So my view is that incrementally stocks will give return, but a large part of that return will also come from increase in the P multiples, and not merely because of the increase in the, you can say, the profitability, or you can say increase in the earnings estimate.
Okay, well, just stay on, Navneesh. We'll come back to you in a bit. We have the first management on the show joining us now, Senco Gold and Diamonds. The stock has surged 50% in 2024 so far. The company achieved retail sales growth of 11%, same-store sales growth of 4% in Q1 of FY25. To discuss all of this and more, we have Suvankar Sen, the Managing Director and Chief Executive Officer at Senco Gold and Diamonds. Always fun to chat about jewelry, right? Especially for me. But Mr. Sen, good morning and thanks a lot for joining in. I want to start by asking you how demand has been in Q2 so far. There's the wedding season upcoming. There is, of course, lots of traction that we're seeing in the sector itself. But give us some numbers. What kind of growth are you looking at in Q2? And, what is the outlook for FY25?
So if you really look at it, the first half of the year, in this financial year, the number of weddings are much lower compared to what we were seeing in the previous financial year, which is leading to the kind of growth numbers that you have seen in the Q1 with the heat waves and the elections in place, and the lesser number of weddings that were there scheduled for Q1. So the growth has been on the lower side of say 9% overall and 11% for retail sales growth. But in terms of the expectations, because we are already seeing that the consumption that is happening at the stores is largely led by the weddings in the second half of the year. So collections, jewelry, designs for the weddings have already been launched, and people are hoping and expecting that prices of gold might go up further high on this towards the end of the year, so they can start buying now. So with July, there are a few wedding dates, but they are much lower compared to last year. So people are buying, but overall, with the gold prices that have gone up by almost 20% in the last 2-3 months, I think that volumes are taking a hit, and consumers are just waiting and watching that how does the price behave. So this is overall what we are seeing at the consumer end.
Okay, what about same-store sales growth? What are you looking at for the full year?
So this year we've got in Q1 about 4%. If you look at the last financial year, we had the same-store sales growth of above 15%, almost 18-19%. So last year, I think the overall sentiments and the consumption was much higher. This year, Q1 should be just like a blip, because with so many things happening, consumers also get a little tired. I guess that with the good monsoons that are in place, it all starts with the agricultural sector picking up. So once that move starts moving, then the money, the liquidity starts flowing, and by the time the festive season comes in October, I think we will be able to see much better numbers. But in terms of same-store sales growth, around a low double-digit would be something that is expected. About 10 to 12% is a good number to have for the same-store sales growth.
Got it. All right. Hi, Mr. Sen. Good morning and good to see you. Give us a sense about the studded sales ratio. You know, how much was it as a percentage of your total mix? I think it had moved up to around 11%. And also guide us with regard to your store additions for the year. In the first quarter, I think you've added close to around 6. What's the target for the year?
So the target for the year is about 18 to 20 because there will be 10, 12 company-owned, company-operated stores and about 8 to 10 franchisees. So this is how we are looking at the overall numbers. So we've got 6 added in the first quarter. A few more will get added in the second quarter and then the third quarter. So we should be touching close to 20. And in terms of the studded ratio, it continues to remain the same, about 11 to 11.5%. The Q1 overall, with the gold prices also moving up, I think consumers have been a little slow in terms of buying. So if you really look at the diamond sales, it has also been a little, under pressure. The Q1 has not seen so much of a diamond sale. So the growth has been very limited in the first quarter of the financial year.
Mr. Sen, I just want to ask you on that store addition, why was retail higher than wholesale in spite of opening up, new stores? Was there some inventory correction, and are we likely to see that for a little bit longer?
No, it's not like that. See, we have a business of exports as well. So overall, if you see that the retail has been higher, but last year Q1 was a Akshay Tritiya year, and the Eid is also playing an important part in terms of the overall consumption of gold jewelry or diamond jewelry. So that because of the gold price, we have seen a lesser demand worldwide for the jewelry as well. That is the reason retail is looking higher than the overall sales of the business.
Mr. Sen, hi, morning. Prashant here. I'm looking at some estimates for the future, and analysts are modeling in a straight 20% kind of growth for this year. That's revenues, and next year, FY26. So you should, if you go by these estimates, you should be at about 7,600 crores by FY26, based on this run rate. So that seems reasonable to you. Also, margins are about 7.5%, more like. That should be broadly where you should be.
Yes, that is how we are looking at the business. That every year, and if you look at the historical past as well, an 18 to 20% growth in terms of top line and also in terms of bottom line, which will take us towards a 7,500 crores to 8,000 crore by the end of FY26. So this will continue to happen. The number of stores will continue to get added. The same store sales growth will be about 10 to 12%. The franchisee business will continue to penetrate into the smaller towns. So we are seeing that in terms of the interest, the business people, the various traders, potential franchisees in the tier 2, 3, 4 towns are keen to have being associated with big brands. The aspiration of the consumers at the smaller towns is also growing up. It is only about utilizing the opportunity. So I believe that the kind of estimates that we have put in is very much achievable.
So let's just, playing the devil's advocate, what are the risks according to you to this secular kind of growth, right? It's not just you. So if you look at between 2010 and 2020, we didn't have very many winners in this sector from a stock market perspective. But now, there's you and there's a few others. There used to be Titan, and which of course made a lot of money. But now it's broadened out, the sector itself. What could be the risks going ahead as you see it? Could it be lab-grown diamonds? Could we reach an inflection point there suddenly, which disrupts a lot of things there? Competition. I was just reading that Bluestone has received another round of funding, taking its valuation to almost $1 billion. And there are so many other newer players in the area, very well funded, which can sustain sustain losses while they sort of expand. So just wanted your thoughts, sir.
So the one major risk for the sector has always been the gold price volatility, which creates certain, quarters or certain years of lower growth compared to other years. So that will remain. If you look at this financial year, you have so many elections coming in. And if you look at the elections that have happened in UK, the kind of results that we have seen in France. It's all very unexpected. It's all very chaotic. Nothing is clear. In the month of November, the US elections will be in place. So there will be unexpected results or any kind of uncertainty that will lead to the volatility in the gold price, leading to consumers getting confused. So that will always remain an external market factor impacting the business. In terms of competition, yes, what we are seeing is that there is a shift happening from the unorganized to organized. So there are these efforts and endeavors by multiple companies to take a bigger chunk of the market share, and leading to higher discounts and a lot of attractive offers, which might have a downward pressure on the margins. But this is, I think, the major two risk. If you look at it really intrinsically, with the expansion of the business happening across the sector, we need to continuously develop, talented pool of team members, new generation people who are capable of handling the customers, the queries, and giving a great service to the customer. So these are more infrastructural back-end improvements that I think the sector overall needs to do. But in terms of the other part of it, the tailwind that we are seeing is that fact that consumers are preferring brands. They are wanting to be associated with organized sector, looking for better experiences, and that is where the kind of players that you're looking at, the names that you have seen, and the market has become much more widened. So that is the benefit that we are getting in terms of the customer outlook and the better experience that they're looking for.
Okay.
Just one point, the organized penetration of the sector would be upwards of 50%, Mr. Sen, right now?
See, as per the CRISIL data that they had, it was around 40 to 50% compared to what it was maybe 5 years back. It was 25 to 30%. So there is a big change and a fast change happening. So that's how we would look at it. Maybe in the coming 2-3 years, as you said, that it will be moving towards 60%.
All right, fair enough. Mr. Sen, thank you very much. Appreciate you joining in, and good speaking with you here on CNBC TV18. Good luck. We'll take a break. We are going to be joined by Mitesh and Sudarshan with some technical trading ideas. Stay tuned, that's coming up.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour.
Okay, welcome back. We've got Mitesh and Sudarshan with us with what they are sort of thinking about the markets and what they'd like you to do. Gentlemen, good morning. Good to have you here. Mitesh, indices absolutely flat. So let's just get that over with before we get into stocks, which is where all of the action has been.
So that's right, Prashant. In fact, yesterday also I spoke about the fact that very likely outcome of the current movement is that the markets and the indices will consolidate at higher levels. I think Nifty, this 24, 150, 120 is a very strong support range. 24, 400 or thereabout areas are supply pivots. So we might see a 300, 350 point kind of a range, which might last for next 2, 3, 4 days. So I think the idea is that avoid trading the index or trade near the ranges with small stop losses.
Okay, Sudarshan Sukhani is also with us. Sudarshan, hi, good morning. Is this a market that can build on to its gains? That's the big question. And if yes, what are the stocks that you're looking at this morning?
Yeah, sure. Good morning. See, given the existing circumstances, the markets will build up on their gains. That's what the current view is. Now, something unusual may happen. We can't predict that. But as of now, the markets are consolidating and we can expect a breakout sooner or later. Now, the Nifty is a buying opportunity every day. Every day we are getting those 100 point, 150 point dips, and they should be used to enter even an intraday trade or a 1 day, 2 day carryover trade. So that's the view on the Nifty. Buy every dip. Now, the stocks are all in the FMCG sector today. Marico is a buy with a stop under 620. ITC is a buy with a stop under 430. I don't know how the FMCG sector has suddenly woken up. UBL United Breweries is a buy with a stop under 2050. And Colgate is a buy finally with a stop under 2900.
Okay, Mitesh, what about you? What would your stock ideas be for the day?
Yeah, I have a couple of sell calls. After a long time, there are some signs of profit booking in the PSU banking space. So 2 sells to 2 buys. Bank of Baroda is a sell with a stop at 268 for targets of 250, and Canara Bank, that's a sell with a stop at 117.25 for targets of 108. On the buying side is Gas Authority with a stop below 225. I would look for targets of 245 here, and Bata is a buy with a stop at 1510 for targets of 1575.
Okay, all right. Gentlemen, we'll come back to you, for more a little later. We'll take a quick commercial break here. We'll come back. We'll have the pre-open rates with us, about 5 minutes away from that. We'll also have Amit Roy of PwC India, and we put the focus on life insurance companies. Remember, data for the month of June is out, which also means that we actually have numbers for the full quarter, Q1. So stay tuned, that's coming up.
At CNBC-TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube.
Welcome back. Well, we have, a couple of, I think a couple of minutes before the pre-opening rates kick in for the day. Looks like it's going to be a quiet one, but in the meantime, let's also get some F&O ideas out of the way. Sneha Seth, the derivative research analyst at Angel One, is joining us now. Sneha, hi, good morning and good speaking to you. This is a market that is sort of, testing our patience a bit. I mean, we're sitting at record highs, but we're unable to build on to our gains. What's the recommendation for today, and what are the stocks that you're looking at?
A very good morning, Sonia. If you look at market, yes, the market looks strong. We have seen 24,000, 24,100 acting as a good base. But on the higher side, follow-up buying is missing. We are also seeing decent writing in 24,400, 500 call option. So it will be very important for Nifty to surpass 24,400, 500 zone, and then only we may see some momentum coming in. For now, we are seeing sector rotation going on, and one should be focusing on same. So in individual counters, I have a 2 buy call. The first one is ONGC. If we look at this counter, last 2 days, we have seen a very strong up move. On the charts front, we were seeing resistance around 290 to 92 zone for ONGC, and it has surpassed with decent volumes. Out of the money calls have also been quite active here. So I would recommend buying ONGC with a strict stop loss of around 292, and the target expected will be around 317. Apart from this, Lupin looks good from the pharma space. Again, this counter has the same chart structure. This counter has been consolidating, and we have seen a breakout of this consolidation. So I expect Lupin also to go to show further strength, but recommend this counter with a strict stop loss of around 1725, and the target expected will be around 1857.
Okay, thanks a lot, Sneha, for that. Well, that is the word coming in on the F&O space, but Amnish Agarwal is still with us. Amnish, since the big event is the budget, let's talk a little bit about that, right? Jefferies actually put out a very interesting note where they said that there could be a meaningful tax cut towards the middle class. And if that comes through, it's positive for discretionary stocks like e-commerce players, telecom players, retailers, consumer durables. So they've named names like, Nykaa, Bharti, Trent, etc. Do you think the run is done in many of these names, or ahead of the budget, are these still worth buying at this price?
I would like to separate the two. As far as your budget is concerned, I am also hopeful that after a long time, there will be, you can say, some meaningful, rationalization of taxes, which could benefit the middle class. Now, as far as your stocks is concerned, if there is some, you can say, benefit which comes to the middle class, then definitely the consumption sector should do well, and it should be much more broad-based, even for two-wheelers, you can say your cars, and many of these retailers. Yes, they will fall into that bracket. But will that result in further increasing growth rates? The answer is yes. But in the near term, yes, the P multiples can further go up. But in the medium to long term, is there scope for further re-rating of these stocks? I don't think so.
All right. Amnish, ITC, after a very, very long while, yesterday it came back to life. In the last 1 year or so, the Nifty is up 25%. ITC, I think, is still down close to around 4%. And yesterday we saw the highest close in 5 months. Any view on the stock at around this 440 rupees?
I think ITC is looking very promising to us because last quarter volumes in cigarettes were positive, and I believe that this quarter it should be again the same, which is, you can say, 1Q. Now, as we go along, see in the last particularly 2-3 quarters, they have been witnessing margin pressure in paper, in agri. Even cigarette volumes for 1 quarter, they were on the negative side. So I think in terms of numbers, the things will start improving. Now, if there is no major tinkering of cigarette taxes in the budget, I think the way the entire consumption sector is going up, staple and all others, I think ITC at the current valuation and given the dividend deal, I think ITC definitely looks very good, and I won't be surprised that if it gives 10 to 15% return from these levels over the next year or so.
I just want to put up Yes Bank, and where it left off yesterday. Just want to make a couple of points. So the stock was down, I think, about 3.5–4% in trade yesterday after, that furious move that it saw on Friday. On Friday, basically, it moved from 24 rupees to, 27 rupees. So that was a big move backed by very large volumes, and there is a lot of interest. Now, there was a story which essentially said that the RBI has given approval to for a 51% stake sale in Yes Bank, and that was essentially, I think, what got the street very excited, that the RBI sees Yes Bank as a special case. Remember, promoter holding is capped at 26% with banks. We reached out to our sources, and what we are given to understand essentially is that there is no such approval for people to be able to go up to 51%. SBI, which owns a significant chunk, that they've been looking to sort of sell. That is true, but that is a separate matter. I think why the street got excited with Yes Bank essentially is because of that the reports and the story that maybe there'll be a full 51% kind of stake sale which will happen in Yes Bank, and that we can sort of, confirm from our sources that there is no such approval which has really come true. So just wanted to make that point. It's a retail favorite. It's done well. And on Friday, it saw that large move really, which came through. So that's that. Let's just look at the Nifty as well in the pre-open session. I think, 3 minutes in, maybe take a look at the Nifty and then we'll move on. 18, 19 points higher. 24,336 is where we're at. So yesterday, life insurance data came through for the month of June, and we sort of put the numbers out with Yash. We've got a discussion here. Guys.
Absolutely, yes. In fact, there was a 15% year-on-year rise that we saw in premiums for the month of June. Leading companies like HDFC Life, ICICI Prudential Life contributed to this growth and notable increases in their premiums and APE figures. So let's find out. Amit Roy, the partner and leader insurance and allied businesses at PwC India, joins us now to talk about that. Amit, thanks a lot for joining in. The premiums went up on an average about 15% year-on-year in this particular in this particular quarter. So I just wanted to understand from you, how has the overall life insurance industry done so far, and what do you see as the growth trajectory? The June business premiums for some of these larger companies like HDFC Life, etc., went up about 9-10%. So it's still in single digits there. But what is the expectation for the rest of the fiscal?
I think it's not only a quarter performance. Some 5 things that these companies have been doing consistently for last about 3 to 4 years, since the time that COVID set in. And those 5 things are investing on value-based deals, which is around tie-ups, which is around any major thing that they were doing. The second thing was digital transformation with customer at the center of everything. The third thing was in terms of innovation, whatever they were doing, much more customer-centric, and it was grounds up for a change rather than tops down. The fourth thing was investing on data, making it a real-time, customer-friendly, data-driven product and service decision, and not something which is only SOP-driven. And the fifth and the most important thing is talent development. I think combination of all these 5 things is making the space very, very exciting. And I believe that this kind of growth is possibly an indication of the headroom that the industry has for this country, the largest populated country in the world. We have more than enough room for the companies to grow their business volume and, of course, margin.
I'll come back to, of course, the industry overall, Amit, but I want to ask you, what is going wrong with HDFC Life? Now, I'm just looking at it from, a pure stock market investor angle, right? And this is the query that we get asked almost every other day. The stock has done nothing for investors in 5 years. I was just looking at the chart of HDFC Life. 5 years ago, it was 500 rupees. Today, it's 620. And the market has, really grown since then. What is going wrong, and what can HDFC Life do to sort of buttress that growth?
Given the kind of position that we have as Big Four partners, we have limitations to talk about any specific stock, and I am not a market analyst per se. I will possibly talk about the generalist thing, that there's nothing wrong with the companies that you see in the bourses today from the insurance side. It's just about how investors look at it or analysts look at it. If you talk about the industry as a whole, it's the most regulated industry where the proportion of the protection products are going up, which is good for the industry, which is good for the investor, good for the company. You would see that the most regulated companies are investing in technology, they are investing in distribution, they're making their products customer friendly. It sometimes happens that this is a technical industry where possibly the reports or the financials that come out for the common people on the public disclosure is not very user friendly, and which is why the new accounting norms like IFRS 17 or RBC is coming, so that a common person can also understand the nuances of a life insurance economics, and that will possibly make the stocks much more friendlier, and investor will find value in that. I would say it's a robust company, is doing well, and there's no cause of concern for this company like any others that you see in the bourses today.
Okay, got it. That's a fair point. But, just coming back to the industry, right? Overall, if you look at it, the data suggests that the life insurance sector overall saw a growth of 20% in the APE in Q1, and the private sector has grown at 24%. Is this a run rate, this growth run rate, something that you see through the course of the fiscal?
I will say if you talk about the CAGR of last 5 years, that would be a better, better thing to look at. If you see that the life industry has grown by more than 10%, which itself on a CAGR growth is very impressive. We are 10th largest market as far as insurance grows. I believe with the kind of growth rate that you see, if it continues to be in double digit, where I am very bullish about, this will be 6th largest life insurance or insurance market in the world. That's an exciting thing. See, 3 pillars are actually working for the industry. One is obviously you see the clarion call of government that insurance for all by 2047. The second is the regulation changes, which are extremely friendly for the industry. Probably for the first time last 3 years, we have seen so much of positive regulations, helping the industry for growth, for investment, for new players to come in. Third, and the most important thing, the amount of data which is now available for the players, that makes their underwriting easier, that makes their decision making easier, and customers are getting something which is much needed, which is something that they can create for themselves. This combination of these 3 things will definitely fuel the growth, and we are a growing country with very young population. So obviously the industry will continue to do well.
Okay, Amit, we will leave it at that. Thank you so much for joining us. Appreciate your time here and talking about the industry and the way forward. So that is the life insurance industry overall done pretty well. And, they say, Amit saying that things could get better going forward. But let's do one thing. Let's get a quick handle on what's happening, in the pre-opening rates right now. It's 9:10, so we're going to get some 9:10 calls going. The pre-opening rate suggests a mildly positive start, 30 points in the green for the Nifty. Sensex up about 15 odd points. Sudarshan is back with us. Sudarshan, what's the big call at 9:10?
Well, IDC is a buying opportunity with a stop under 430.
Okay, and Mitesh, what about you?
After a long time, I'll go with a sell call on Bank of Baroda. Keep a stop at about 268.5. Look for targets of below 250.
Okay.
Okay, all right. Mitesh, I just wanted to ask you about, yesterday we saw RCF that moved very, very well. I think around 45 days or so, we were highlighting the kind of delivery you were saying, the way the stock was moving. It's done quite well from there. But now, Chambal as well yesterday, it moved higher on very, very large volumes. On the charts, how's it looking?
I think the entire fertilizer sector is looking good, and the top stocks which are like Chambal, RCF, and GSFC. So I think there's good momentum over here. RCF, I am looking at targets in excess of around 255. Chambal, it's met the first target which I had, which was around 560 a few days back. But I think after that pullback in the last few days, it's picked up again. So it should get past the highs of 560 and head towards 580, 585.
Okay, well, the space that everyone is focusing on is IT, because come Thursday, we will have the first of the IT numbers in terms of earnings, right, on our screen. So Reema's here to tell us why you should keep them on your radar. Reema, over to you.
Thanks so much for that. So today, I'm not talking about the IT services company, but more the engineering and R&D companies, because Bernstein has expanded their coverage by adding engineering services companies like Persistent, KPIT, Coforge, and Tata Elxsi. They have an outperform rating on Persistent and KPIT. On Coforge, it's a market rating, neutral. Though on Tata Elxsi, they have an underperform rating. So on Persistent, they're saying that, this is a company which works with global giants like Microsoft, Salesforce. They've shown growth leadership with more than a 20% top-line growth and margin expansion, which is why Bernstein has an overweight rating and a target price of 5,920. On KPIT Tech, they're saying that this company, since its IPO in 2019, has seen a growth of 50% CAGR. It's a dominant player in auto services across electrification, ADAS, and electronics. They've serviced large OEMs like BMW, General Motors, Cummins. On Tata Elxsi, though, they have an underperformed call because they're saying the company, compared to peers, has delivered the slowest growth for the last 5 years. Revenue concentration is a risk. The top 5 clients account for 44% of the revenues, and the stock is expensive at 50 times. So Bernstein call is outperform on Persistent KPIT, neutral or market rating on Coforge, underperform on Tata Elxsi. But that said, Citi has a contra call coming in on persistence. So they've opened a 30-day catalyst watch with a sell call. They're saying, one, the stock has outperformed the Nifty IT in the last 1 month by nearly 17%. Yes, Q1 will be strong, but there will be a decline in margins. The outperformance that we've seen factors in, the outperformance factors in a strong growth, and the valuations today are expensive. So Citi has a 30-day catalyst watch on persistent with a sell call. Back to you.
All right, Prima, thanks very much for that. What are the standout brokerage notes? Nimish is standing by with that. Nimish, morning.
Hi, morning, Prashant. Today's standout is on Dr. Lal PathLabs. Interestingly, ahead of the Q1 earnings, UBS has gone ahead and raised the target price on the stock to 3,500 versus 2,900 earlier. They have a buy rating on the stock in which ways. They believe that the market concerns of lower patients volume growth, which was minus 1.5% in FY23 and just 2.6% in FY24. Those concerns are likely to fade as the company is likely to report 6 to 7% patients growth going forward. In fact, the faster growth in tier 3 cities means that they're gaining market share and they can go deeper. In fact, further they add that improving profitability is likely to flow back into the growth for the company. So that's the reason why they've raised the earnings estimate for FY25 and FY26 by 6 to 7%, and hence they've raised the target price as well now to 3,500 versus 2,900 earlier on Dr. Lal PathLabs.
Nimish, thanks very much for that. Just two more names. If you can pull up CESE, there seems to be a tariff adjustment which has taken place for CESE. So we'll see what the the pre-open is for that one, and maybe look at something like a Maruti as well, where there are reports which indicate that the Uttar Pradesh government has waived off registration for hybrid vehicles. Maruti, of course, is pretty big in hybrid vehicles, so we'll look at those two names as well as we start. Nifty is starting about 20 points higher. 24,335 is where the Nifty is at. It's a flattish to slightly higher start. The Nifty Bank is up 50 points, 70 now, so picking up a little bit of pace. 52,500 on the Nifty Bank. Mid cap index is up about 335, and I think you've got the small cap index, which is also starting higher. So this is a better start, at least on the frontline indices, as compared to what you had over the last two trading sessions now. So those are indices, but as always, let's get to stocks.
Okay, get into individual stocks, right? Godrej Consumer really is the one to look at. It's a flattish sales growth and double-digit EBITDA growth that Godrej Consumer has seen, so the stock is also flat. MGL has hiked CNG prices by 1.5 rupees a kilo. So, that stock is up almost 3% right now. They've hiked PNG prices as well. Nestle, the shareholders have approved an unchanged royalty payment of 4.5% to the parent company. So Nestle is in the news. Utkarsh Small Finance Bank, the RBI has approved Govind Singh's reappointment as the MD and CEO for 3 years. So Utkarsh Small Finance Bank is up almost 1%. Inox Wind has bagged a 200 megawatt order for its latest wind turbine generator. Pitti Engineering has launched a 360 crore QIP with the floor price at 1,054. So keep an eye out on that. On the downside, Concor has seen its domestic volume growth of 15% and EXIM growth at 3.3% in Q1. Jupiter Wagons has launched at 800 crore QIP, so with the indicative price of 655 rupees, so keep an eye out on that. And a couple of others like Polyplex, the production at its manufacturing plant in Uttarakhand was suspended because of the rainfall. So Polyplex could be slightly soft, but not too much actually. But it's good to see the market really picking up pace. Sensex holding well above 80,100. And the Nifty now, look at that, 40 points higher. Good start in the green.
Well, that's right. Good start in the green. We'll keep an eye out on the 24,440 odd mark. That seems to be a bit of resistance zone. That's on the headline index. But a few stocks that are moving around from the broader markets. LT Foods and KRBL, I don't know what's happened there. But both those two stocks, they're some of the biggest gainers and the volumes are rather large. So we'll try to, pull in one of these managements. Pull up KRBL as well, LT Foods as well as KRBL. Massive move is what we're seeing on both those two stocks. HPL Power, well, there was an analyst meet. They earlier were guiding for around 2,300 crores of revenues. They've cut it by closer on 200 crores. Now they're talking about 2,100 crores. So that explains why that stock is down by closer on 2.5%. They say they'll hold on to margins of around 19% though. Affle India. Citi has initiated coverage, buy rating, target price at 1,600 rupees. They believe that the company is positively leveraged to digital ad spends. So that's why they have this big target price out there, and that stock is up close to around 6%. Swan Energy, we saw a large trade that took place yesterday. BlackRock Global Funds India as well as BlackRock Emerging Frontiers Master Fund, together they had acquired close to 1.3% stake in the company. So that's why, in fact, BlackRock making an entry out there. The street likes it, was up 5%, is up 5% today. Patel Engineering, that's another stock that's bouncing back today. Yesterday it was down close to 10%. Today it's mildly in the green with a gain of close to around 3% odd. A couple of other notable movers, well, you have Crompton that's up close to 3%. It's a good start for Crompton. And RCF that was up close to 10% yesterday. I think the start was well in the green on that one as well. Prashant?
3.5% on RCF to start with, so 235 on that one. We're up 40 points now, so it's looking good with the index at about 24,365 and lots of movers. Well, guess what? The 2 or 3 top volume-led gainers are all a repeat of what we saw yesterday. RVNL, IRFC, RCF, NFL. I mean, throw in a Cochin Shipyard, which took a break yesterday. It's up back up about 2.5%. So yeah, I mean, that space is doing well. GE Shipping went up 6% yesterday by close. It's up another 4% this morning. I think we mentioned Affle. Well, Cochin I mentioned, but look at Garden Reach as well. So 2% on Garden Reach, starting higher. There is Inox Wind, which is up about 5%, 165 on Inox Wind. KPIT Tech is up about 3%. Torrent Power is up 5%. Maybe we could look at, by the way, Maruti is up about 3%. I think the trigger is the fact that Uttar Pradesh essentially has waived off registration fees for hybrid vehicles. And I think UP is about 10% of Maruti's volumes. So it is definitely at the margin a positive for Maruti. So that's a big mover. And look at CESC as well, which I was talking about. There is a tariff revision which has taken place, a tariff adjustment rather, higher, and the stock starting about 3% up. I mean, as compared to some of the other power utilities, it trades at a significant discount. So keep an eye out on that one as well. Apart from that, I mean, volumes thin out. As you go down the list, volumes thin out. But just to spot one or two names, Paytm, which had a big 10% surge yesterday, is pulling back 3%. And I think Jupiter Wagons, we were highlighting that in the morning, 3% lower. BEML is down about 1.7%, but these are all reversals after yesterday's sharp surge. Shakti Pumps was down about 5% yesterday, and this morning it is down about 4% or so as well. So this is, overall what you have going on. We have Anand Shah, who's joining us now, head of PMS and AIF Investments at ICICI Prudential Asset Management Company. Anand, good to have you with us here. Thank you very much for your time. Is the view broadly at the the AMC and the alternatives desks largely similar, Anand, or is there a divergence? The reason I'm asking is because we've been speaking with the AMC team, and I've spoken to them recently, etc. as well, and generally, the view is a little cautious because of the run-up that we've had, especially small caps, mid caps, and preferences now to sort of rotate into some of the larger caps. Where do you stand, Anand? Let's just begin there. We, by the way, recently had an instance of a mutual fund which had stopped inflows into a small cap scheme for a couple of months, which restarted it. I mean, just a testament to the fact that the market just has rallied on and money is coming in. Your thoughts, Anand?
Hi, very good morning. Pleasure to be here on CNBC. Thank you. I think the risks are increasing. I think there's no doubt in anybody's mind that liquidity is, drawing into markets in general. Having said that, large caps do have a counter weight of FIs selling, and to that extent, the valuations and the sharpness with which the large caps have moved have been far more muted than what's happened in the mid and small. And within mid and small caps, there are umpteen number of examples where we can actually now see the valuations are just beyond what can be explained through fundamentals. So no doubt in my mind, or for that matter in anybody's mind in our asset management company, that risks are ever increasing with every such bout of liquidity flowing into the equity markets in general, and mid caps and small caps in particular.
Okay. By the way, Affle is one stock that's really gaining ground now. I think it's up 4% right now. Citi has initiated a buy on Affle with a target price of 1600 on the stock, which is a big upside to the current market price. They talk about mobile ad budgets, which are picking up quite a bit across the industry and across businesses that are digital first, businesses that have omni channels, etc. So that will benefit Affle in a big way. Just wanted to point out that stock. Anand, hi, good morning. The big event is the budget, right? I know we talk about it a lot and, because, that's our job pretty much to analyze it threadbare. But from an investor standpoint, is there anything that this budget can bring about which could sort of change track for the market?
I've been saying this, that the budgets over time have been more consistent. And to that extent, the incremental surprises that come out of budgets have only decreased. And we believe there is more continuity of policies, more continuity of governance, or the direction of the economy would not change or alter significantly. Albeit, yes, we are looking at a couple of things which particularly for middle class, we can have some bit of simplification of the tax. Definitely that's one of that. And that also means that you might see a lower tax rate to support the weakness that we have been seeing in the consumption at the bottom of the pyramid. So I think there will be some bit, but on a broader level, I don't see the investments on infrastructure, the investments or the PLI benefits coming into further induce manufacturing, support the housing. I think this would be the pillars. Urban infrastructure, supporting housing, and supporting manufacturing, because all these three has a lot of potential to create jobs at the bottom of the pyramid. Because once we are able to sustainably do that, do more urbanization, then the consumption will anyways pick up. So I'm not too worried about consumption as long as we continue to invest in these three segments of the market which are generating jobs.
Hi Anand, good morning. And a couple of notes believe that the central government has enough ammunition to please all. So let's hope that is the case. We'll know in the next couple of weeks or so. Well, a sector that's gone quiet actually in the last 1 month or so is the steel, the ferrous space. Steel, stainless steel. There's a lot of buoyancy and suddenly the talk has gone quiet and maybe monsoons, a bit of a slowdown in China as well. Now you have some holding, I think you'll have Tata Steel in there. You'll have a couple of those smaller players as well, the tier 2, so to call it, Godavari Power and Ispat, Sarda as well, and Jindal Stainless. What is your view on this space? You'll have got in at the right time, but now what's your view? Do you believe that what you're expecting is coming to play, or do you think some of these stocks have run ahead of themselves?
So if you see broadly, we are both positive on both ferrous as well as non-ferrous, but it's not, we all understand it's cyclical, and to that extent, there will be bouts of performance and underperformance. The way we are looking at differently this time is we want to be investors here. And when I'm saying we want to be investors, what I meant is we want to stay and give a lot of time to this sector and these companies because we're seeing something externally changing. As China becomes more prosperous, so China is the largest consumer of metals as well as the largest producer and the largest exporter of metal in general, particularly steel. And as it becomes more prosperous, it will have to decarbonize its steel making. That's happening as we speak in Europe, Japan, Korea. It would happen in China also, slowly but steadily it will happen, which means the cost of producing steel in China should structurally go up over the next 3 to 4 years. And China being the largest net exporter of steel in the world, that means that globally the steel price should be, and applies to many other metals. And to that extent, that's a broad thinking that we have, that as China becomes more prosperous, many of these industries where there is significant pollution clamp down or decarbonization of steel making or the metals manufacturing happens, structurally the metal price should move up over a 3 to 4 years.
Anand, I also wanted to understand, from you about the entire consumption space, because if this is a budget where you have some sops for the middle class, lower middle class, then there is a narrative that a lot of the consumption pockets could do well, whether it's retail, names like Trent, etc., whether it's telecom, names like Bharti, whether it is, e-commerce, names like Zomato. But these are stocks that have already rallied quite a bit. So from a consumption angle, how do you play the budget now?
So I think it's a most tricky one. Consumption is everybody's favorite, especially pre-2020. If you see, a large part of the rally was only in B2C stocks. So I keep on telling people that consumption is never a problem in this country. We have favorable demographics, rising per capita income. All segments of the consumption will do well. Some will do 5%, some will do 12%, some will do 20%. But consumption in India is generally a structural story, which also makes it more challenging for stock picking because none of the consumption stocks generally will find it very cheap. They're always expensive, given that you have a strong history as well as good future to look forward to. And to that extent, one will have to go bottom up. Within consumption, what we like and what we've been overweight is the services part of the consumption. We spoke about telecom, airlines, travel, leisure, hospitals. Those are the areas. Education, we don't have too much listed space out there, but these are the areas where the upper middle class and the rich will spend incrementally more. The products consumption, we have had the penetration. Services consumption, where we can see actually more penetration and faster growth than the consumer products companies.
Got that. The flash at the bottom of the screen, CESC, which we mentioned yesterday, there is a tariff adjustment higher which has taken place, which amounts to a hike, and it should be good to cover companies' incremental fuel costs according to IIFL as they are putting it out. So almost 4% gain on CESC this morning. The other one, of course, is Maruti, which is still up, which is up 4% now. So about 12,486 on Maruti coming through there. Anand, just talk about real estate and what you own there. Do you think, there is a large element of the price appreciation has been so large, right? That there is a lot of investor activity as well now. I was talking to a real estate consultancy and they were saying that it could be upwards of, in some markets like, for example, Gurgaon, etc., investor activity could account for 50-60% of a project sales. There are end buyers, so that is there. It's not as if, it's all just sort of trading ownership papers, but there is a lot of investor activity now, and that's essentially what's led to this ramp up in prices very, very fast. Just your thoughts, and is that a risk as you see it, Anand?
Indeed. That's the bad news, if you ask me personally, because as I said, infrastructure investment, urban infrastructure investment, housing, and especially the households' investment in housing and manufacturing picking up, all these three are extremely important for the ultimate goal of urbanizing the country. So we have 65% of population in rural India, 35% of population in urban India. If you want to reverse that, and that's the way forward for India to go to 5 trillion to 10 trillion, I think we need all these three. And yes, this is a challenge. And that's why we need to do enormous investments in infrastructure so that the cities expand. And in the same breath, the builders actually can go out, acquire land, and build more out beyond the city centers where the price would invariably appreciate as the demand supply catches up or the demand outstrips the supply in that already developed area. So I think that's one big challenge. But we have examples like Ahmedabad, to some extent Hyderabad, where cities have expanded and the real estate prices have remained soft, relatively soft, and within the reach of the middle class and the households. I think that's very important. So that's where I continue to repeat that we need to continue to invest in the urban infrastructure, keep the real estate prices low, and that's very important. But I think what you're talking about, Gurgaon, to me is more of a exception than norm. As we track And you have to also see the appreciation is after 7 to 8 years of a soft real estate prices. So yeah, some bit of recovery in the real estate prices is given, but barring Gurgaon, I think the prices are not really shot up to worry as we speak.
Okay, Anand, thanks a lot for joining in, and all the best. We'll of course touch base with you again post the budget, but until then, stay safe and thanks for joining in. By the way, there's some news on CSC. The company has hiked tariffs. Vivek is here to give us more details on that. Tariffs have been upped by almost 6%. That's important information. Vivek, what are you picking up?
Well, that's right. So what's actually happened is that CSC, which basically operates as far as West Bengal is concerned, this is for the Kolkata circle that we are talking about. The company for a long period of time was actually grappling with much higher costs, and this is something they were unable to recover. The company has had, two major asks as far as, increasing tariffs were concerned. Number one was actually increasing the power tariffs, and number two was trying to go ahead and recover the incremental variable costs that they were facing. So now, as far as the month of June is concerned, we've analyzed the bills. What's actually happened is that the company, since June, has started to levy a fuel adjustment charge to its consumers. What is the quantum of this fuel adjustment charge? It is 40 paise per unit, which effectively means that the tariff for the month of June has been hiked by 5.7%. IIFL, in a sales note, has actually gone ahead and mentioned and given, what will be the impact. Number one, they are saying this should be able to cover CSE's incremental fuel costs and ensure complete cost recovery. Also, they are saying the accumulated regulated assets stay at 3,000 crore to 3,500 crore and will be recovered gradually along with the regulatory approval. They are saying from the stock's perspective, it is a significant development. Remember, the stock trades at a steep discount to Torrent Power, Tata Power as well as Adani Power, and this particular development can help the company's valuation go ahead and get narrowed down to its peer set. So significant development as far as CSE is concerned, not a tariff hike, but a fuel adjustment charge to help recover the cost that the company has been incurring.
All right, thanks a lot for that. Vivek explains why the stock opened up, gap up, and it's holding on to those gains of around 5.5%, holding on to those gains strong and massive volumes on that counter. Well, let's turn our attention to KIMS. The hospital major recently entered into a lease agreement for a super specialty hospital in Bengaluru. It also entered into an agreement for taking land on a 99-year lease for a new hospital in Thane. That was for around 500 crore rupees. To discuss this, how the occupancy trends, expansion plans, and what do they expect from the upcoming budget? Well, we have with us Dr. Bhaskara Rao, the CMD of KIMS, who joins us on the show. Hi, Dr. Rao. Good morning, and thanks a lot for joining in. Well, take us through the first piece of news, the lease you have gotten into with the super specialty, for the super specialty hospital in Bengaluru. Could you give us the timelines? What is the potential revenues from this particular hospital?
The one which we have taken in Pest on a long lease, yes. We are about to start by the third to fourth quarter of this year. And almost it will be done by next 6 months. And we are very happy that we are getting on a lease and a revenue share model with a asset-light model. So we have a good track on the doctors who are showing interest to join into our group. With that, I think we will be doing very well as we anticipated. And there is a lot more gap in that micro market. So we hope we will definitely do very well.
You want to give us any numbers, potential revenue, sir?
So it will be definitely, it's very early to stage once we start and the type of consultants which we are going to do. Maybe what we are looking is in the first year, less than a year, we will be break even in our financials are concerned. Both EBITDA zero or maybe EBITDA positive. May not require a good heavy loss funding in the first year itself. That's what our aim.
Right. No, this is, so Mr. Rao, hi, morning, Prashant here.
Yeah,
so you were also working on new hospitals. I mean, there was a 400-bed hospital in Bangalore, which this is different, right? I mean, the one that you're talking about now.
Yes, there is two. One is in the Electronic City, which I was talking to about this there is a education institution. They started a medical college. In that, we have about 400 beds, a super specialty block we have taken on a revenue share basis. With that, because it is becoming an asset-light model, and we are very, very confident that we can able to deliver what we are anticipating. And as I mentioned, that in the first year itself will be a bit positive. Second one, we are starting in Mahadevapuram, that is in Soul Space, which we have taken a building, and that is also going to commence from first of last quarter of this financial year. And we are very, very confident that that is also going to do very well, because the consultants are showing a lot more interest in this group, and the doctors' participation in the asset also will give them a good incentive basis to join and stay back and feel that is their own hospital. So with that, both the units in Bangalore, we are very, very confident that in the first year itself we will be break even.
So by the end of this year, what will be the total bed capacity, sir, across the company?
So as of now, the 3,000, maybe another 1,500 beds we are going to add. 400 in Soul Space and 400 in PES, and another 300 in Nasik. Maybe another 400 is coming in Bombay. These are all the things. Maybe nearly 1,500 to 2,000 will come into the new on the existing beds.
So 400 beds in Bombay, you said. Any more capex that you have planned in Mumbai? I mean, this is
that is
a lot
in
of
Thane. Thane, actually, we already put the capex. Most probably by January, February of next year, we are going to start commencing that unit. With that, even though we have this is the full capacity of 400 beds in each facility, initially we may be opening about 200 beds and 150 beds. In a 1 year, 2 year period, the entire 400 beds will come into occupancy.
Okay. Apart from Thane, anything in the main Mumbai area, because a lot of your peers are entering into this space as well.
As of now, we are looking into Thane only. Once because everybody is will be very cautious to get into 2-3 hospitals in Bombay without showing a good progress in Thane. We may not be able to go. We are looking at opportunities, but we are evaluating those things. But once we are confident that Bombay market, what we expected, if we can able to deliver in Thane, definitely we look for another 2-3 places in Bombay.
Okay, and this 300 beds, sure. Sir, you spoke about 300 beds in Nasik that you're adding, right? That happens when? In this quarter, or are you looking at the timeline over the next few quarters?
No, we are going to start by end of this month or maybe first week of July, August. Commencing, all the doctors are on board and everything is fine, just waiting for some statutory things once it comes, we are on the job.
And this 1,500 to 2,000 beds that you will be adding, say, in the next 18 months, right, or so, what does it take your total bed capacity to?
It will go around nearly, total bed capacity will be around 5,500, but the operational beds will be around 3,000 or 4,000.
Got it. All right. 5,500 operational beds at around 4,000. In the past quarter, Dr. Rao, you had a couple of issues, with regard to the occupancy. You all were doing some kind of activity at one of your hospitals, which explains why the occupancies did come down. Has it got back up, and what should be the average for this year you're looking at? And also on margins, I think there was a one-time 10-12 crore hit that we saw in the past quarter. So what is the steady state margins we should be working with on both these two, occupancies as well as margins?
See, last time the occupancy of the last quarter is one of the facility which we are shifting. That's why there's a little bit delay, and also the operational efficiency has improved. The A loss has come down. In turn, the average revenue per patient has been increased. With that, I think the occupancy rate has come down. Otherwise, everything is fine. And then the elections and the rainfall in Andhra which disturbed a little bit. I think right now, the whatever is the one-time expenditure, because all these things we are recruiting people in the management and all, we are putting on to Kim's main listed company. Now we have been segregated and all those things, so that will be able to take that rearrangements of these financials, and this definitely the occupancy and the financials and the cost cuttings have been achieved in this quarter. This quarter will be much better than previous quarter.
And this year perhaps, so for the year, that's FY25, EBITDA operating profit should grow between 15-20% for the full year?
15-20%, yeah, definitely it will go up to 15%. That because we are also adding few more hospitals, which may not be able to generate any EBITDA.
Right.
But the top lines will be better.
Okay.
Like Nasik.
Of course. What about price increases, sir? I mean, I don't think you've taken any price increases over the last couple of years. Are we to expect one, this year in 25?
We are very, very cautious about on the price increase, because we will try to achieve adding new therapies and as well as the volume base. And certain areas, this time we are going to increase price hike, and we'll keep on not in a full length for all the areas. We don't increase the price. Where we see in the market there is a lot more gap, that we'll be able to increase a little bit. Still, we want to keep little lower than our peers in the market.
No, I take that point, but for the cash portion,
we have been increasing on certain areas.
Okay,
this year.
So right. So could you tell us on a overall basis on the cash side, what is the price increase amount to on an overall basis?
See, it will increase about 2 to 3% on the cash and insurance prices concerned.
Just the cash side, sir? What will be the increase?
2 to 3% of the top line.
Okay, all right. When is the last hike that you took, sir? What was the last hike?
2.5 years back.
2.5 years back. Okay, got it. We'll leave it there. Thank you very much, sir. Appreciate you joining us, and good speaking with you here on CNBC TV18. Good luck. We'll take a quick commercial break here. We'll come back. We'll be joined by Ashish Modani of ICRA and Ankita Shah of Elara Capital. We put the focus on the infrastructure sector. What to expect out of the budget on the 23rd? That's the question. Stay tuned.
Welcome back. Well, the final budget for 2024-25 will be presented on July 23rd. To decode what are the key expectations from the infra space, we have with us Ashish Modani, Senior Vice President and Co-Group Head Corporate Ratings at ICRA, as well as Ankita Shah of Elara Capital. Thanks a lot for joining in, lady as well as gentlemen. Well, Ankita, I want to come across to you first. Before we get to the expectations on the budget, you track Concord, and those numbers look a little bit disappointing. That was one of the top losers on the downside. A quick comment on that. How disappointing were the numbers and what are you working with for this year?
Yeah, so Concor reported 3% growth on the EXIM side and 15% growth on the domestic front. Now, this is lower than the management guidance expectations that were set. They were targeting at 25% growth on the domestic side and 15% growth on the EXIM. We see overall port volume growth also being muted for the quarter gone by. Even if you look at container volume numbers of Pipavav, and for Adani ports also has been muted. So I think that has had an impact on the EXIM numbers of Concor. But we believe this could pick up in the second half of the year, given that GNPT is expected to get connected in the second half of the year. And Concor could be a beneficiary because they have nearly 70% market share at GNPT. And there the rail coefficient is low at 18%. And post the DFC getting connected, the expectation is that the rail coefficient will jump double to 30%. So obviously the larger market share beneficiary that is Concor will definitely benefit out of it. So I think the growth will pick up from second half.
Okay, all right. So past quarter was disappointing, but you're saying that going ahead, you have various triggers in place where things will improve. All right, so that's about Concor. Let's focus on the infra space then. Hi, Ashish. Good morning and good to see you in. Ashish, I wanted to ask you about the railway space. You know, from a stock market perspective, a lot of stocks have been doing well, anticipating better times. From a stock price point of view, maybe majority of the good news is in the price. But in the near term, the budget is going to be important. So give us a few numbers that we should be tracking in terms of railway budgets. You know, what were they? How do you expect them to pan out?
If you look at the last interim budget, the overall hike that was there, that was pretty modest. But if you look at it in isolation, it looks modest. But if you compare it with the FY22 level, last FY23, it was a bumper hike, around almost 50% plus. So if you look at it in the totality over the last few years, the share of not only railways and roads, both of the segments has increased substantially. And given the focus of government to reduce the logistics cost and ease of doing business, there is a lot of impetus on the railway as well as on the road segment. So all the entities in this two specific space, or transportation space, are expected to do reasonably better than the other segments over the next 2 to 3 years. And what we are also expecting is regarding the freight related thing, with DFCC now becoming fully operational. So a lot of activities are happening now. The government is also talking about multiple other dedicated freight corridor while still in the progress, and it will take some time for them to capitalize. But in the interim, what we are expecting in the railway pies is on the wagon space. Wagon players are sitting on a very strong order book, and they are expected to do very strong in the next 2 to 3 years.
Okay, morning both of you. Ankita, now, you know, so at the margin, right, and markets, of course, move on incremental news flow. At the margin, expectation is that because over the last 4 or 5 years, spends on infra has been so strong, and now there is a bit of a change in terms of government. Maybe it'll be a little different. It won't be business as usual, etc. Actually, even in the interim budget, if you saw allocations, if you looked at specific sectors like roads, etc., the growth was very, very moderate. That is FY25 BE. Do you expect anything different when we get the full, full budget, specific infrastructure sector allocations, or do you think they'll be around or in line with what we saw in the interim budget, which was moderate increases and sharply lower growth as compared to 24 over 23 or 23 over 22?
So we expect the growth could be higher than what was put out in the interim budget. Reason being, the government has had very robust tax collections plus, dividend from RBI. So, there could be a midway between, fiscal consolidation and the capex push that the government will go ahead with. So we believe, there could be a uptick in the the capex numbers that were announced in the interim budget, because we need a clear roadmap for our economy to become the third largest and USD $5 trillion economy. So for that we need the required capex push, not just in roads but railways, airports, urban infrastructure, energy sector, and along with it sustainable development infrastructure. So I think there will be new sectors.
Okay. And do you think stocks need a higher allocation because stocks have done well across these sectors, right? So if budget has to be a trigger, the absolute allocation has to be higher than the interim budget for each of these sectors? I mean, for stocks to do well from here?
I think stocks are already pricing in the expectation of a growth, and that is why, despite order inflows not being very strong in the FY24 like previous year, because of the elections and model code of conduct and those things, but already the market has started discounting on the expectations of higher order inflows going forward. So I think that should now flow down into numbers and actual inflows coming through for companies. So I think there will be earnings upgrades that will be coming in now. I think the PE re-rating has already started.
Okay, all right. Interesting. PE re-rating done, but now earnings upgrades is something that we look forward to. Ankita, any numbers you're working with that we should be looking forward to in the budget?
In terms of
allocation, in terms of allocations, budgetary announcements that you are working with, that you have already penciled in. So then we have, a reference point when those numbers do officially come out.
No, we do not have exact, numbers put out, but we expect it to be higher than what it was announced during the interim budget.
All right. Any percentage, how much higher, or you have not yet worked on that?
No, we've not put out on those numbers.
All right, Ashish, I want you to come in then. If in case we need to be tracking a couple of crucial announcements, which would be your top 1-2 pointers that you're looking forward to in this budget, and what could it mean for the industry?
See, our house view is that ICRA, we are expecting that overall capital outlay will remain more or less at a similar level what was highlighted in the interim budget. Because if you look at April and May, it was already down by almost 14% year on year, that 2 months combined. So, and monsoon, that Q2 is generally a lean quarter. So a strong ramp up is required in Q3 and Q4 to even meet the interim budget estimates. So we are not expecting a meaningful change in the capital outlay, but there is around almost 70,000 crore buffer that is allocated in the new schemes, which can be reallocated between various ministries. So that is something that we really need to watch out for, how this 70,000 crore will get allocated. Because if you look at the delta from FY24 to FY25 budgetary estimate, out of 1.6 trillion rupees, 0.7 is coming from this new scheme itself. So how that will get reallocated, that is something we want to see. But we are not expecting a material change in the overall capital outlay at ICRA.
Okay, all right. Ankita as well as Ashish, thanks a lot for joining in and filling us in with your expectations with regard to the budget. We look forward to touching base with you all and see how, what the announcements come and what were you all expecting, what's the deviation out there. But for the time being, thanks a lot for joining in. Well, the markets are holding well in the green and we have earnings. That's the big trigger going ahead. So it's time for our special segment, Quarter Se Quarter Tak, where we bring you the key expectations from each sector. Today, Mangalam joining us to tell us what are the key expectations from the FMCG pack. Over to you, Mangalam.
Well, the way the stocks are moving and the way, things are happening in the FMCG pack right now, after a spate of poor results, this time around the street actually anticipates a gradual uptick, especially in demand conditions for rural demand. That has picked up due to contained inflation, many months of contained inflation now. More importantly, going forward, the outlook is as well good, thanks to predictions of a normal monsoon, higher minimum support prices, and also consumption incentives that are expected this time around ahead of the budget as well. But remember, this was also the quarter where we had, the elections, etc. So sectors such as paints and building materials labor-intensive sectors could be impacted by the elections and the ongoing heat wave. But on the other hand, we would see a demand pickup for names, categories like cooling oils, soft drinks, talcum powder, ice creams, etc. What we know from the updates so far is that consumer staples have seen gradual recovery. Dabur said the India business is likely to record mid-single-digit growth. Marico saw modest uptick in domestic business as well. Both of them together saw operating performance, improve over last year and faster than revenues. So that meant margin, expansion as well. And we also got Godrej Consumers numbers saying that there was high single-digit organic volume growth and double-digit EBITDA growth in India as well. For retail, there are signs of recovery. Both D-Mart as well as V-Mart reported mid-teens, slightly higher than mid-teen sort of growth. 18% for D-Mart and V-Mart 16%, implying positive same-store sales growth as well. And finally, we had updates coming in from the jewelry sector, which was very interesting because we had Titan, which saw a growth of 8%. Kalyan saw a growth of 29% and Senco retail sales were up 11% as well, telling you that the larger player out here has slowed down when it comes to growth. In the personal care and beauty segment, Nykaa's consolidated revenue expected to grow 22 to 23% this year, led by beauty revenue itself, which is growing 22-23%. The fashion industry, however, continues to face challenges, and that's exactly what's going to reflect in their numbers as well. What are we expecting in terms of revenue growth and margin changes for key companies? Tata Consumer is likely to be the pick of the pack with a 15 to 16% revenue growth, margin improvement as well, middling sort of revenue growth for Britannia and ITC. Nestle is likely to show growth of almost 8 to 9% on the top line, with Hindustan Unilever and Asian Paints actually being laggards for the FMCG space. We have Asian Paints where the revenues may decline by about 2% as well, with Hindustan Unilever about 1 to 2% growth in the revenues. The likely outperformers this quarter, and the ones that I'm clearly keeping an eye out on, have to be names like Varun Beverages, benefiting from the strong heat wave, United Breweries as well, improved margins. Imami is the other one. We have brokerage upgrades coming in as well, and there has been noticeable uptick in consumer sentiment, so names like Honasa and Jubilant Foodworks really stand out as well. And finally, with the up move that we've seen recently, the valuations for FMCG space, they've never been cheap, but this time around, we have seen some moderation as well. So for names like Nestle, Tata Consumer and Godrej Consumer, these stocks have been outperforming. Valuations are between 60 to 71 times. But for Marico, Dabur, Hindustan Unilever actually is now at a level which is what it was trading at, say, for a 5 to 10 year average as well at 54 times. So that's all about the FMCG space this quarter.
Okay, thanks a lot for that. Very helpful there. An uptick in demand is expected given that, things are picking up across the rural areas and the expectation is of a good monsoon as well. Abneesh Roy, Executive Director at Nuvama Institutional Equities, is with us. Abneesh, hi, good morning. That was a pretty exhaustive, report that Mangalam put out on the expectations there. But if you had to pick and choose, which are the stars of the earnings season this time around? Which companies could be the stars this time around?
Sure, thanks. Yes, the updates in the FMCG 4 have come and in the retail around 5 have come. In the FMCG space, the volume growth, etc., sales growth and margins all are in line with our published numbers of Q1 preview. But in the jewelry space, clearly Titan has disappointed Street. We had downgraded Titan stock a few months back and we see slightly more pressure there. So clearly, studded has also grown slower for Titan, so the margins will be under pressure. Coming to FMCG, yes, the results are decent given the heat wave, lack of marriage days, elections impacting liquidity and definitely manpower also in few sectors. I think the results updates are decent, but the sector is benefiting because of sector rotation from the investors. If you see the kind of up move we have seen in the sector, in the stocks in the last 1 month, 2 months, I would say that we had already called that out, but good to see that before actual full recovery, we are seeing a lot of the stocks show that. In terms of Q1, definitely we expect that there will be few companies which will see very strong numbers. So clearly Varun Beverages, Imami, Godrej Consumer, Marico, Dabur, etc. all have seen decent number. Even Adani Wilmar is seeing good recovery. So we expect Adani Wilmar next 1 year should be very strong, good volume growth and pricing also coming back. But from the bigger companies of the sector like HUL, ITC, Asian Paints, we expect a weak performance in Q1. But in those stocks, the valuation comfort is high. So if any investor wants to play the consumption revival, but is willing to wait for the Q1 week numbers of these three companies, I think post the results, it's a very good time to accumulate HUL, ITC, Asian Paints also, but from a one-year perspective. But from a near-term perspective, our topics will be essentially companies which are doing well in the near term. So Varun Beverages, Imami, Britannia, Godrej Consumer. We also like Nestle and Bikaji in that. But United Breweries will be impacted negatively in Q1 because of the election-related impact. So there are slightly weak numbers there.
Okay, all right, Abneesh, thanks a lot for joining in, and good call on Titan. And you're saying you continue to remain negative. The stock has seen a lot of pressure. What's the target price you have on Titan? And I think on the flip side, Imami, y'all were one of the first to call out, I think, that things are turning for them, and y'all were quite positive. What is the target price out there? That's been a big mover, Imami.
Yes, Imami, we expect that in Q1, you will see close to double-digit sales growth and strong volume growth in most parts of the business, except Kesh King and in their Fair and Handsome portfolio. Those two will see a YOY dip, but rest of the portfolio will be very strong for Imami. Even HPC will be strong. And we expect that in the coming 3 quarters also, because Imami has almost half of the business, India business from rural, we expect double-digit sales growth and double-digit EBITDA growth to continue for Imami. So we remain positive. The stock has moved up very sharply in the last 1.5 months. So we will be looking to upgrade our target price when the next note comes. But we see that 15-20% kind of upside from here also is possible in Imami. Because still, if you see, even after this up move, the stock remains relatively cheap in spite of a double-digit kind of a sales growth and EBITDA growth coming back to the business. International is also doing well for Imami. On Titan, we see that, yes, even Q2, we see weak numbers. So Q2, if you see, base margins are quite strong. Yes, marriage days, there will be some recovery. But in terms of overall sales momentum, we see Kalyan growing faster given the franchisee addition is very strong. So we remain underweight on Titan. Our sense is, although stock has corrected meaningfully, next 3 months, there is a lack of trigger. I think H2 is the time where the marriage days and a lot of the gold pricing impact, etc., will be behind. But concern on lab-grown diamond remains, as of now, that remains a monitorable. So we see that from here, maybe the stock correction on absolute basis is limited, but time correction is possible. But from a one-year perspective, after Q2, I think the stock can give 10 to 12% return, but Q2 results will also be weak for Titan in our view.
Got it. One of the top ideas I think you have, which you have sounded positive on, was Godrej Consumer. They came out with their quarterly update, and I didn't see any big problem out there, but maybe the stock ran up in anticipation. It's currently down more than 2%. You continue to remain positive out there, and what was your analysis of the operational performance?
Yes, Godrej Consumer stock had run up. You're absolutely right. The update was exactly in line with our expectation. So yes, what are the weaker points of the results? Because there are a lot of strong points in the numbers. I think in Africa, the double-digit volume dip is a proactive step by the company, because they are looking at a profitable business in the Western Africa, where they have taken proactive steps to cull the loss-making businesses or low-margin business. That's a proactive step. We expect Africa business to come back to low single-digit volume growth from Q2. I think that was a slight negative. The other negative we had already called out in the preview, that house mosquito repellent business in Q1 will be flat on YOY basis because of the heat wave. We expect that a disruptive launch in mosquito repellent will happen very soon, and that will be a key monitorable for the stock. If it does well, we can have a double-digit growth in mosquito repellent visibility from next quarter. But if it does not do well, then I think the stock would correct a bit. But it remains a strong top-tier performance in this quarter. Also, Q1 was a strong performance in most of the key parameters.
Okay, thanks a lot for that. Well, that is what you can expect from the FMCG space. Let's slip into a quick break. On the other side, we'll put focus on the commodity space with Manisha Gupta. Stay tuned.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back to Bazaar Morning Call. Well, for now, Mitesh Thakkar is joining us to give us an indication of which way things are headed. Mitesh, hi, good morning. What are the stocks you're looking at? And overall for the market, very quiet.
Sonia, the market view remains the same, very range-bound and compressing kind of a movement. Though the Nifty is mildly positive, the Bank Nifty is very flat. So I think this is what I expect next few days. And on the stock side, I think Maruti after a long time has turned positive. Today it opened with a gap up and then it's seen follow through. So they should head towards highs of 12,950, 13,000, and I would recommend a buy with a stop below 12,250, 12,300. And the other one which I like is LLT Larsen & Toubro. That's a buy with a stop at about 36.30 and a target of 37.25 to 37.30 can be looked at on the upside.
Okay, well, thanks a lot, Mitesh, for that. Let's shift focus now to the commodity space. Manisha Gupta is joining in. Manisha, what's the one commodity you're tracking today?
Well, Sonia, I'm looking at the rubber prices, which actually have been doing quite well in the recent few months there. If you look at the Indian markets, we're looking at 200 rupees per kg of rubber prices there. Well, and this is the highest that you've seen in last 12 years. In last decade, we've seen rubber prices trade anywhere between 130 to 160 on the higher side. But the last 6 to 8 months have actually been quite positive, bullish as well. And we have seen rubber prices, not just in the Indian markets, but international markets trade on an year-on-year higher basis there as well. So lower production due to heat waves and, of course, lower productivity and yields is what really has supported the prices there. The markets also are looking at higher demand for natural rubber prices from the AV industry, tire industry, and that has been supportive. When you look at the Indian natural rubber stock, if you look at it on a March-on-March basis, we have seen a decline on this. So if last year was 442,000 tons, it's at 372,000 tons on 1st of March 2024, and that is what has been bothering the markets there. Also, when you look at the Indian rubber production and consumption numbers, the last couple of years have seen an increase in production, as you can see, but the consumption numbers have increased many-fold, and that tells you that the import dependence that India has in sense of rubber and natural rubber will perhaps just about continue. I also want to talk about the global markets there, and this is the data from Rubber Study Group, which says that the global production in 2024 is expected to increase by 1.1%, but the consumption is expected to increase by 3.1%. So in the global markets as well, we are looking at a deficit kind of a situation there, and that will be supportive for the rubber prices. The demand growth, as I said, is continuing to come in from China. That is, of course, leading. But the Indian demand growth is gaining up by 3% for this current year as well. When you look at the international markets, well, we have seen a stronger demand there as the numbers show. But here as well, there are concerns on production coming in from Thailand, a major producer of rubber, by the way. And then the China factory activity in the previous month also has surged quite strongly. Our latest report shows that there has been 3 China, EV makers who have done record sales of automobiles in the month of June. So that tells you that the demand has been on the stronger side and the rubber prices could be supported going forward.
Okay, thanks a lot for that. Well, that is in the commodity space. But I also wanted to quickly talk about the big stock in focus this morning, which is Maruti. Maruti is now up almost 4.5%. And if you're wondering why, the Uttar Pradesh government has waived off the registration fee on any hybrid car that you buy. And because of this, 100% waiver on the registration fee of the hybrid cars, the potential benefits that consumers can have is up to 3.5 lakh rupees. So that could be a big boost to the sales of hybrid cars as well as overall demand in states like Uttar Pradesh. This is positive for Maruti, Honda, Toyota that manufacture hybrid cars. Maruti, as we know, offers the Grand Vitara as well as the Invicto in the hybrid car category, and names like Toyota offer, a couple of others in that space as well. Now, this waiver is to boost hybrid car sales and increase the market. UP is a major market for passenger vehicles. If you look at the data, right, the passenger vehicle sales in the first half of the calendar year in Uttar Pradesh saw a growth of 13.5%, coming in at 236,000 units. This is also a potential positive for Mahindra & Mahindra because the Mahindra Group is investing 1,200 crores in renewable projects and is setting up a 150 megawatt hybrid project as well. But if you look at just the hybrid car category, it's very small currently. Just 2% of the overall volumes of the passenger vehicle space come from hybrid cars. But yes, this is a big positive, and hence Maruti's stock is up almost about 5% right now. Let's step into a quick break. On the other side, we'll be joined by Puneet Chhatwal, the MD and CEO of Indian Hotels, to discuss the demand and the business outlook. Stay tuned. Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Dr. Saneen, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at
Well, it's corporate radar time now. The Indian hotel stock is up 61% year on year and 40% year to date. But if you only looked at the past month, the stock has lost about 10% from its recent highs of about 660 rupees. There are some concerns about how first quarter may have panned out for the company, since a year ago in the same quarter, the company benefited from the G20 meetings. In fact, they benefited all through 2023. Now, this summer was hit by one of the worst summers as well as election season. But all that is behind us. To get an idea of the year ahead as well, I have with me Puneet Chhatwal, Managing Director and CEO, Indian Hotels. Good morning, Mr. Chhatwal. Always a pleasure having you with us. Well, let me start with this minor sell-off we have seen in the stock. And when I inquired, some worries that last year was such a spectacular performance that it may be tough to repeat given that you don't have G20. Is that a fair worry?
All worries are fair. All risks that are, kind of tabled are there. But the job of the management is to navigate through all kinds of headwinds. As in the past several years, I remain cautiously optimistic about the guidance that we have given. And the guidance that we have given is a 10% growth in the top line over last year with or without G20. And we think we are on track. And as you rightly said, a very difficult heat wave that the sector went through, and a very challenging period because of code of conduct. A lot of business, especially in the metros, comes through the government sources. So I think all in all, that is behind us, and we are very happy and looking at the pace of development. The business on the books for the month of July and August gives us the optimism not to change our guidance, but to give even a more solid guidance in terms of double-digit growth on the top line at the end of this financial year.
Well, double-digit is a big range. If you can say something about mid-teens, high teens.
But I would say anything north of 10% to 15% on the top line is good. And if it is driven through some of the important sources of contribution margin, that is like rooms revenue, or through your main wedding business, then it translates into incremental profitability, because that's how this business is in terms of a fixed cost base. And on that front, Lata, I forgot to mention, this year, based on the calendar, the first quarter had the least number of wedding dates too. So we had the heat wave, the least wedding dates, and code of conduct, all three. But I think the sector in general did well in terms of navigating through this. And I remain optimistic as we are in a silent period that we will be fine over the 12 months period in the guidance that we have given.
Okay. Would margins also be better? I mean, you already did fantastic margins last time. I think north of 20%.
For the year, we did 33% almost. So I think anything north of 30 for the full year is a very good industry-leading margin on a global front. We should not forget we have also hotels in US and London and Cape Town, and it's not just a domestic. On the domestic front, on standalone, we are north of 40. And I think that's a very respectable and a very high margin for the kind of business that we are in. And we have been very confident in giving this guidance, and we stand by that.
Oh, 40 is something to kill for, Mr. Chatwal. But, as you pointed out, I think a couple of interviews ago, that there is a supply-demand mismatch. Supply is lower than demand and is likely to remain that way for a few years now. But does that give you unlimited pricing power?
No, I think there is nothing like unlimited pricing power that will come. But definitely, if demand outpaces supply, especially in the key hospitality markets like Delhi, Mumbai, Rajasthan, Goa, Bengaluru, etc., then your ability to charge is higher. And I think that is the situation that we are in. And also our footprint is so large in these markets. We are industry leading in, Goa. We have 15 plus hotels in Goa and another 30 plus homestays. So I think given that kind of a footprint, the importance of these markets is very significant for our portfolio. And I think they will keep doing well, because although the supply is coming, the demand is just outpacing the supply.
Oh, yes. Oh, yes. A visit to the Gateway, to the hotel in Gateway. You're a stand for place in even Shamiana. Well, let me come to ARRs. I know it's silent period, but how much can you reveal? I think ARRs can be revealed. How was it? Or how do you see it in the current year? Last time, I think you did 75%.
That is the occupancy, right?
Yes, yes. Sorry, occupancy. I'm sorry. I meant occupancy.
We are on track. We are, as I said, 10% top line growth. If half of that is coming through rooms and the other half is coming through food and beverage, then obviously it has to be more than last year. What exactly it will be is really decided between the months of October and March, because that is the time when you benefit, especially our portfolio, from foreign tourist arrivals because of our palaces footprint with the Taj brand. That is the time when you have the maximum corporate events because of the weather in Delhi and in Mumbai and other places. So that rate improvement and the average that you derive is really coming from the months of October to March. And we should not forget, this sector till 5 years ago was used to having a negative first half of the year. Now, you look at just Indian hotels for the last several years, except for COVID, we have been profitable in Q1 and Q2, which we were never historically. So I think that is where the landscape of hospitality has changed. And it's not just us, all the companies that are publicly listed announcing the results are on, are really on the go from 1st of April onwards. And that is a dramatic shift in the way business is done in this sector.
Okay. Well, actually, the FY24 ARR, I think, was about 580 odd. You can do substantially better?
See, Lata, I think it's a very good question. So let me answer it in a very, scientific and artistic way. We have several brands. We have to start giving this guidance, which we'll do when we announce the results for the first quarter. By brand, the ability to charge for Taj, which is a 120-year-old brand, which is so mature, which is like the crown jewel of India, not just Indian hotels, is very different than our new businesses. So when we say that 12,000 is the rate, that doesn't mean that was the average achieved rate of Taj. So that includes the Ginger, that includes the Vivanta, that includes Selection, all other hotel brands. And now in August, we're going to launch also Gateway. Yeah. So I think the guidance has to be by brand. And if the growth of Ginger starts in the way we have been thinking it should, like adding at least 10 to 12 a hotel a month just with the Ginger brand, then it starts diluting the overall average achieved rate, because a Ginger brand would do like 4,000 or 5,000 rupees as an average rate, whereas Taj would do north of 15,000. So I think that's what the rate you mentioned just now includes rates all possible. And just Taj, I would say, would be higher than or north of 15,000.
Oh, okay. Well, I'm trying to pack in as much as possible, being warned by my producer. 2 questions. Wellness, are you all going to go big? Because, just as the summer is a big reality, people looking at not just luxury, but diet and good health is. So any plans over there? And the other one, international. Why is it so much less than your domestic, and any plans there?
Both great questions, Lata, and thank you for asking. We have always had what was called the Jiva. We have renamed it or rebranded it as the J Wellness Circle. And the J Wellness Circle enables us to have more than 80 spas across our portfolio. That is maybe the highest anybody would have in the world. But that's not the end. It's just the beginning. And we are looking at various options going forward in partnering with people who are very strong in wellness and in that kind of sector, because that's a very specialized sector. Yeah. So we want to bring in our expertise on hospitality in terms of accommodation and combine our forces with somebody who's very strong on that front. So hopefully within a year or so, we'll be able to guide more on where we stand on that front. When it comes to your second question was related
international,
which I said is great, is let's not forget, US is not yet recovered to the pre-COVID levels, especially New York, where we have where we are present on the Fifth Avenue. But even UK, London has been a very big contributor to us for several years now. And we know what UK has gone through in terms of also elections, and they had their own challenges. But we do believe that London will keep doing very well. Cape Town has done very well for us. And we did have some challenges in the past in Sri Lanka, which is bounced back very well. But at the same time, we have still some challenges in Maldives. But I believe now that Maldives is beginning to stabilize. All in all, international has done well for us in the last 16, 18 months and will continue to do and contribute much better. And that's one sees when you see the results on a standalone and a consolidated basis, you see that what the domestic contributed and what the international contributed. International historically was a drag, which is not the case anymore.
Okay. Well, actually, my producer is extremely impressed by your answers, and she's given me 1 more minute. What are you all doing about digital? I mean, there's so much talk of AI, and you have customers on whom you can use digital tools. What's the digital journey?
I think digital, as they would call it in Latin, is conditio sine qua non. I think nobody will be able to survive over long term without using digital and AI as an enabler. Especially for us, I call it as an enabler because when people go to our palaces and our fantastic luxury brands, you know, I don't know if I think it'll be appropriate to mention here on your channel. Taj was rated as world's strongest hotel brand by Brand Finance for the 3rd time in the last 4 years, and India's strongest brand across all sectors. I think digital remains an enabler, a very important enabler, but it is our service ethos, it is our passion for hospitality, it is our cuisines, it is many other things that we bring together, and how we use digital to communicate that with our customers is going to be the key. At least in the short to medium term. In the long term, I think brands like Ginger will be, or our new businesses as we call it, Ginger, our homestay Ama, or Cumin with our home delivery. These are absolutely digital driven businesses. And it's on a good journey, opening your room key with your mobile phone to choosing your room yourself before you even arrive at. These are things that will happen at our new business level. But in a palace, you will be greeted by the palace staff and you will be escorted to your palatial room.
Fair point. No, fair point. Each to his own. Actually, it was a credit card company which was envying what data you may have and how AI can be used over, the kind of database that Indian hotels may have. But I suppose you're not on that journey. Thank you very much, Mr. Puneet Chatwal, for revealing what you can in your silent period, and look forward to the post-results conversation.
Thank you. Thank you very much for having me. Pleasure always.
With that, it's a wrap on Bazaar. Chartbusters coming up.
And you've just eaten, and then you go to sleep, and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So it's, I would assume, looking at the stats, that the rural problem would be slightly more because also availability of, toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
AFL is one of the bigger gainers today, up around 2.5% off highs, but Citi's initiated coverage on the stock with a buy rating. Target price was 1,600 rupees a piece, expecting it to outperform growth in the digital advertising industry.
Godrej Consumer sees profit booking after a sharp up move yesterday. The company's business update indicates double-digit constant currency growth in the first quarter.
Mahanagar Gas hikes CNG prices by ₹1.50 per kg and PNG prices by ₹1 per standard cubic meter. CLSA also issues a bullish note on city gas distributors. Those stocks too still in the green of highs.
Concor corrects as volume growth misses guidance. The export-import volumes grow by 3.3% in the first quarter of the year, well under the guided growth of mid-teens for FY25.
Emami surges as Citi hikes its target price to 900 rupees from 625 after a strong summer portfolio and expectations of an above normal monsoon.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangalam Malu. And as you can see to the top of the screen, all the indices are well in the green as we speak. So it's a good start to trade. The 24,450 mark remains elusive, but at least the start in the green. And a couple of big names like ITC are firing this morning. Hey, Mangalam.
Hi, Nigel. You know, the underperformers coming back to the party. Perhaps ITC doing extremely well. For the last few trading sessions, we saw some weakness in HDFC Bank as well. That too has recovered. Let's see whether this recovery continues well past the 20-day moving average on the stock or not as well. But from the broader markets, we are seeing some traction in a couple of these names. So something like a Nippon Life Insurance should come up for you. A big up move is what we've seen, more so in the last 5 minutes or so. It's a vertical rise that we've seen on Nippon Life. And while tea stocks have been doing well, maybe some of them are saying, add sugar to my tea, because we have Balrampur Chini, which has spiked as well and has moved to the high point of trade. So it'll be very interesting to see where these sugar stocks go from here as well, because typically these move in tandem with all the sector itself. So that's about a couple of stocks which are on the up. On the way down though, BHEL, NBCC, NCC, PFC, REC, a lot of these PSUs are taking some profits home as well. So good time to get in a market check. Shilpa Rao joins in with a quick technical check. Shilpa, we've been in a bit of a range right now. Today, it's the milder green side of the range as against the mild red that we saw yesterday. Where do you think this range goes from here, or does it stay the way it is?
Good morning, Nigel and Mangalam, and thank you for having me on the show. Talking about the range, yes, we see that 24,000 is actually very well defended. In fact, you can actually level up also, and 24,200 is also acting as a good support. So as long as we are holding this 24,000 to 24,200, I believe the trend on the upside is quite intact for levels of 24,500 to 24,800. But below that, yes, of course, we will see some caution happening. FIS data also still at net longs at 84% is little worrisome, but since we don't see any sort of long unwinding happening from their end, so till then it is quite fine. We can see 24,500 and above levels coming in. Bank Nifty is consolidating again very beautifully, with 52,000 as a support, and as long as we are holding this, we can always expect that run up towards 52,800 to 53,000 mark again happening.
Okay, all right. Hi, good morning, Shilpa, and thanks a lot for joining in. Give us your individual stocks as well.
I have two buys, Nigel. The first one would be in Alkem. Alkem is showing a lot of strength since yesterday. The diagnostic space is also doing well. Stock is just approaching 5,300 mark. In futures, it is around 53.15. So I believe it has a potential to see 53.80 to 5400 zones also probably in a day or a couple of sessions. So with a stop loss of 5270, keep your long positions in Alkem for targets of 5380 to 5400. The other one would be a buy in IEX. IEX also I've recommended in Prabhudas Leeladhar at the same levels, 184 half, 185 trading in futures. With a stop loss of 182, I believe the stock is very well placed for the rally towards 195 to 200. The option writing at 180 is very strong, so I believe that will act as a very strong support zone. So from here, the rally should resume for targets of 195.
Right, hang in there, because we were just talking about sugar stocks and them not moving, alone and in tandem with others. So you just pull up. We were talking about Balrampur Chini, but see Shri Renuka. Look at Dwarikesh Sugar, Bajaj Hindustan. All of them now have moved to the high point of trade. So Shilpa, do you have any call on this space right now? Is there any stock that stands out? Typically, it moves in tandem.
We have been from a technical desk, Dwarikesh Sugar, they have been recommending, but from FNO, Balrampur Chini is there. Yes, of course, it has just given a breakout again above 420. So as long as it is holding 420, I believe stock can move towards 445 to 460 zone.
All right, Shilpa, thank you so much for joining in, giving us your call on the indices, individual stocks and some sectors as well. Before we move on, just pull up the intraday chart of Bombay Burma. That's the other stock which has seen a big move. In fact, it's up now 13%. Volumes picking up on that one as well. In fact, today's volumes on Bombay Burma are much higher than what we typically see on the stock at this time of the trading session. So that's something we'll just keep an eye out on. Bombay Burma up around 13%, 14%, Nigel.
Well, big move is what we're seeing on that one, bursting away actually up close to around 14% off. For the time being, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Jitendra Gupta of moneycontrol.com joins us to talk about a stock that he's tracking closely. Jitendra, take it away.
Among utilities, we continue to like NTPC, which still offers good value given its reasonable valuation and strong earning visibility. Of course, renewable energy modernization plans the company has. Earnings visibility is quite good, supported by robust capex pipeline and improving profitability, largely led by lower fuel cost and generation efficiencies. The company plans to tender close to 15 gigawatt of thermal capacities over the next 2 to 3 years. This is in addition to 10 gigawatt of thermal capacity currently under construction. Additionally, NTPC's renewable energy capacity targets are ambitious. It is aiming for 20 gigawatt by FY26 and 60 gigawatt by FY32. We think additional thermal power capacities will expand NTPC's regulated equity base, providing reasonable earnings growth visibility. Moreover, our focus on scaling renewable energy portfolio and exploring new areas such as green hydrogen and battery storage should support growth. These initiatives are expected to drive earnings over a period of time. Valuation-wise, NTPC is trading at around 1.8 times its fiscal 26 estimated book value. This is reasonable given strong long-term growth prospects, healthy dividend yield of 2.5%. Moreover, NTPC plans to list its renewable energy business soon, which should further unlock value.
All right, that's about NTPC. A couple of these auto stocks doing extremely well. And before we slip into a short break, just pull up Bajaj Finserv as well. Will be an important one to watch out for, particularly in the second half of trade. Bajaj Finance, Bajaj Finserv, HDFC Bank on account of the Nifty Financial Services expiry. We take a short break, come back at you more on the markets and a lot of individual stocks which are buzzing around today.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIs would buy, markets would rally. If FIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT service.
Welcome back. Let's talk about one of the other stocks which are buzzing around today. We have CSE that's higher in trade as it's hiked tariffs in the Kolkata circle by over 5%. Vivek joins in to tell us more. Tariffs hiked by 5%, stock up by 6%. Vivek.
Well, that's right. So when you're actually talking about CSE, remember, the company is largely present as far as the state of West Bengal is concerned. And we are talking about the Kolkata circle, where the company actually offers electricity services. Now, for a long period of time, CSE has been requesting, for two sets of developments. Number one, they've been asking for a tariff rate hike, which is not yet fructified. Also, the company has been asking to go ahead and levy a charge so that they can go ahead and recover the variable charges. So now, when you're looking at the bill for the month of June, what's actually happened is that the company has started to levy a fuel adjustment charge to its consumers. Now, this fuel adjustment charge, the quantum of that is rupees 40 paise per unit, which effectively works to a tariff hike of 5.7%. Now, what IIFL says with regards to this particular development is that this particular hike should be good to cover CSE's incremental fuel costs and ensure complete cost recovery. They also say that the accumulated regulatory assets stay at 3,000 to 3,500 crore and will be recovered gradually with regulatory approval. From the stock's perspective, this is a significant development given the fact that the stock continues to trade at a steep discount to Torrent Power, Tata Power and Adani Power. They believe that this particular hike can go ahead and help the company catch up in terms of valuation multiples to its peer set.
All right, Vivek, thanks a lot for that. So that's about AFL, which is, that's about CSE, which is doing well. But let's talk about AFL as well. That's the other stock which is higher. And Rima joins in to tell us about the initiating coverage that is coming from Citi. Rima.
Thanks so much for that. So first, just a quick word on AFL India. Now, AFL India is an ad tech platform which helps with your mobile and digital marketing. So basically, if you are an advertiser and you want to sell your product, you will contact AFL and give them a share of your marketing budget, and they will help you gain customers or users. So now AFL India focuses on 4 key segments: E, F, G, H. E stands for e-commerce, edtech, entertainment. F stands for fintech, FMCG, food tech. G stands for gaming, groceries, government. H stands for healthcare, hospitality, travel. Now, the company did go through a bit of a slow patch because of the funding winter for many of the startups, and therefore they had gone slow on user acquisition or customer acquisition. Then even the GST on gaming had hit them because they do cater to gaming also. But now Citi has come out with a note and they're saying that the company is a beneficiary of increasing digital and mobile ad spends. Some of the strengths of AFL, and these are noteworthy considering that they are competing with the likes of Google, Meta, Amazon and Apple in this particular space. They're saying that AFL India has a connection with over 3 billion connected devices. They have partnerships with mobile OEMs like Samsung, Xiaomi and other mobile operators, which allows the company to directly communicate with the device. They're also allowing enterprises, that's your advertisers, to directly help in advertising in regional languages in India or come up with personalized ads, largely more in tier 2, tier 3 cities. And their M&A track record has also been fairly decent, and that's helped them gain inroads in the developed markets only. So they have diversified away from India a bit. So Citi has initiated coverage. It's a target price of 1,600. They expect the top line to grow ahead of the industry growth rate. They also expect margins to expand by 300 basis points from 16% to 19%, and they go on to say the valuations at 47 times is below their long-term average of 56 times. But remember, just as a noteworthy risk, they are competing in a crowded space where the likes of Google, Meta, Apple, Amazon control 70% of the digital marketing spend. Back to you.
Got it. All right, Rima, but stay with us. Brokerage house Bernstein as well as has expanded its coverage on IT sector. They've added a couple of engineering services companies. Tell us more. What do they have to say?
Well, let me start with KPIT Tech because that's a stock reacting positively. And this is a stock which is up nearly 600% in the last 3 years. And it's vastly outperformed its closest peer, Tata Elxsi, which is up 63% in that same period of 3 years. Now, Bernstein has initiated coverage on KPIT Tech. They've got an outperform rating target price of 2,120, so much higher than the lifetime high of KPIT, which is 1,774. The key reason is the company is a dominant player in the auto space and auto engineering in areas like electrification, ADAS, body electronics, and they're servicing large OEMs like BMW, General Motors, Cummins. But on the flip side, Tata Elxsi, they have a negative call, an underperform rating with a target price of 6,030. They say Tata Elxsi has delivered the slowest growth amongst peers over the last 5 years at 17%. High revenue contribution is a risk. And third, valuation at 50 times forward multiple is expensive. Back to you.
Okay, all right, Rima, thanks a lot for that. Well, Mangalam, coming across to you, FMCG brand Emami, well, they've seen quite a up move after Citi raised its target price from around, I think, 650 earlier. Tell us more.
Well, you know, the stock itself has been doing extremely well over the last couple of months or so, almost 6 months or so. It's been a big 70-80% sort of mover. So maybe some bit of that is also, you know, playing out. But for Emami, the pictures, the pieces of the puzzle came together when they depledged the promoter holding. Then they also, you know, started to scale up some of their acquisitions. Then there was a strong winter, the extended winter that came by that did well for their winter products. And now the summer is doing well for them as well. So seasonality is helping companies like Emami. Citi has gone ahead and increased the target price from 625 rupees all the way up to 900 rupees. They see tailwinds in the form of one strong summer season, which will benefit both Navratna hair oils as well as Dermicool. Dermicool was something that they acquired a couple of years ago. So this is going to be the first full summer that will be there in the numbers this time around, potentially above normal monsoons as well. So winter did well for them, summer is doing well for them, and now with above normal monsoons, maybe rural picks up for them as well. And over the long term, however, a couple of these strategic initiatives that the company has been doing, increasing its sales and distribution force, they've added a couple of people on their management board as well. The tech digital things that they're doing along with organized channel, which is modern trade and e-commerce, which contribute to about 20% of their sales, with new product launches and higher ads and promotion spends. As a percentage of sales, Emami has the highest A&P in the industry itself, and despite that, they have among the higher EBITDA margins too. So all these working for the company, they expect there to be a bit of a re-rating. You know, about 6 months ago, this stock was trading at around 26, 27 times 1 year forward earnings at a time when everyone else was trading at 50 plus. So with valuations catching up as well, now the stock is up 70% from those levels, still at a discount to all the other FMCG peers.
All right, and Abneesh in the morning as well said he expects further upside even from here, even after the re-rating that we've seen. That Citi's call as well on that stock. Big move, as Mangalam said. Just pull up a 3-month chart. You'll see the way the stock has given massive returns. I recall it at around 450, 500 rupees. Now at around 775 rupees. 70% in 3 months. Slip in a short break, come back. We'll continue our focus on markets and stock-specific action.
From consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
celebrate our own 25th year with new...
Welcome back. Markets are doing well, but a couple of stocks are calling for special attention, and Sonal's here to address just that. Mahanagar Gas went ahead and increased prices. Sonal's here to tell us about that price increase, why did they do it, and the implications. Sonal.
Well, it's an important update coming in from Mahanagar Gas. They've gone ahead and increased CNG prices by 1.5 rupees per kg, and your domestic PNG is more expensive by 1 rupees per SCM. CNG price now in Mumbai and the areas nearby 75 rupees per kg. The PNG price is 48 rupees per SCM. The company says it is because of two reasons. There is a shortfall in domestic gas allocation, and second, the gas that they're importing on because of this reason is much more expensive now. Now remember, spot LNG prices are up 11% on a month-on-month basis in the month of June itself, thereby increasing their raw material costs. Now, with this price hike, the gross margins for MGL could be around 17.9 rupees per SCM. This is the highest in the industry itself, and the stock trades at a cheaper valuation, the cheapest in the city gas distribution space. It trades at 12 times versus IGL trading at 19 times and Gujarat Gas trading at 22 times. So it has the valuation advantage as well. Today, there was a note by CLSA as well on city gas distribution companies, because remember, IGL and Gujarat Gas, both of them also increased prices just few days back. They say IGL's price hike will be bolstering its margin in second quarter of FY25, while Gujarat Gas's price hike for industrial gas will impact its attractiveness versus propane, and this may dilute Gujarat Gas's efforts in winning back industrial volumes. So while it's positive for IGL and Mahanagar Gas, not so positive for Gujarat Gas.
All right, but we're also looking at some chemical stocks as well, right? There is a note that is coming from UBS, Sonal.
That's right. So UBS has put out a note and they speak about the industry trends in the chemical space. They like PI Industries as a stock, bet the target price at 4,800 rupees a share. Naveen Fluorine as well is liked by them with a buy call, target price of 4,250. They have a sell call on Aarti Industries and Gujarat Fluorochemicals. The big reason for the underperformance so far has been Chinese capacity additions, and they say now they may have peaked. So recovery is likely to be drawn out from these levels. Worst may be over because of a couple of reasons. There's stimulus policies in China, which is aiding margin expansion and more demand from that particular geography itself. Producers reducing utilization to improve supply demand. There are capacity addition delays as well, which would mean that not more of exports are happening from China to other countries at lower rates, and somewhat lower inventory over time, which is providing support now to prices as well as demand. Trade war escalation can be a risk, but with some buffers. But near-term demand remains weak. Cyclical upturn expectation in 2024 is receded. And as managements have been saying, it will be the second half of this fiscal when they expect recovery. But some of these stocks have already started seeing in their prices.
Okay, all right. Thanks a lot for that, Sonal. Well, just want to point out these railway stocks. They're a beautiful last couple of days, but some of them have fallen off the cliff. You know, RVNL, just take a look at the high and the low of the day. The stock has corrected more than 10% from the high point of the day. Ircon, that's another stock. You know, high of the day was massive. You know, that one as well has come off close to around 8% from the high point of the day. IRFC, another one that is off close to around 9% from the high point of the day. So quite a few of these names that have seen a good amount of a run-up. They have come for profit taking. IRIDA, not from the related space, the renewable financer. Well, that one as well has suddenly slipped from the top. The high, I think, was 250 rupees, 254. It's at around 237 odd.
Yes, Nigel. You know, same is the case for some of these shipbuilders as well.
Yeah.
We're looking at Garden Reach shipbuilders down about 6% from the highs, Cochin Shipyard down about 5% from the highs. And these are stocks that had seen 11 to 30% moves all of last week. So maybe some bit of profit taking is on the cards for all these high-flying stocks that we just spoke about. But with that, what we'll do is take your leave on this edition of Chartbusters. Thank you so much for watching. From Nigel, me, the entire team that puts this show together, thank you for watching. Take a break. On the other side, we'll have the team of Trading Guard come up next.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Dr. Saneen, you know, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, you know, one of the statistics that or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
Good morning. Welcome to Trading Hour. It's a Tuesday morning. I'm Reema Tendulkar. With me is Hormus. It's another quieter start, but it appears things are, picking up a bit. So it's a 60-point gain on the Nifty right now. The Sensex is inched up above 80,200, 250 points higher as we speak. It's HDFC Bank, which is up today. So pull up HDFC Bank. After 3 days of losses, some strength is coming back in HDFC Bank. So that's up nearly about 0.5%. On the way down, Reliance Industries is under pressure. If you pull up a 2-week chart of Reliance Industries, you will see that the stock was doing very well. But today, some pressure. That's the today's chart, down about 0.5%. But in the last, fortnight or so, you've seen Reliance Industries come back into the party. But today, there is a bit of profit booking. Other than that, ITC is the heavyweight, which is batting for the bulls. Titan rebounds. L&T is up over 1%. And Maruti Suzuki, that is the big stock of the day, 5.5% up at the day's high.
Zooming ahead, if we can call it that.
Zooming ahead, top gear.
Top gear, absolutely. And that's the positive news flow as well on Maruti. Now almost heading towards 13,000, the top gainer on the Nifty, as Reema was just pointing out. But it's been the case for the two extremes, right? The two heavyweights. If HDFC Bank is up, Reliance is down, and vice versa. And these two are ensuring that the Nifty does not go anywhere from the levels that it is. If you look at the last 3 days, the price action of the last 3 days, the Nifty has moved only 20 points. So regardless of that, see, Reliance is down 0.6% today. HDFC Bank is up 0.5%. But the trend was completely different over the last 3 days when HDFC Bank was the one that was pulling the index lower and Reliance was the one that was lending support. The Reliance is up 9% in the last 1 month. And HDFC Bank in the last, Monday to Wednesday of last week, the stock was up 5%. And over the last 3 trading sessions, the stock is down 7%. So it's almost like a back to square one sort of a scenario for HDFC Bank. But yes, FMCG continues to see some buying. ITC lending support to the index as it was doing yesterday as well. And what is also doing well is L&T. there were some flashes on your screen just a while back that the company has won yet another significant order from Hindustan Shipyards, and that is the significant orders are in the range of 1,000 to 2,500 crore range. So it's a significant order win for L&T. There was some news in the morning as well that its semiconductor subsidiary has made an acquisition, so they're expanding their presence in the semiconductor business as well. So L&T, another stock that is doing well in today's session. What is not doing well is ONGC. That's down 1% despite a positive brokerage note coming in this morning from Motilal Oswal saying that ONGC and GAIL are their preferred picks within the oil and gas segment. The stock is down over 1%. Ultratech is seeing a bit of profit booking, as is Kotak Mahindra Bank. So all in all, it's still yet another quiet day, as has been the price action over the last few trading sessions. It's been a sluggish last few days for the market. But some other movers then, and within the broader markets, one of them is Dr. Lal PathLabs, and that stock is surging in today's session after positive commentary coming in from UBS. Nimesh is here with the details. Nimesh, what does UBS have to say here?
Well, just ahead of the earnings, UBS today has gone ahead and raised the target price on Dr. Lal PathLabs to 3,500 versus 2,900 earlier. They have a buy rating on the stock, but they believe that the market concerns about low patients volume growth, which was just minus 1.5% in FY23 and just 2.6% in FY24. Those are likely to fade as the company is likely to post or deliver 6 to 7% patient growth going forward. In fact, the faster growth in tier 3 cities indicates that the company is gaining market share, and they can go deeper into that. Further, all the improvement in terms of profitability is helping the company to plow back that money for growth. So on back of this, they've raised the earnings estimate for FY26 and FY27 by 7 to 8%, and hence they've raised the target price as well now to 3,500 versus 2,900 earlier.
Thank you very much for that. Let's talk about GAIL. There is a bullish note released by Motilal Oswal today. Sonal joins in with the key takeaways from that. Sonal.
Thank you so much for that. Well, Motilal Oswal talks about GAIL being the top pick in the oil and gas space. The stock already has returned 27% in terms of returns to the investors this year itself. GAIL remains a structural upturn marked by a couple of reasons. The first one being its improving volume growth outlook, which they expect for the next 2 years to grow at 7% CAGR. The second is the potential of 10 to 12% hikes going forward. Now remember, that is something which was expected for major pipelines for GAIL, and that could be the next trigger for the stock as well. The completion of the transmission and petrochemical projects worth 29,400 crore rupees, which could improve its return on equity and return on capital employed as well. With the impending end of the investment cycle, they expect free cash flow generation of close to 4,040 crore for the company going forward, considering the company has been talking about a lot of capex plans as well. So improving balance sheet is something which would be positive for the stock. They have a buy rating with a target price of 260 rupees a share, and they remain bullish on the space.
Sonal, thanks a lot for that. GAIL, one of the top picks there from Motilal Oswal. But Godrej Consumer Products saw a dip, and Concor also saw a drop since early trade after the company reported their business updates for the first quarter. Now, both of the stocks are also reacting to their business updates. Godrej Consumer is down just close to about 2%, while Concor is down just over 1%. So these are some of the movers as of now early this morning. But time for a short break here on Trading Hour. Up next, we discuss what's buzzing in the but just as we speak, Mangalam is joining in with more on the details for these two, both Godrej Consumer and Concor. Mangalam, what does the commentary suggest from both these companies?
Well, both of them are down for different reasons, even though the update for them have been divergent as well. So Godrej Consumer, remember yesterday all the FMCG stocks were doing extremely well, buoyed by the updates coming in from both Dabur as well as Marico. Godrej as well, the street was anticipating similar kind of numbers coming in, and as a result of which the stock was bid up already, ended at the high point of trade. So today it is perhaps a bit of sell-on news which is playing out, which is why the losses are limited to just about 1.5%, closer to 2% itself, like you pointed out. As far as their update is concerned, overall flattish sales growth is what the company has reported, or is likely to report in the first quarter. But this is again on a reported basis. Constant currency revenue growth has been double-digit, and the EBITDA has been double-digit as well. So internals are pretty strong. India business, high single-digit organic volume growth, mid-single-digit value growth. Remember, there have been a couple of price cuts in the soaps business, so that will reflect in the value growth of the business. But the acquisition of Raymond's consumer business and that growing would mean that the reported volume growth is in double-digit and reported value growth is in high single-digit as well. The problem was Indonesia and Africa, where Indonesia, on a constant currency basis, the revenues were strong. It was, weakness in the Indonesian currency that would lead to translation losses. And Africa as well, the organic business is expected to see double-digit volume decline. That's because the company has been working towards changing things in Africa. So these are a couple of one-offs. By and large, good numbers coming in from Godrej Consumer, some bit of profit taking. For Container Corp, however, remember after the fourth quarter, the management had joined us here on CNBC TV18, targeting 15% volume growth in the EXIM business and overall volume growth at around 18 to 20%. 1 quarter down the line, the EXIM volume growth is just 3.3%, domestic volume growth just 15%, telling you that the overall volume growth this time around has been 6%. Still early days into the year, but still a far cry from the guidance for the full year that the company has given, which is why maybe some bit of decline on Container Corp as well.
Thank you very much for that. We will slip into a very short break. We'll come back and talk commodities. Manisha Gupta joins in on the other side. Stay tuned.
Back with us here on Trading Hour, the PSU banks are doing very well for themselves after a bit of a correction that they saw yesterday. The PSU bank index is the top sectoral gainer this morning and it's up almost 2% now at the highest point of the day, and that's doing very well for itself. The surge in Maruti is having a rub-off effect, of course, on the Nifty Auto Index as well. Now that index is up over 1%. And what is also doing well is FMCG stocks seeing some buying, but the broader markets are seeing some bit of range-bound action moving in line with how the Nifty is moving. The small cap index is up 0.5%. The mid cap index is up 0.25%, as is the Nifty as well. But some very interesting moves coming in the form of railway stocks, and they've been back, and how, in the last few days, Reema. And all of these stocks made a high this morning. RVNL made a record high today, crossed the mark of 600. It was up 620 was the high of the day, and since then it's down 11% from the highs of the day. So there was a block deal that took place in RVNL today. It took place yesterday as well. It was almost a similar quantum, around about 800 crores odd. So that was a block deal that took place in consecutive days for RVNL. So all of them, Ircon, IRFC, RITES, all of them made highs today and are down anywhere between 5 to 7% from the highs of the day. But then that comes on the back of the moves that we have seen in the last month or so. You see, RVNL is up almost 50% in the last 1 month, and most of that has come in the last few days. Ircon is up 15%, IRFC is up 25%, RITES is up 15% as well. So railway stocks are the ones that are seeing some bit of choppy moves in today's session after a bit of a one-way move that we've seen over the last 1 month. Remember, they started off 2024 with a bang, if I can say that, because RVNL as a stock itself had gained 75% in the month of January itself. That, along with IRFC, both of them were up 75% that month. And then they saw some bit of sideways movement. Now they are back in the reckoning. What is also back in the reckoning are shipbuilders. And for a stock, for stocks that that double in a month, you're bound to see some bit of profit booking in these days. Masgao Dock is off 5% from the highs, as is Cochin Shipyard. But look at the 1 month returns. Masgao Dock is up 70%. Garden Reach has almost doubled in a month. Cochin Shipyard is also up nearly 50%. But Cochin Shipyard is up almost 300% year to date. So an underperformer in the last 1 month, but solid gains seen on a year-to-date basis. So the two themes that have been in focus right through last week and through most bits of this week as well, railways and shipbuilders, are the ones that we are paying attention to. But shifting focus now to the commodity space, Manisha Gupta is joining in, and today we are focusing on tea. Manisha, good morning. What's the latest on the tea?
Well, it's not very comforting to know that the tea production has been declining. Tea prices have been gaining at a time when it's monsoon and you perhaps are consuming more of it. Well, the latest data shows that the production in India has continued to decline and the prices have been surging. It has to do with the extreme weather because we have seen higher heat waves, lower productivity, and that has clearly weighed on. Last year in 2023, tea production in India hit an all-time high. But this time around, Assam perhaps is looking at 100 million kgs of lower of a production there. So the Tea Board of India has put out a report suggesting that the prices are up by nearly 20% on an year-on-year basis already when it comes to tea. And for this year, you could be closing 16 to 20% on the higher side in sense of prices. So we are not expecting a decline onto that one. The other data shows that when you look at production for the month of May, there was a decline by 30% already registered there. Also, when you look at the India tea exports, those have surged by 37% in the first 4 months of this year itself. So with low production, higher cost of production and low productivity itself, the markets can pretty much anticipate that you're looking at lower crop and higher prices for the rest of this year.
Thank you very much for that. And that's pushed up these stocks significantly higher. So pull up a Harrison Malayalam, a Jayashree Tea, McLeod Russell, Dhanseri Tea. These are stocks which are now showing you double-digit up moves. They seldom come up on the price and on the volume charts, but look at the big moves in Harrison Malayalam, Jayashree Tea, McLeod Russell, Dhanseri Tea. Smaller companies in the large cap space. It's Tata Consumer with its presence in the Tata segment, in the tea segment. Manisha, thank you very much for highlighting that. Get into a break. We'll come back and discuss market technicals. Mitesh Thakkar joins in with his top trading bets. Stay tuned. Welcome back. PSU banks are rebounding. They were under pressure yesterday, but today the Nifty PSU banking index is up nearly 1.5% with names like 1.8% now at the day's high.
IOB, Union Bank, Central Bank of India, Punjab and Sindh Bank. These are stocks showing you some very, very big gains. Another stock that I'd like to highlight is RateGain, because that's up close to about 5%. The company has won a multi-year deal from Malaysian Airlines. Where they will be utilizing RateGain's intelligence. Remember, RateGain is a platform which caters to all the travel related companies and helps them with intelligence. Like, what is the surge pricing? What are competitors doing right now? So that's the kind of intelligence RateGain provides all the travel related, and it's been a big beneficiary of the travel boom. The size of the deal is not known, but it's a multi-year deal that they won from from Malaysian Airways, and I understand that the airline segment is relatively new for RateGain and is growing well, and the stock is excited in trade, 4.5% up. Chemical stocks are also in focus. UBS has initiated coverage in a couple of them. Sonal is back with us to tell us more on the brokerage view on chemical industry. Sonal.
Thank you for that. Well, UBS has not initiated coverage, but they are talking about their view on a couple of these names. For instance, they like PI Industries and Navin Fluorine from some of the chemical names. They have a buy rating on these two stocks, but they have a sell on Aarti Industries and Gujarat Fluorochemicals. Now, the big talking point has been how China has been adding capacities, how it has been exporting goods at lower prices, but now they say that the worst looks like it's over. Pressure from China capacity additions may have peaked and recovery is likely to be drawn out. Couple of reasons why they think so. First, stimulus policies in China is aiding margin expansion. It also means more consumption in their own country itself. Producers are reducing utilization to improve the supply-demand gap, which has been really huge so far in last 4 quarters. Capacity addition are seeing delays. That means there will be enough demand for the supply. Somewhat lower inventory over time, which would provide support. However, trade war escalation, that continues to be the big risk, where China has always seemed to benefit from that. But near-term demand remains weak. Cyclical upturn is seen from the end of 2024, something that most of the chemical companies have been talking about, that they see recovery only in the second half of FY25. But these chemical names have already started pricing that in, and we are seeing up move on a couple of these names.
Okay, thank you very much for that. I just want to take the cue from Sonal and talk about another brokerage view, and this is Bernstein. Now, Bernstein is not talking about your traditional IT services companies, right? They are the generalized players, the TCSs, Infosys. They want to talk about the specialized companies, the ones which cater to a particular segment like auto. And they're saying that these specialized product companies, engineering R&D companies, are growing much faster than the traditional IT services company. So here they've initiated coverage on four key companies. Persistent and KPIT, where they're bullish. On Coforge, neutral rating. On Tata Elxsi, they have an underweight rating. I just want to pull up two stocks. One of them is KPIT Tech, where they have an outperform rating on the stock. And this is after the stock having given you a return of 585% in the last 3 years. The 52-week high, the all-time high of KPIT Tech is about 1,772. But Bernstein has put a target price of 2,120. They're saying the company is a dominant player in the auto services business with presence in electrification. So the entire move from ICE companies to EVs is aided by companies like KPIT Tech. This is a trend you can't stop. ADAS services, which is assisted driver services, which basically means that, most cars are fitted with some sort of an automatic braking systems. When you get the newer cars, so when you get close to another car, it will automatically brake. So those are called ADAS services, assisted driving services. So KPIT is a big player in electrification, ADAS, and providing, say, an infotainment in the car services. And it's done phenomenally well since its IPO. I think it's been giving a 50% kind of a return since its IPO in 2019. But on the other hand, Tata Elxsi. Now, Bernstein has a negative view on the stock, an underperform rating. Their target price is 6,030, which is a good 1,000 rupee lower than the current market price. 3 key reasons. 1, the company has grown slower than its peers for the last 5 years. Second, valuations are very high. The stock is trading at 50 times. And third, revenue concentration risk. The top 5 clients contribute close to about 44% to its overall revenues.
Persistent has been the outperformer on the IT index as well, right? And they're still bullish after the run-up that the stock has seen.
So Bernstein is bullish on Persistent because this is a company which is growing faster than its peers. And the last few years, they've also managed to expand their margins. But the reason why I didn't bring it up is because Citi has a 30-day catalyst negative watch on the stock ahead of numbers. And their only reason is the stock has outperformed the Nifty by 17% in the last 1 month. So it's already factored in good earnings and valuations are on the richer side. So therefore, the scope for disappointment after this kind of an outperformance is high. So which is why, since those two, offset each other, the bullish call by Persistent and that negative watch by Citi, and the stock is not doing too much. So then I thought I'll just exclude it.
There are plenty of such stocks, right, where there's no scope for, no margin for error.
Margin for error is low.
And so the run-up that you've seen, the expectations are way too lofty. But Reema, you have more to talk about because Apple is also surging in trade. And while Citi has a negative catalyst watch on Persistent, it has a buy rating on Apple, and they've initiated coverage here at 1,600 rupee target.
So, first I just want to spend a little time explaining what the company does, right? So, Apple is an ad tech company. It largely caters to these new age companies. So if you are an advertiser and you want your products available on someone's phone, when you're scrolling through the phone, right, you want your products available, you will go to an Apple, you go and you give them a part of your digital marketing budget, and then you get paid only when, say I am the advertiser, Apple is this anonymous person in front of us, and you are the user, right? I go to an Apple and I say I want, my products to be marketed across on mobile phones largely, because India is more of a mobile market rather than a desktop web market compared to developed markets. So you say I want my products, available. I want to advertise on advertise my products on mobile. They will try and target people like you, but they get paid only when you get converted. You go specifically on their web page and you make a sale, or at least you go and click further. So, their model is a little different, and they're catering to these, 4 segments, E, F, G, H. E stands for e-commerce, entertainment, edtech. F stands for FMCG, food tech, fintech. G for gaming, groceries, government, and H for healthcare, hospitality. Now, the company has gone through a little bit of a slow patch because in India, many of these e-commerce startup companies went through a funding winter. So they weren't spending so much on acquiring customers. Plus, gaming was hit because of that GST rule, so that one of their segments was under slower growth. But now Apple believes that this is a company which will outgrow the industry. And they're saying it has certain strengths. And they have strengths in a market which is dominated by the Googles, Metas, Apples, and Amazons of the world. They control nearly 70% of the market. But this is a company which has 3.3 billion connected devices. They already have access to those 3 billion plus connected devices. 2, they allow, they have tie-ups with Samsung and Xiaomi. With many of these mobile operators and OEMs. So the minute you get you buy a Samsung phone, Apple is going to have access to you. Plus, they're focusing on marketing in regional languages to tap into tier 2, tier 3 companies in India. So these are some of the strengths which are helping Apple. So according to Citi, revenue should grow faster than the industry, margin should expand, and therefore overweight rating, target price of 1,600. And they also say valuations today are lower than their long-term average. So this is not a company which is expensive relative to its own standards, though it's at 47 times.
Well, the A, B, C, D and the E, F, G, H of Apple India explained by Reema in this very detailed conversation. But there is Apple India. They're doing well for itself, 4% higher after this positive brokerage note. But good time to get in a quick technical check on the markets. Mitesh Thakkar is joining in now. Mitesh, good morning. It's been a bit of a sluggish price action on the Nifty, say, over the last 3 to 4 sessions. Is this, if we can say, the calm before the storm? Is it building up for form? Is it a base formation of sorts before it starts to move on the upside again ahead of a big event like the budget?
Morning, Hormones. I think there is signs of consolidation, but I'm not sure whether this entire consolidation will last till the budget, because we still have about 2 weeks to go for the budget. So my initial understanding is that this looks like a consolidation for next 3 to 4 sessions, and that should be it. And then we might actually resume the uptrend in case we don't start breaking down during this sideways activity. So with that kind of view, I think I'll just suggest people to look at 24,100, 120 zones. If that is not being broken, trade with long bias, but then be stock specific, because what we have seen in the last few days is that as the market has taken some breather, there has been sectoral rotation, and I think that's the way it's playing out.
Mitesh, then getting to your stock calls, what would you recommend?
I have a buy on ITC. I think today is ITC which is leading the rally and looks still strong. So that's a buy with a stop at about 446 for target of 465. And India Cement post that news flow and that big rally, I think, it went to high of around 300 plus and then has come back to about 272 to 275, which is the strong support area for the stock. The way the news flow is shaping up, I think today's low should be a good stop. So buy with that 272.5 as your stop loss and look for targets of 290.
It's the fifth day of gains for ITCs. So day after day, some of the other FMCG stocks are seeing consolidation. But ITC, pull up a one-week chart, continuous strength coming through.
Indeed, and one of the outperformers there in the FMCG space is ITC, coming back after a bit of sideways action through most parts of the year. They're 6.5% higher in the last 1 week is ITC. But Mitesh, thanks a lot for joining in, sharing with us your views on the index and your specific stocks as well, ITC and India Cements, the recommendations there from Mitesh. Time for a short break here on Trading Hour. But before we go, a small Indian SME is changing the way construction is done around the world. Now that's true. At SME Champion Awards, we are celebrating the success of Indian SMEs. Watch how Pinnacle Infotech is using tech to build a better future for construction by constructing certainty with technology.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS.
Welcome back, and staying with FMCG stocks as they have been in focus all through yesterday and today as well. Citi has issued a buy recommendation on Emami and they've also raised their price target on the stock. Mangalam is joining in with the details. Mangalam, what does the brokerage have to say here?
Well, apart from what the brokerage has to say, the good thing about Emami this time around is the seasonality of their products has them in good stead. So a couple of quarters ago, the street was thinking that all the pieces of the Emami puzzle are coming together, especially with them having completed the sale of their AMRI business and the promoter pledge being revoked. Then there was the extended winter that helped their winter products, and now there is that strong heat wave that came by that helped their summer products. More importantly, the forecast of a positive monsoon or better than expected monsoon will aid rural recovery, which will aid their entire portfolio. So that's exactly what brokerages are bullish on as well, and that's reflected in the stock price. Over the last 3 months or so, the stock has rallied almost 70-75% odd. Citi has increased the target price from 625 to 900 rupees. They see tailwinds in the form of one strong summer season, which would do well for their cooling oils business, and also the first full summer quarter of the acquired Dermicool business. So that would be a positive. Potentially above normal monsoons would drive uptick in demand, benefits their pain management portfolio and other parts of their business as well. But over the long term, they are, positive on some of these strategic initiatives that the company has taken. One, they've increased their sales and distribution reach, increasing sales at the existing network as well. They increased investments in tech and digital. Organized channels, which is modern trade, e-commerce, doing about 20% of revenue right now, is something that they're bullish on. New product launches and investments behind brands. So A&P spends as a percentage of sales in the industry are among the highest for Emami. And despite that, the EBITDA margins for Emami are also among the highest because their gross margins are extremely high. So all of these would yield positive results. About 6-7 months ago, the stock was trading at a multiple of 26 times 1 year forward earnings, which was a steep discount to all the other FMCG companies. After a 70% up move that we're seeing the stock trading at around 35-36 times, still a deep discount to all the other listed FMCG players.
Thank you very much for that. We will move on now to CESC, that's buzzing in trade after its hike tariffs in Kolkata Circle by over 5%. Vivek joins in to tell us more. Vivek.
Well, that's right. So the stock in focus today is CESC. Now, what's actually happened is that, remember, CESC for a long period of time has been requesting, CERC to go ahead and grant 2 approvals as far as hikes are concerned. Number one is the actual tariff hike as far as its own electricity is concerned, and number two, the ability to go ahead and pass on the variable cost to its customers, given the fact that fuel charges have been quite high. So what's actually transpired as far as the month gone by is concerned is the fact that CESC, which is largely present in West Bengal and in the Calcutta Circle, has gone ahead and levied a fuel adjustment charge. This fuel adjustment charge, the quantum is 40 paise per unit, which effectively translates to an effective tariff hike of 5.7%. IIFL has reacted to this particular development. They are saying that this particular hike should be good to cover CESC's incremental fuel costs and ensure complete cost recovery. Also saying that the accumulated regulatory assets stay at 3,000 to 3,500 crore and will be recovered gradually with regulatory approval. From the stock's perspective, this is a significant development given the fact that the stock trades at a steep discount to its peers at the Torrent Power, Tata Power as well as Adani Power, and they believe that this particular development can help narrow the valuation differential that CESC suffers when compared to its own peer set.
Well, that's not a shock that you would want to get as the consumer, but CESC doing very well for itself in today's session, almost 6.5% higher. It's been an outperformer in the last 1 month as well now, up almost 25% in the last 1 month. So good going there for CESC. But moving on then, insurance stocks are also the ones in focus, and Yash is joining in with their updates from the June quarter. Yash, how do the updates look like?
Well, Hormaz, what we've done is we've managed to put together the monthly numbers and present what the first quarter of FY25 could look like for life insurance companies. And let me tell you the pretext of it. Of course, last year was full of disruption because of the taxation changes and the financials sort of had to be, rearranged, rejigged. This year, at least the start of it, seems like all those troubles and the disruptions could be settling for good for these life insurance companies. I'll start with HDFC Life Insurance. For the first quarter, the new business premium for HDFC Life Insurance could see a growth of 11%, could come in at about 6,500 crore rupees. The total annualized premium equivalent, or APE, could see a growth of 22%, and retail APE could see a growth of even higher, that is about 30% in the first quarter of FY25. Remember what the management has guided for. For FY25, the management has guided for 15% APE and retail APE growth. So at least as far as the first quarter is concerned, it puts the company well on track. The stock is down 2% in the last 3 months. It trades at 2.4 times price to embedded value. For ICICI Prudential Life Insurance, new business premium expected to grow at 24%, total APE at 56%, retail APE at 47%. The management is guided for mid-teen APE growth for FY25. So well ahead of that guidance, at least the first quarter is concerned. Stock is up just 1% in the last 3 months, trades at 1.9 times price to embedded value. Max Life Insurance, new business premium expected to grow at 12%, total APE at 19%, retail APE at 27%. Management has guided for FY25 APE growth to be in high teens and VNB growth to be marginally lower than the APE growth, with margins of about 25 to 26%. Stock is down 4% in the last 3 months, trades at 1.8 times price to embedded value. For SBI Life Insurance, new business premium expected to grow at 13%, total APE expected to grow at 17%, retail APE a growth of 21% expected. SBI Life Management has guided for APE growth to be about 18% for FY25. The stock is flat in the last 3 months, trades at 2.2 times price to embedded value. Finally, Life Insurance Corporation, new business premium, that is expected to grow at 25%, total AP expected to grow at 31%, retail AP expected at 19% growth. The management has guided for FY25 APE growth to be about more than 15%, VNB growth 300 basis points higher than the APE growth, margins of about 19 to 20%. The stock is up 2% in the last 3 months, trades at 0.9 times price to embedded value. So first quarter puts all these life insurance companies well on track, some of them ahead of the estimates for the full year FY25, and the stocks haven't done much in the last 3 months.
Thank you very much for that. We'll get into a break. We'll come back and discuss market fundamentals. Chirag Mehta from Quantum AMC joins in on the other side. Electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18.
Welcome back. You're watching Trading Hour. It's time now to take stock of where the markets are headed. How should you construct your portfolio? Chirag Mehta from Quantum AMC is now with us on the show. Chirag, great to have this conversation with you. Welcome to Trading Hour. Wanted to first talk about the auto sector. Today, of course, Maruti is higher in trade, but in your latest note that you've shared, you've indicated that you've paired some of your positions in auto names in the month of June. Why is that? What is it that you expect from the autos? And in autos, break it up, right? There's two-wheelers. In the entry level, there is going to be increased competition with Bajaj Auto CNG launch. There is this Maruti news. So tell us what you expect for the various segments.
Sure, Rima. Thank you for having me, firstly. And within the auto, what we are seeing is, there are strong tailwinds for the sector overall. So growth is there, but what's happening is valuations have run up so much. We have seen a good rally in many of these stocks. And given the rally and some normalization expected going forward, because if you look at from a demand standpoint, what we have seen is more like a replacement demand kicking in rather than the new demand drive being driven because of more spending happening. So rural is still struggling. Probably budget will address some of the issues that we see in the rural areas. And even if there is some growth that is expected because of the budget, much of it is already priced in the stock markets. So overall, there is growth, there is tailwinds for that sector. The sector is doing well. We do like that sector from a growth standpoint. But certain names where we have seen a big run up in valuations because of stock markets running up, we have trimmed those positions to some extent. But overall, we do still like the auto and auto ancillary as a sector across our portfolios, be it the large cap portfolios or be it the small cap portfolios where we have more auto ancillaries in the portfolio. So we do continue to own many names in that space. But certain names where we thought that run up has been much more than justified by the valuations, there is where we have trimmed certain positions in that sector.
Chirag, good morning. Thank you for joining in. I'm sure you must be speaking to hundreds of your clients who may be asking you where should one invest. I'll flip the question a little for you. There are sectors where you should not be at this point of time. You mentioned that you should be tempering return expectations because there are plenty of sectors that have rich valuations. Which are the sectors that one should avoid at this point of time? Because sectors are seeing stocks double in a month, you would always have that valuation concern, right? Which are such sectors?
So certain sectors, it is easy to put a blanket out there and say that, these sectors need to be avoided, but the rally or the stock market positioning is getting more stock specific as opposed to a sectoral thematic that was going on for last year or so. So power as a sector or industrials as a sector has become expensive. Having said that, there are certain plays even within that which has great tailwinds, which has a great runway from a growth perspective, and valuations are still reasonable in those spaces. For example, when I say niche spaces, it's something like, for example, the smart meters in the space of industrials, where we still see some comfort, some runway for growth expected going forward as energy efficiency becomes a paramount need. We are seeing some great tailwinds for that sector. So certain sectors, as I said, industrials, power, etc., from a overall perspective, look pretty expensive from a valuation standpoint. However, there is growth support of it, but valuations have moved beyond what justified by the growth, and hence, those are areas where we are not venturing as much.
So when cash comes to you, where are you deploying it, Chirag?
So within these sectors, we still are comfortable with valuations in the financial space. So private banks is where we find some comfort on a valuation standpoint. Also, some insurance names is in the BFSI space is what we like. So those are the big areas where we are deploying cash. IT to some extent, we were buying all through, but now even there we have seen some run up from a valuation standpoint. Though we are not trimming anything there, we are holding on to our allocations in the IT sector. So predominantly, it is finding out more bottom-up ideas. Some spaces in the material space are looking still comfortable from a valuation standpoint, like what's happening in the cement sector. We are seeing some plays there which are looking attractive, which have not run up as much from a valuation standpoint, and hopefully growth will emerge as we see more activity from infra and building construction space. We will see some tailwinds coming for that sector as well. So overall, BFSI is where we find some comfort, followed by IT to some extent, and some niche plays or some bottom-up ideas in the material space is what we are looking at.
Interesting. By the way, some flashes on your screen. Metropolis has shared its first quarter update, and they're saying that they are now debt-free and now have a cash of around 140 crore on their books. The first quarter revenue up 13% on a year-on-year basis. The stock now surging to the highest point of the day at 2071 at Metropolis. Their True Wellness and bundling segment also now has become the fastest growing part of the company. So a healthy update there for the quarter for Metropolis. Now, Chirag, since we are on the subject of Metropolis, not the stock in particular, but this entire diagnostic space, that was the hotspot, right, during the COVID times, because they were surging, the testing was surging. But now with growth levels starting to normalize, there is still this bit of valuation discomfort because they still some of them are still trading at a premium to their historical averages. Do you find any valuation comfort within this diagnostic space? And if you can couple that up with the broader healthcare space as well, say the hospitals or the drug makers as well.
So yes, in the diagnostic space, of course, there is a big runway on a long-term basis for growth. But the competition intensity in that sector is pretty high. And as you rightly pointed, that valuations are still not very comforting in that sector. So we are staying away from that sector at this point in time. But within the healthcare space overall, we like the hospital space. So in the small cap fund that we have, we do have exposure to certain names in the hospital space. We think that there is underpenetration in terms of the availability of hospitals, etc., that we have here. There is a lot of capex happening, and probably the fruits will be there in next couple of years. So from a longer term perspective, 2 to 3 years out, I think that space looks appealing to us. So we do own some names in the hospital space in our portfolio. But in the diagnostic space, we are observing that keenly, but we don't have much exposure to that sector.
The company Metropolis in their Q4 conference call had guided for revenue growth in FY25 to be in mid-teens with a focus on core business growth. So in Q1, it's come in at about 13%, but their guidance for the full year is mid-teens. And they're hopeful about sustaining Q4 margins at close to about 25.5%. The cash level as of Q4 was about 117 crore, and that has gone up to levels of 140 crore. It was debt-free even in the March quarter. It's still debt-free. The cash levels, though, have gone up from 117 crore in the March quarter. Now, I think to 140.
140 crore.
140 is now the latest update in terms of the March quarter. 13% top-line growth, pretty decent for the company. Chirag, you spoke about IT, that how you were bullish, but now you're concerned about the recent valuation, but you're not looking to at least pare down your holding. In IT, are you talking about IT services, or is it the engineering R&D company, the product companies like your KPIT, Tata Elxsi? Is there any stock right now in IT where you're still comfortable buying ahead of Q1 numbers?
We are not adding to our positions much in that space, but we are holding on to our positions in that in the IT sector. It's more to do, if you see, we are on the cusp of, say, a rate cutting cycle, which could start maybe 3-6 months down the line. And if there is uptick in discretionary spend in the US, then probably, the IT companies will kind of benefit because of that. So, and the AI space, I think they were seen as headwinds, but we have seen time and again that these IT companies use any such technological changes to their advantage and gain more business. So we are hoping that IT companies will use that at our advantage. We are seeing training, etc., or skilling in that segment from the IT companies is picking up significantly. So we are holding in anticipation of more business coming or growth coming in the IT sector, maybe another 6 months, 1 year down the line. So we are hopeful for some growth. So we are observing that space. If there is a reason to add, we may add further. But at this point, we are staying put with our allocation in that sector.
Chirag, thanks a lot for sparing time and joining us to share your views on the sectors that you are bullish on and you are not so bullish on as well. Chirag Mehta there from Quantum AMC. Time for a short break here on Trading Hour. More on the markets and specific stocks on the other side. Stay tuned. We'll be right back.
What a century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key news makers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Back with us here on Trading Hour, and it's time for an exclusive. Sources are telling CNBC-TV18 that Aegis Wolpack Terminals, a subsidiary of logistics firm Aegis Logistics, is looking to file its IPO DRHP soon. Yash is here to give us the details. Yash, tell us more.
Well, that's correct, Horma. So this is a subsidiary, the terminal business subsidiary from Aegis Logistics, and it's a large IPO which Aegis Wolpack Terminals is expected to file very, very soon. As per our sources, the DRHP, the draft red herring prospectus, could be filed with SEBI as soon as September end or in the first week of October itself. So pretty soon with the filing of DRHP. As far as the company is concerned, it's a JV between Aegis Logistics and Dutch multinational Royal Wolpack. Aegis Logistics owns about 51% stake in the company and Royal Wolpack with about 49% stake. As I said, it's a large IPO that we are expecting from Aegis Wolpack. The total fundraising from the IPO is expected to be about 4,500 crore rupees. It is expected to be a complete fresh issue, which means the entire 4,500 crore rupees raised through this IPO is expected to come into the company, and as per our sources is expected to be used towards expansion purposes. As far as valuation itself is concerned, as per our sources, the IPO could value Aegis Wolpack Terminals at about 35,000 to 37,500 crore rupees. As far as the business is concerned, the company operates a network of terminals located at 5 strategic ports in the country. It has a total terminal capacity of about 9.6 lakh cubic meters, and it is one of the largest independent tank storage companies for LPG and chemicals. As far as the financials are concerned, on a standalone basis, FY24 revenue that grew by 44% for the company. FY24 net profit came in at about 46.9 crore rupees versus 5 crore rupees. On a consolidated basis, the revenue from operations that grew at 59%. Net profit came in at about 87 crore versus a loss of about 7 lakh rupees. We've written to the company, that is Aegis Logistics, on this particular development. The company, to our query, has denied this particular story.
Thank you, Yash, for that. With that, it's a wrap on Trading Hour from the entire team that put the show together. Thank you for watching.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Dr. Saneen, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning, to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes and other oral health aids.
Stocks trade firm, but advances don't top declines by a big number. Auto and consumer durables are the prominent gainers, while capital goods and oil and gas drag.
Godrej Consumer slips after a strong run-up following its update of double-digit EBITDA growth in the first quarter. Concor too skids on volumes in the first quarter, growing far slower than its full-year guidance.
Jupiter Wagons is in focus with a plan to raise near 500 crores, and Pitti Engineering with an expected 360 crores raise are the latest to join the QIP rush. Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Manglam Malu. Well, it's turning out to be a session where we're just about consolidating with a positive bias. We had the US markets which were at record highs as well. We have Brent which is softened overnight. So all of that helping in terms of cues. But not to mention that we have a lot of cues lined up. Yes, earnings is one of them. But on the global front, we have the Fed chair's testimony to Congress, which is going to take place tomorrow, and then follow it up with the CPI data from the US and then CPI data on the 12th of June from back home as well. So a lot of data points to watch out for, and obviously we do have earnings to reckon with.
A lot of them, and as understandable, the India VIX is higher ahead of all those big events that Ekta just spoke about, along with earnings and then the big budget that comes by on July 23rd. But the Nifty has hit a record high, and that's the big headline for the moment. The earlier record high was 24,401. Today's high was a little over that itself. And now the Nifty's understandably retreated from those levels as well. The street is hoping for a bit of a range. So the high today on the Nifty is 24,401.2. So it's by 0.2 points that the Nifty has actually gone ahead and hit a record high nonetheless. The bank Nifty is doing well, up around 1/3%, but it's no one particular sector which is taking the index higher today. There is contribution from every sector, and most notably from the auto space as well, led by Maruti, which is up 6%. So we'll discuss more on what triggers there are for Maruti and the entire auto space. But for now, it's a lot of updates that have come in. Godrej Consumer Products, which saw a bit of a dip in today's trading session post their quarterly update. Container Corp too, but both for divergent reasons. So let's talk about Godrej Consumer Products first. Remember, yesterday with Dabur and Marico's update, the entire FMCG pack was doing extremely well. So there were expectations of a good update coming in from Godrej Consumer as well. So as a result of which, there was some bit of sell-on news taking place. What is the news? It's a mixed quarter. Flat sales reported on a reported basis. Double-digit EBITDA growth is what the company has been, looking at in the first quarter. India growth, that will be in high single digit in value when it comes to the organic part of it. And if you include Raymond's consumer business as well, there would be double-digit volume growth as well. Depreciating Indonesian currency may lower reported growth. So there is double-digit growth in Indonesia as well. But because of the currency effect, the overall impact would be flattish or negative from Indonesia and flattish on an overall basis. And Africa too, the organic business is expected to see a double-digit volume decline. Again, that is by design because Godrej is focusing on highly profitable businesses. So out there, the EBITDA actually will grow in double digits as well. So sell-on news taking place on Godrej Consumer. But for Container Corp, the first quarter volumes, the overall volumes grew 6%. Exim, which is the larger part of their business, showed a volume growth of just 3.3%, and domestic business showed a volume growth of 15%. Remember, the company spoke to us post their fourth quarter earnings and said that their target for this year is 15% volume growth on the Exim front and 18 to 20% on an overall basis. Still early days in this year, still the first quarter had a lot of one-offs that needed to be corrected, but 6% volume growth as against a guidance of 18 to 20% for the full year only adds pressure for the remaining 3 quarters to go ahead and meet those margins, as a result of which we are seeing some softness in container corn.
Okay, all right. So that's Godrej and a couple of these updates which have come through. But the other stock which is in focus is Dr. Lal's Path Labs, which is surging in trade. This is after positive commentary from UBS. Nimish is tracking this story. He's here with the details on what UBS likes about Dr. Lal's and the target price there as well.
Well, just ahead of the earnings, UBS has gone ahead and raised the target price on Dr. Lal Path Labs to 3,500 versus 2,900 earlier. They have a buy rating on the stock, but they believe that the market concerns about low patients volume growth, which was just minus 1.5% in FY23 and just 2.6% in FY24. Those are likely to fade as the company is likely to post or deliver 6 to 7% patient growth going forward. In fact, the faster growth in tier 3 cities indicates that the company is gaining market share and they can go deeper into that. Further, all the improvement in terms of profitability is helping the company to plow back that money for growth. So on back of this, they've raised the earnings estimate for FY26 and FY27 by 7 to 8%, and hence they've raised the target price as well now to 3,500 versus 2,900 earlier.
Right. The other one is GAIL. Motilal Oswal has issued a bullish note. Sonal joins in to tell us more about what the note says. Sonal.
Thank you so much for that. Well, Motilal Oswal talks about GAIL being the top pick in the oil and gas space. The stock already has returned 27% in terms of returns to the investors this year itself. GAIL remains a structural upturn marked by a couple of reasons. The first one being its improving volume growth outlook, which they expect for the next 2 years to grow at 7% CAGR. The second is the potential of 10 to 12% hikes going forward. Now remember, that is something which was expected for major pipelines for GAIL, and that could be the next trigger for the stock as well. The completion of the transmission and petrochemical projects worth 29,400 crore rupees, which could improve its return on equity and return on capital employed as well. With the impending end of the investment cycle, they expect free cash flow generation of close to 4,040 crore for the company going forward, considering the company has been talking about a lot of capex plans as well. So improving balance sheet is something which would be positive for the stock. They have a buy rating with a target price of 260 rupees a share, and they remain bullish on the space.
Okay, all right, Sonal, thanks very much for that. Well, a lot of stocks in focus. We need to take a short break, but up next we will be talking to FADA as the UP government has waived registration fees on hybrid vehicles. Stay tuned for that. Maruti, remember, is the top gain on the Nifty. We'll be discussing that.
Much less than in the urban areas, but awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
Welcome back. The auto index is doing extremely well. It's up around 1.5%. On the other side, we have the PSU Bank index as well, which is among the top indices, which is gaining today, and that's led by SBI. So the intraday chart of SBI comes up for you on the screen. But we have a note coming in from UBS on chemicals stocks as well. They've initiated coverage on a couple of these names, and as a result of which all of them are buzzing around in today's trading session. What is their rationale? Sonal joins in to tell us more.
Thank you for that. Well, UBS has not initiated coverage, but they are talking about their view on a couple of these names. For instance, they like PI Industries and Navin Fluorine from some of the chemical names. They have a buy rating on these two stocks, but they have a sell on Aarti Industries and Gujarat Fluorochemicals. Now, the big talking point has been how China has been adding capacities, how it has been exporting goods at lower prices, but now they say that the worst looks like it's over. Pressure from China capacity additions may have peaked and recovery is likely to be drawn out. Couple of reasons why they think so. First, stimulus policies in China is aiding margin expansion. It also means more consumption in their own country itself. Producers are reducing utilization to improve the supply-demand gap, which has been really huge so far in last 4 quarters. Capacity addition are seeing delays. That means there will be enough demand for the supply. Somewhat lower inventory over time, which would provide support. However, trade war escalation, that continues to be the big risk, where China has always seemed to benefit from that. But near-term demand remains weak. Cyclical upturn is seen from the end of 2024, something that most of the chemical companies have been talking about, that they see recovery only in the second half of FY25. But these chemical names have already started pricing that in, and we are seeing up move on a couple of these names.
Okay, all right, Sonal. Thanks very much for getting us that update on chemicals. That's GM Breweries, the numbers flashing on your screen. There's a profit growth which is taking place of around 25%, so 25 crores versus 20 crores on a year-on-year basis. That stock at around 894 odd rupees. Revenue a little subdued, under 5% in terms of growth for the top line. But the big story that we're tracking today is that the Uttar Pradesh government has waived registration fees for strong hybrid vehicles. The move raises hopes of other states following suit in a positive for Maruti, Toyota and Honda. Parikshit is here with the details and to break down the news for us. Parikshit.
Well, the UP government had brought out an electric vehicle manufacturing and hybrid policy in the year 2022. Now, this brought about a complete exemption of road tax and registration on electric and strong hybrid vehicles. The hybrid cars were also included in this policy. Now, while the exemption on electric vehicles as part of the policy was implemented from the year 22-23 onwards, the clause on exemption for strong hybrid cars was not for some reason. Recently, we believe, according to the Federation of Automobile Dealers, a customer went to court and got relief, and the court ordered the UP government to start giving exemption on strong hybrid cars under the policy as well. So from the first week of July, buyers of hybrid cars in Uttar Pradesh have started getting a 10% exemption, which means a complete exemption from road tax and registration charges on a strong hybrid car. So this literally brings down the cost of your hybrid car by about 2 lakhs. So if you were buying a Toyota Innova Hi-Cross for that matter, the cost could come down anywhere in the range of 2.5 to 2.6 lakhs. If you're buying a Grand Vitara hybrid, which costs around 19 to 20 lakhs, your cost could come down by about 2 lakhs or so. So this is a big benefit, so to say, but this has happened on the orders of the High Court. Toyota and Maruti are the companies which are selling hybrid cars in India, so this is a big boost for them. Nationwide, companies have been asking for tax relief on hybrid cars. That has not come through the GST Council. It's not been taken up either by the GST Council either. But for the moment, this is only applicable in UP, a 10% tax reduction and complete waiver on road tax and registration charges on hybrid vehicles in Uttar Pradesh.
All right, Parikshit, thanks a lot for putting that into perspective. So to discuss this and more, the impact of this on the entire industry, we do have with us Vinkesh Gulati, who's the former chairman, Research and Academy, FADA. Thanks a lot, Mr. Gulati, for joining in. Just off the cuff, if I wanted to know how big is the UP market as a proportion of the entire auto market, and we understand that hybrids form 2% of the total PV market. With this waiver, how much can it actually grow to, and how big an impact is this, or how big an announcement is this?
So practically, if I talk of Uttar Pradesh, this is one of the top 3 passenger vehicle market in India. And no doubt hybrids, or I can say the more vehicle, if I see the ratio, the entry-level vehicles are sold more in UP, being a hinterland, as such, and the rural market is big there. So, but on the other hand, this is a big boost towards hybrid vehicles. And this will surely benefit the 3 OEMs which you have said, Maruti, Honda and Toyota. And it's around a 2.5 to 3 lakh benefit, which is being given. I am confident that the 2% hybrid ratio, what we have seen as of now, will surely increase by 1% or 2 going further, because slowly and steadily what we are seeing that 20 lakh plus cars are getting the bigger tandem. These SUVs are seeing a major growth as compared to entry level. And the benefit what high riders or Vitara will get will obviously eat into the market of other SUV players which don't have a hybrid in UP. Additionally, I'll tell you one more thing. There is a 50% rebate in Chandigarh also, which has been going on for long. But 100% I feel UP is the first state to do that.
Okay. Do you think that other states are probably going to follow through?
That's a very good point here, because we'll now slowly see how the market is reacting, which is obviously positive that we expect. And it gives a very strong message that the government is, one, supporting electric vehicle, which most of the governments are. But UP government has come up to support the strong hybrid also, which is obviously not as good as EVs, but it is better than the other ICE vehicles what we sell. So overall, I am looking forward to a lot of governments working on it. Maybe a lot of customers will push this to government or the economists which are working for social and environment to push other governments to come up with similar type of schemes and benefits.
So just wanted your thoughts on 2 things then. One, what could be the foregone revenue on account of this to the states? And secondly, now that the states have taken this action, at least one large state has taken this action, do you think the larger demand of lower GST would also be considered or could also be considered?
GST is a point which is a central point, doesn't depend on the state. And it has a long history of discussion going on. For first, FADA was behind government to reduce GST on 2-wheelers. And now for the past 6 months, we are seeing a pressure from OEMs, the specific OEMs, to reduce GST on hybrid. I have my doubts that there'll be anything which will come on the GST. But the registration tax, the road tax which UP has done will obviously trickle down to, I feel, some of these states which are more forward-looking. And coming to the what you said about the loss of revenue, obviously it's a big loss, but the kind of message the UP government is giving to the world and the country and to their own people living there, that they are positive towards saving environment, supporting the Aam Aadmi to buy products which can help improve the environment and reduce pollution.
Okay. Do you think that there'll be any impact on the EV or the pure EV market?
Not pure EV market, because those are actually, the price segment is different, because hybrid vehicles are normally costlier. EV we can get from, like, Tata is around 10 to 15 or Mahindra is around 16. So we have a range of 10 to 20 of the electric vehicles which are mostly sold in UP market. So there are very less vehicles sold which are more than 20 lakhs of electric vehicle in India. And normally what I am aware of is hybrids are around 20 or 20 plus. So I don't think so it will affect electric vehicle, but I'm sure that it will motivate more customers to at least consider hybrid going further in the time.
Okay. Just had a quick question about Maruti itself, because UP is a strong market for Maruti, around 12% of their domestic volumes in FY24. How much incremental rise do you probably see because of this move simply for Maruti? I know you know that's a difficult assessment to make, but just based on what you've seen from the industry.
See, overall, UP is a market where the average ticket size is not as high as metros or the bigger states in the world. So if we say that all India is around 12 to 15 lakhs, UP normally hovers around 10 to 12 lakhs or 13 lakhs. And hybrids are all costlier than that. Even then, we'll see a better share going towards hybrid. It is around 2% today. I'm sure going further, it will be 3 in coming 2-3 months and go up to 4. And obviously, the biggest benefiter would be Maruti or Toyota, or a bit to Honda also. Now, this will, and another point catalyst to see how the other brands come up with their strategy against these hybrids, or do they come for more hybrid products in India or not, or how will they handle this special benefit what hybrids are getting in UP, and I feel slowly all over India also.
Exactly, actually, with this regulatory favor coming in from one state, we still don't have certainty on whether other states will follow this suit or not, or whether this will move the needle too much. Would it make sense for companies to actually put their R&D behind, hybrid because of this little incentive that has come by? I just wanted to understand that, because it would make more sense for the companies to, pay attention to things which are selling a lot more, like SUVs, etc.
Yes, but if you see for the past 2-3 years, the transfer from ICE to EV hybrid was always thought as a stopgap arrangement. There were some OEMs who had been forthcoming and they had gone through that way. There are some MNCs which have hybrid product which are being sold around the world, but they have still not got in India. So I feel there had been a lot of confusions of getting hybrid in India or not. There are some Indian companies which are not working on hybrid as of all. They're only doing research but not planning to launch. They are directly plunging into the electric vehicle bandwagon. Hybrid surely is being seen as a stopgap arrangement. This will force other OEMs to come in to plan something. Maybe they have to start electrification earlier or launch some hybrid products in that. As of now, I feel even Chhattisgarh has some schemes of rebate on hybrid on the road tax. So there are 2-3 stray cases which are going in these states, and I feel with UP now becoming the biggest and a full 100% rebate what UP is giving will obviously motivate the OEMs to come into hybrid and other states to also follow suit.
Okay, all right. We're going to let you go on that note. Always an interesting conversation. Thanks very much for joining in and speaking to us about what has been a big development. As you can see, Maruti is now continues to be the top gainer on the Nifty, up around 6% It'll be interesting to see how much they do benefit from this incentive about strong hybrid vehicles in the state of UP, and how much their incremental market share could increase to. We need to take a short break with the news that the Nifty is at a record high, so no problems there. In fact, we'll get talking about the technicals of the market. Sachitana Notekar of Trade Bulls will join in with some trading strategies in what to do in such a strong market. Stay tuned.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIs would buy, markets would rally. If FIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Welcome back. Well, Sachidanand Uthikar of TradeBuzz joins in now to discuss the technicals of the market. Sachidanand, hi. Welcome to the show. Well, extremely good, market on our hands. We're sitting at record highs. We have a lot of top gainers on the Nifty. Maruti, let's start with that one. That stock is up around 6% followed by ITC, which is up around 2%. What would your approach be towards a couple of these counters?
Good afternoon, Ekta. Clearly, I think the market is in a very strong grip. It has been trending above its 5-day exponential moving average for almost 26 consecutive sessions. This particular average is placed somewhere close to around 24,300. So unless we don't see a closing below the same, we expect that this particular gradual up move may take it forward towards 24,560 zone. Clearly, I think if you look at ITC, there is still a lot of headroom which is available. In fact, it has managed to display a breakout from its 4 months of consolidation, and the entire pattern structure is still indicating an up move towards 470. So definitely, long positions should be retained here. Probably fresh long positions can also be added with a trailing stop loss somewhere close to around 448 on a closing basis. So we are anticipating that this particular up move will continue in the markets going forward. And even if you look at Nifty Bank, the base at around 52,250 looks very stable. It is still oscillating within its previous day's trading session. So I think the moment Nifty Bank starts trending above 52,700, we may see a good short covering move even unfolding in Nifty Bank as well.
All right, and individual stocks, what would you recommend?
Good afternoon, Mangalam. Clearly, the strength is within the FMCG pack, and here HUL has displayed a good breakout from a rounding formation. If you look at the OI stats, even 2,700 call writers have been pushed, 2,600 call writers have been pushed behind, and we are anticipating that this long built-up cycle may continue going forward. So we are expecting that the momentum may continue towards 2660 on HUL's futures, and that's why we are recommending building long positions here, keeping a stop loss at 2580. The positional target of the pattern is placed somewhere close to around 2730, so the reward to risk is still very good. So we are recommending building fresh long positions here. And the other stock which has hit my radar is India Mart. Now, if you look at the last few trading sessions, the stock was consolidating. There are good signs of short covering move unfolding here. The moment it starts trending about 2700, we may see a good spike in momentum, which may propel the stock towards 2840. And that's why we are recommending building long positions here, keeping a stop loss at 2660.
Right, Sachi, thank you so much for joining in, giving us calls. India Mart as well as HUL, both of these stocks are on his buy list, both of them doing well at the high point of trade. In fact, so let's continue that theme forward itself and speak about the way the markets are poised right now. The Nifty has hit a record high today by just 0.2 points over the previous record high, but it's a record high for the books nevertheless. And like we were pointing out, it is been a broad-based up move that we're seeing. All the sectoral indices come up for you, and that will tell you that it's a rally which is led by not only the auto space, but the Nifty Bank, which is up around 0.25%, the FMCG pack, which is doing extremely well as well. So Maruti and ITC are the top contributors. The Nifty Bank not falling too much, and SBI doing well has contributed to that up move as well. And even as the market's moving higher, remember this time around we're mindful of the gains that we're putting on, because the India VIX is rising as well. There was a 7% up move yesterday, and that's followed up with a 3% up move because of the big events that are lined up both globally and locally. So we have the results starting this, the big results starting this, end of this week, and we have the budget as well towards the end of this month. And in line with that, the two heavyweights that we need to track are both Reliance and HDFC Bank. For the last couple of trading sessions, HDFC Bank had taken a bit of a back seat, whereas Reliance had moved about 9% higher to a record high. Today, Reliance is taking a bit of a back seat, and HDFC Bank is trying to inch higher. So 1657 is a mark that we'll be watching out for HDFC Bank, which is the 20-day moving average. And that will be all the more important in the second half, because we do have the Nifty Financial Services expiry that plays out in the second half today. Where is the Nifty Financial Services expiry likely to be? There is the highest amount of premium at the 23,650 straddle. A straddle is a call and a put together. So those who are writing those straddle are hoping for the Nifty Fin Services to expire in a range, and the range that they're playing for is closer to 23,600 to 23,700 itself. It's 100 point. A breakout above that range could lead to further short covering, and that's something that would be dependent on the way HDFC Bank moves. For the Nifty itself, 24,400 call extremely active, and the 24,400 put equally active as well, telling you levels upwards of 24,450 could face some sort of resistance, whereas levels of around 24,250 to 24,300 would see strong support as well. Two stocks I'm watching out for in particular: IEX may enter F&O ban, so that's something we'll watch out for. And Hindustan Copper, it was among the earlier entrants in the F&O ban in the series, and may exit F&O ban, so that's another stock which would be on our radar.
Okay, all right, Banglam, thanks very much for that. That's on the F&O space, but continuity of policy and governance could be the theme again, says Anand Shah of ICICI Pru AMC. He also adds that there could be some relief for the middle class when it comes to the budget, the simplification of taxes at the bottom. Let's listen in to what he had to say.
The budgets over time have been more consistent, and to that extent, the incremental surprises that come out of budgets have only decreased. And we believe there is more continuity of policies, more continuity of governance, or the direction of the economy would not change or alter significantly. Particularly for middle class, we can have some bit of simplification of the tax. Definitely, that's one of that, and that also means that you might see a lower tax rate to support the weakness that we have been seeing in the consumption at the bottom of the pyramid. So I think there will be some bit, but on a broader level, I don't see the investments on infrastructure, the investments or the PLI benefits coming into further induce manufacturing, support the housing. I think this would be the pillars. Urban infrastructure, supporting housing, and supporting manufacturing, because all these three has a lot of potential to create jobs at the bottom of the pyramid. We want to stay and give a lot of time to this sector and these companies because we're seeing something externally changing. As China becomes more prosperous, so China is the largest consumer of metals as well as the largest producer and the largest exporter of metal in general, particularly steel. And as it becomes more prosperous, it will have to decarbonize its steel making. That's happening as we speak in Europe, Japan, Korea. It would happen in China also, slowly but steadily it will happen, which means the cost of producing steel in China should structurally go up over the next 3 to 4 years. And China being the largest net exporter of steel in the world, that means that globally the steel prices should be.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
way to celebrate our own 25th year, with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter-century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a...
Welcome back. Well, for the market, stable, so no real movement which is coming in. So the Nifty is currently at around 24,396 odd. It's at a record high in today's trade. Just want to point out that from the broader markets, we have a couple of stocks which are buzzing around. So we have IOB from the PSU banking space, which is up around 4.6%. Vijaya Diagnostic, which is up around 3.7%. And actually, a couple of the PSU banks are doing well. Central Bank of India, Bank of Maharashtra. A couple of these banks are showing some amount of upside in today's trade. And on the other end, we have stocks such as Mankind, Gland Pharma, which are up anywhere between 2 to 3 odd %. Phoenix Mills is up around 3 odd %. Remember, they came out with their update yesterday. So it seems to be quite a colorful market for, different types of sectors seeing gains. MRPL is up around 8.5 odd %. But brokerage house Bernstein has expanded its coverage for the IT sector, adding a number of engineering services companies. Reema is here to tell us more about it.
Well, let me start with KPIT Tech because that's a stock reacting positively. And this is a stock which is up nearly 600% in the last 3 years. And it's vastly outperformed its closest peer, Tata Elxsi, which is up 63% in that same period of 3 years. Now, Bernstein has initiated coverage on KPIT Tech. They've got an outperform rating target price of 2,120, so much higher than the lifetime high of KPIT, which is 1,774. The key reason is the company is a dominant player in the auto space, in auto engineering, in areas like electrification, ADAS, body electronics, and they're servicing large OEMs like BMW, General Motors, Cummins. But on the flip side, Tata Elxsi, they have a negative call, an underperform rating with a target price of 6,030. They say Tata Elxsi has delivered the slowest growth amongst peers over the last 5 years at 17%. High revenue contribution is a risk. And third, valuation at 50 times forward multiple is expensive. Back to you.
All right, Reema, thanks a lot for that. But we have, Affle, which is also in focus, buzzing around in today's trading session. There's an initiating note coming in from Citi, 1,600 rupees target price. What's the rationale here?
Thanks so much for that. So first, just a quick word on Affle India. Now, Affle India is an ad tech platform which helps with your mobile and digital marketing. So basically, if you are an advertiser and you want to sell your products, you will contact Affle and give them a share of your marketing budget, and they will help you gain customers or users. So now Affle India focuses on 4 key segments: E, F, G, H. E stands for e-commerce, edtech, entertainment. F stands for fintech, FMCG, food tech. G stands for gaming, groceries, government. H stands for healthcare, hospitality, travel. Now, the company did go through a bit of a slow patch because of the funding winter for many of the startups, and therefore they had gone slow on user acquisition or customer acquisition. Then even that GST on gaming had hit them because they do cater to gaming also. But now Citi has come out with a note, and they're saying that the company is a beneficiary of increasing digital and mobile ad spends. Some of the strengths of Affle, and these are noteworthy considering that they are competing with the likes of Google, Meta, Amazon and Apple in this particular space. They're saying that Affle India has a connection with over 3 billion connected devices. They have partnerships with mobile OEMs like Samsung, Xiaomi and other mobile operators, which allows the company to directly communicate with the device. They also allow allowing enterprises, that's your advertisers, to directly help in advertising in regional languages in India or come up with personalized ads, largely more in tier 2, tier 3 cities. And their M&A track record has also been fairly decent, and that's helped them gain inroads in the developed markets only. So they have diversified away from India a bit. So Citi has initiated coverage. It's a target price of 1600. They expect the top line to grow ahead of the industry growth rate. They also expect margins to expand by 300 basis points from 16% to 19%. And they go on to say the valuations at 47 times is below their long-term average of 56 times. But remember, just as a noteworthy risk, they are competing in a crowded space where the likes of Google, Meta, Apple, Amazon control 70% of the digital marketing spend. Back to you.
Okay, all right, Reema, thanks very much for that. We need to take a short break, but a lot more on the market. Stay tuned.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Dr. Sunil, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so? Welcome back. Well, let's talk about a couple of other companies. Indian Hotels is in focus. We spoke to Puneet Chatwal, who's the MD and CEO of Indian Hotels, and they said that they're targeting 10% revenue growth over FY24, and they will add 10 to 12 Ginger hotels every month. Listen in.
The job of the management is to navigate through all kinds of headwinds. As in the past several years, I remain cautiously optimistic about the guidance that we have given. And the guidance that we have given is a 10% growth in the top line over last year with or without G20. And we think we are on track. For the year, we did 33% almost. So I think anything north of 30 for the full year is a very good industry-leading margin on a global front. We should not forget we have also hotels in US and London and Cape Town, and it's not just a domestic. On the domestic front, on standalone, we are north of 40. And I think that's a very respectable and a very high margin for the kind of business that we are in. And we have been very confident in giving this guidance, and we stand by that. And if the growth of Ginger starts in the way we have been thinking it should, like adding at least 10 to 12 a hotel a month just with the Ginger brand, then it starts diluting the overall average achieved rate, because a Ginger brand would do like 4,000 or 5,000 rupees as an average rate, whereas Taj would do north of 15,000.
Okay, well, that is Indian hotels. But the other space which has really been buzzing around is the entire jewelry space. Banglam, you've done a lot of work. There's Titan, there's Senco, which is in focus. Give us a sense in terms of what you've picked up in terms of the key trends when it comes to the jewelry sector. This is our Value Plus segment on Halftime Report. Give us a sense.
It's very important, to look at the jewelry companies right now, especially after the first quarter update that has come by, largely because the numbers are quite different and divergent. We have the smaller players. Someone like Kalyan Jewellers has shown a growth of 29% in the first quarter. Senco, the retail sales grew by about 11%. If you add the wholesale, B2B and all of that, the overall sales is close to around 9%. And Titan's own jewelry business is grown at around 8%. So one would say, why is it that Titan is growing so much slower than everyone else? The one big point is because Titan's base is much bigger. So if you just take a look at the FY24 revenue, Titan's jewelry business is 42,000 crore rupees with a margin of 12%, whereas Kalyan is 18,500 with a margin of 7%, and it's grown much faster. Senco as well is about 5,000. So Senco is nearly 1/8 of what Titan is. Kalyan is less than half of what Titan is as well. But what's taking place is that they're also increasing stores at a much faster clip on the smaller base that they have. Tanishq currently has almost 500 stores. They've added 11 stores. Kalyan has added 13 stores via the franchise route, and they have 217 stores. So on a percentage basis, the store addition for Kalyan is a lot higher, and even for Senco, which has around 165 stores, they've added about 6 stores in the first quarter itself. For the industry, there were a couple of headwinds in the first quarter. 20% increase in gold prices over the last 1 year, fewer wedding dates, there was the heat wave, there are elections. So all of that impacted sales for the companies on the whole, whereas the tailwinds were, in case of Kalyan, for instance, store expansion. All the companies saw double-digit Akshaya Tritiya sales. There were high growth in modern formats, Titan, Carrot Lane grew 2x the pace of the overall industry, as in terms of what Titan did, and we had Candere do a lot better for Kalyan Jewellers as well. And there were lower diamond product sales, so that was a bit of a headwind as well. Let's see where that goes going forward. Key to track for Titan going forward is additional penetration of store footprint, because everyone else is at just around 165 to 200 stores. Can Titan go ahead and penetrate otherwise, unpenetrated markets? Secondly, faster pace of growth by newer players on a low base would be, something that would make Titan look a little slower. And can margin guidance of about 11 to 12% be maintained as well? Because most on the street are factoring in lower than that margins as well. Increased competitive intensity may impact the making charges for jewelry companies, and growth in optionality businesses. What are these optionality businesses for Titan? We have the eye care business, we have the watches business, we have the the ethnic wear business, and all these others. Can they grow extremely fast as well? Key to track for Kalyan and Senco would be the pace of store addition and same-store sales growth, impact on margins due to increased franchise stores as well. The jewelry industry right now is close to 36 to 38% organized, as against 22% what it was in FY19. So organized players are growing 2 to 2.5 times industry average, whether that continues or not. For all of this, what are the valuations that you're paying? Titan earlier would trade upwards of 60, now with a 20% cut from its highs, is now coming at around 53 times 2-year forward earnings. Kalyan has increased drastically, so at 41 times it is just at a 20% discount to Titan, and Senco is at 28 times. So they are trading at valuations which are similar to the kind of market share that they have right now. But for Titan and Kalyan, that is one valuation check that one will keep an eye out on, as it has narrowed the gap between both Kalyan as well as Titan.
Okay, all right. So there's a complete analysis there on our value add segment in the jewelry space. Thanks, Banglam, for that. We'll take a short break, but on the other side, Manisha Gupta will be joining in on our commodity segment with Rajiv Budhiraja, Director General, Automotive Tyre Manufacturers Association. Stay tuned.
Climate change is on our doorstep. It's time for a revolution to take root. And it starts with 1.4 billion Indians. It starts with one tree for humanity, one tree for Mother Earth, one tree for a future. Project One Tree, a News 18 network initiative.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Dr. Saneen, you know, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, you know, one of the statistics that or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans.
Welcome back, and joining us on the show now is Rajiv Budraja. He's Director General at Automotive Tyre Manufacturers Association. Rajiv, hi, thank you so much for joining us. First of all, on the rubber prices itself, because we've seen stronger gains in last few weeks and months, holding around that 200 rupees per kg mark. How has that impacted the industry?
Well, first of all, I think rubber prices today are at a 13-year record high, having crossed 200. And now, you know, hovering around 205 and 6 mark. That by itself is, you know, from the consumer perspective, a point of concern. But I think more than that, it's the availability, you know, that is sort of, you know, become a major concern for the tire companies. Even at these prices, domestic rubber is not available. And there is hardly any visibility seen, you know, going forward also for multiple reasons. So at this point of time, both price and its domestic availability are the two major concerns for the tire industry.
Rajiv, tire industry demand itself, what is the number that we are working with in sense of an year-on-year demand growth?
Last year, our consumption was almost 14.25 lakh tons. This year, I think we are anticipating an increase of anywhere between 5% to 8%, which would be in line with the GDP growth. That's a number we have shared with Rubber Board also. And whereas on the production side, you know, we still continue to be around 8.5 lakh tons. So that gap of almost 40% between domestic demand and supply is only going to widen going forward. So that is, you know, the medium and long term overall, you know, shortage or shortfall between demand supply, that continues to be a concern. Although, as you may be aware, tire companies have collaborated with the government for rubber planting of 2 lakh hectares in the northeast, which we hope will take care of the incremental demand going forward.
That's good to know. Rajiv, also, since there is very strong demand within India, and as you said, the dependence on imports for a larger chunk is still there, how are you looking at the international markets? Because all the figures that are available globally as well suggest that it is going to be a deficit year in the global markets also, because by the end of March, we're looking at global inventory stock declining year on year. And when you look at the global study group numbers, those also are a bullish picture.
Well, climatic factors, you know, are putting pressure on rubber supplies globally across all the ASEAN countries, parts of Africa also. However, you know, the demand continues to be bullish primarily in India, you know, because China still hasn't come back, you know, in its earlier growth numbers. So I think whereas for the rest of the world and other countries, overall demand side, the growth may not be so encouraging, but India, thanks to our status of being the fastest growing emerging market, I think here the situation is quite positive from the demand side, whereas supply continues to be muted. And that's the reason, tire companies are now sourcing large quantities internationally so that there is no disruption in production.
Rajiv, also with budget around the corner, is there something that tire as a sector or rubber as a sector is putting forth as suggestions or expectations that you would have?
Our, if I may say, perennial demand continues to be that, considering the overall natural rubber situation that we just discussed, the deficit between domestic demand supply, the overall pressure of availability, Atma has always been seeking, duty reduction on rubber because this continues to be at 25%, which is much higher than the duty on tires. So the added, if I may say, concern is that there is a inverted duty structure for tire industry, and we hope, as in the past, that it will get addressed and resolved in this coming budget.
Okay.
Okay, all right, Mr. Buddhi Raja as well as Manisha. Thanks very much for taking us through that conversation. Well, on that note, we need to wrap up with the news that we have the Nifty, the Sensex, the mid-cap index, as well as the Bank Nifty trading with gains of around anywhere between 0.2 to 0.3%. It's a wrap on Halftime Report. Business Lunch up next.
There's cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So it's, I would assume, looking at the stats, that the rural problem would be slightly more because also availability of, toothbrushes, toothpastes and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
Stocks trade higher. The Nifty hits a fresh record high. Auto and consumer durables are the prominent gainers, while capital goods and oil and gas drag. And Maruti perks up after Uttar Pradesh waives the registration fee for strong hybrid vehicles. The move raises hopes of other states following suit, in a positive for Maruti, Toyota and Honda. Godrej Consumer slips after a strong run-up following its update of double-digit EBITDA growth in Q1. Concor 2 skids on volumes in Q1, growing far slower than its full-year guided growth rate. And Jupiter Wagons has a plan to raise near 500 crores. Pitti Engineering has an expected 360 crore raise, are the latest to join the QIP rush. Hello and welcome to Business Lunch. I'm Sonia Shenoy and you're joining me on a very bright afternoon on Dalal Street. Just look at the way the market is going. There's no stopping this rally at all. Every day that you think there's a consolidation coming, lo and behold, it's a big move on the market. 24,400 is here on the Nifty and it's only getting better as we speak. The Sensex is cruising above that 80,000 mark with hardly any effort, to be honest, and plenty of stocks in focus. For the last many days, Reliance has been contributing on the upside. Today, you have a lot of these IT stocks in focus ahead of their results later this week. And in the broader markets, there's plenty to look at. So, of course, we have our hands full, but let's kickstart with some action on individual stocks. Digital marketing company Affle is surging in trade after brokerage firm Citi initiates a coverage of buy on the company with a target price of 1,600. Rima tells us more. Rima.
Thanks so much for that. So first, just a quick word on Affle India. Now, Affle India is an ad tech platform which helps with your mobile and digital marketing. So basically, if you are an advertiser and you want to sell your product, you will contact Affle and give them a share of your marketing budget, and they will help you gain customers or users. So now Affle India focuses on 4 key segments: E, F, G, H. E stands for e-commerce, edtech, entertainment. F stands for fintech, FMCG, food tech. G stands for gaming, groceries, government. H stands for healthcare, hospitality, travel. Now, the company did go through a bit of a slow patch because of the funding winter for many of the startups, and therefore they had gone slow on user acquisition or customer acquisition. Then even the GST on gaming had hit them because they do cater to gaming also. But now Citi has come out with a note and they're saying that the company is a beneficiary of increasing digital and mobile ad spends. Some of the strengths of Affle, and these are noteworthy considering that they are competing with the likes of Google, Meta, Amazon and Apple in this particular space. They're saying that Affle India has a connection with over 3 billion connected devices. They have partnerships with mobile OEMs like Samsung, Xiaomi and other mobile operators, which allows the company to directly communicate with the device. They're also allowing enterprises, that's your advertisers, to directly help in advertising in regional languages in India or come up with personalized ads, largely more in tier 2, tier 3 cities. And their M&A track record has also been fairly decent, and that's helped them gain inroads in the developed markets only. So they have diversified away from India a bit. So Citi has initiated coverage. It's a target price of 1,600. They expect the top line to grow ahead of the industry growth rate. They also expect margins to expand by 300 basis points from 16% to 19%. And they go on to say the valuations at 47 times is below their long-term average of 56 times. But remember, just as a noteworthy risk, they are competing in a crowded space where the likes of Google, Meta, Apple, Amazon control 70% of the digital marketing spend. Back to you.
Okay, Rima, thanks a lot for that. So that's the big move that you're seeing on Affle right now. But the market is really taking center stage as we speak, and it is at the highest point of trade. So plenty of other stocks and news in focus. Let's get you an exclusive. Sources told CNBC-TV18 that Aegis Vopak Terminals, which is a subsidiary of logistics firm Aegis Logistics, is looking to file its IPO DRHP very soon. Yash is here to give us more details. Yash, over to you.
Well, Sonia, as you rightly pointed out, this is a subsidiary of Aegis Logistics, which is into the terminals business. And what we've been given to understand is that this subsidiary, that is Aegis Vopak Terminals, is expected to file its IPO DRHP with market regulator SEBI very soon. According to our sources, the IPO DRHP from Aegis Vopak Terminals could be filed with SEBI by end of September itself. The company could look at launching its IPO by the end of calendar year 2024. It's a large issue which Aegis Vopak Terminals is looking at. The subsidiary, let me first tell you, is a joint venture between Aegis Logistics, which holds about 51% stake in the company, and the Dutch multinational Vopak, Royal Vopak, which holds about 49% stake in the company. As far as the issue size is concerned, according to our sources, Aegis Vopak Terminals is looking to raise about 4,500 crore rupees through a complete fresh issuance as far as this IPO is concerned, which means that entire 4,500 crore rupees comes into Aegis Vopak Terminals. There won't be any dilution from the two partners, that is Aegis Logistics and Royal Vopak. And this 4,500 crore is expected to be used towards expansion purposes. Sources also give us some indication in terms of the kind of valuation that this IPO could give to Aegis Vopak Terminals, and that could be about 35,000 to 37,500 crore rupees. So of course, large valuation number, large fundraising through this particular IPO. The company, as we speak, operates a network of terminals located at 5 strategic ports in India. It has a total capacity of about 9.6 lakh cubic meters, and it's one of the largest tank storage companies for LPG and chemicals. As far as financials are concerned, on a standalone basis, the company's FY24 revenue from operations that grew by about 44%. FY24 net profit came at about 47 crore rupees versus a profit of 5 crore rupees. On a consolidated basis, the revenue from operations that grew by 59%, and FY24 net profit came at about 87 crore rupees versus a loss of 7 lakh rupees. We've written to Aegis Logistics on this particular development that we are understanding from sources, and the company in its response has denied this particular development.
Okay, but Yash, hang on. We are also seeing that a couple of life insurance stocks are in focus today. There are some business updates that have come through. Tell us more about that.
Well, that's correct. So as far as the first quarter is concerned, after that major rejig in life insurance companies after the taxation rules, the first quarter looks to be very strong across the life insurance industry with all the individual players. I will start with HDFC Life Insurance, and here what we've collated the data from Life Insurance Council. New business premium for HDFC Life Insurance has grown by about 11%. That is expected to come at about 6,500 crore rupees. Total APE has grown at 22%, retail APE has grown at 30%. APE is of course annualized premium equivalent for the company. Importantly, HDFC Life Management had guided for about 15% growth in total APE as well as retail APE for FY25. So with the first quarter, it's good to say that all's well with HDFC Life Insurance and its guidance. The stock is down 2% in the last 3 months, and it trades at about 2.4 times price to embedded value. For ICICI Prudential Life Insurance, the new business premium in the first quarter expected to grow at 24%, total AP expected to grow at 56%, retail AP expected to grow at 47%. Importantly, the management for ICICI Pru Life had guided for mid-teen APE growth for FY25, so well in line as far as that full year guidance is concerned. The stock is up just about 1% in the last 3 months and trades at about 1.9 times FY25 estimated price to embedded value. Max Life Insurance, the new business premium growth at 12%, total AP growth at 19%, retail AP growth at 27%. The management had guided for FY25 AP growth to be in high teens, VNB growth marginally lower to AP growth, and margins closer to 25 to 26%. Of course, again, well in line with that full year guidance. The stock is down 4% in the last 3 months, trades at 1.8 times FY25 price to embedded value. SBI Life Insurance, new business premium growth expected at 13%, total AP growth expected at 17%, retail AP growth expected at 21%. The management had guided for AP growth to be about 18% in FY25. Stock is flat in the last 3 months, trades at 2.2 times FY25 estimated price to embedded value. Finally, Life Insurance Corporation of India, new business premium growth is expected for the first quarter at about 25% growth, total AP at 31% growth, retail AP at about 19% growth. LIC management, interestingly, had guided for the AP growth to be a little more than 15%, VNB growth to be 300 basis points higher than the AP growth, and margins to be 19 to 20%. So, of course, again with LIC also, the first quarter seems to be very strong, puts the company in line with its full year guidance. The stock LIC is up just about 2% in the last 3 months, trades at just 0.9 times FY25 price to embedded value.
Got it. Okay, very helpful there, Yash. Thanks a lot for getting us up to speed on what's happening in the insurance sector. But moving on, the Uttar Pradesh government has waived the registration fees for strong hybrid vehicles. The move raises hopes of other states following suit, and that's a positive for Maruti, Toyota, Honda. It, of course, will help boost demand as well. Parikshit is here with more details on that. Parikshit, over to you.
The UP government had brought out an electric vehicle manufacturing and hybrid policy in the year 2022. Now, this brought about a complete exemption of road tax and registration on electric and strong hybrid vehicles. The hybrid cars were also included in this policy. Now, while the exemption on electric vehicles as part of the policy was implemented from the year 22-23 onwards, the clause on exemption for strong hybrid cars was not for some reason. Recently, we believe, according to the Federation of Automobile Dealers, a customer went to court and got relief, and the court ordered the UP government to start giving exemption on strong hybrid cars under the policy as well. So from the first week of July, buyers of hybrid cars in Uttar Pradesh have started getting a 10% exemption, which means a complete exemption from road tax and registration charges on a strong hybrid car. So this literally brings down the cost of your hybrid car by about 2 lakhs. So if you were buying a Toyota Innova Hi-Cross for that matter, the cost could come down anywhere in the range of 2.5 to 2.6 lakhs. If you're buying a Grand Vitara hybrid, which costs around 19 to 20 lakhs, your cost could come down by about 2 lakhs or so. So this is a big benefit, so to say, but this has happened on the orders of the High Court. Toyota and Maruti are the companies which are selling hybrid cars in India, so this is a big boost for them. Nationwide, companies have been asking for tax relief on hybrid cars. That has not come through the GST Council. It's not been taken up either by the GST Council either. But for the moment, this is only applicable in UP, a 10% tax reduction and complete waiver on road tax and registration charges on hybrid vehicles in Uttar Pradesh.
Okay, let's take a short break on that note. Parikshit, thanks a lot for that. We'll get you lots more news and updates when you come back on the other side. Stay with us.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been absolutely.
Welcome back to Business Lunch on CNBC TV18. It's a great day for the market. It's a good sunny afternoon on Dalal Street and hope you're having a good one too. One of the stories of the year in the market has been the stellar run enjoyed by shipbuilders, with stocks turning multi-baggers in the first 6 months of this year itself. But as valuations soar and mutual funds sell stake to retail investors, is this the time for caution? Hormuz is here with an analysis. Hormuz, over to you.
Well, 145%, 318%. And 206%. Now, these are not long-term returns of some stocks that were held for decades. Now, this is how much Mazagon Dock, Cochin Shipyard and Garden Reach Shipbuilders have returned to their shareholders respectively in the first 6 months of the year and the first week of July put together. Now, these are the kind of moves that these PSU shipbuilders have seen so far. Now, last week itself, all of these three names were up at least 30% each. Now, at the start of the year, these three shipbuilders put together were valued at close to 75,000 crores. Today, that is the value of one Cochin Shipyard alone, which has been an outperformer among the three. Now, Mazagon Dock, which has seen the biggest moves among the three in the last week, crossed 1 lakh crore in market cap on Friday and even crossed 1.1 lakh crore. The stock had an IPO price of 145 rupees. In under 4 years, that stock has surged over 3,500%. Now, Cochin Shipyard's market cap from just under 20,000 crore at the start of the year is also nearing 80,000 crore rupees. Garden Reach's market cap too has tripled along with the stock price. Now, with these kind of moves, the valuations would be the first thing that would come under question. Mazagon Dock's valuation cannot be compared to its 5-year average since it listed only in October of 2020. But take a look at Cochin Shipyard. It is trading at an FY26 estimated price to earnings multiple of 62 times. Its 5-year average, 14 times. Even Garden Reach is trading at 50 times 1-year forward earnings, while its 5-year average is just 16 times. Now, investors who have held these shares would certainly be laughing all the way to the bank, but the bigger shareholder who is doing so is the government. Now, the June quarter shareholding of these stocks is yet to be uploaded, but as of March, the government had an 84.8% stake in Mazagon Dock, which is above the minimum shareholding norms. Now, there have been reports doing the rounds of a possible OFS, and if that happens and the government does sell that excess stake to comply with the MPS at Friday's high, it will fetch them well over 11,000 crore rupees. The government is MPS compliant in the other two stocks, but its value in these have also seen a substantial bump up after this move. Well, they say put your money where the mouth is, and the small shareholders leave no stone unturned in trying to be part of a trend. Now, take a look at this. Both Mazagon Dock and Cochin Shipyard had close to 1.6 lakh small shareholders, meaning those with an authorized share capital of less than 2 lakh rupees. Now, as of March of 2023, this is the figure. Now, in just a year, that number is nearing 4 lakh. Now, Garden Reach, where the number has also doubled from just under 60,000 to well over 1.2 lakh. But then who has been selling these shares to the small shareholders, particularly in names like Mazagon Dock, where there is a lack of float anyway? Well, no surprises, but institutions. Now, institutional holding in all three stocks has declined from the levels of March of 2023, with the biggest drop seen in Cochin Shipyard. Just a disclaimer, we are considering institutional shareholding as both domestic and foreign holdings combined. All three do not have significant analyst coverage as well. Mazagon Dock has 4 analysts tracking the stock, with 3 of them having a buy recommendation. However, Friday's high of 58.59 that the stock has seen is well above its highest price target of 3,724. Now, ICICI Securities came out with a note in June with a sell rating on Mazagon Dock with a 900 rupee price target, saying that all the positives are priced in. Now, since that note was released, the stock has surged 75%. Such has been the frenzy. Cochin Shipyard too tested levels of 3,000 rupees on Friday, which is also higher than its highest price target of 27.59, and it also has 6 analysts tracking the stock. The extreme here is that the lowest target on the stock is 740 rupees. Now, Garden Reach has 3 buy ratings out of the 5 analysts that have coverage on the stock, and that too trades above its highest price target. So this is how the shares of these shipbuilders have done recently. For those who have the shares, they've been nothing but a lottery ticket. And a move like this would always warrant some caution, but there are still enough and more shareholders who would be wanting to buy at these prices. The last thing they would want to hear is that ship sailed long ago.
Oh no, for people who've missed out on this rally, the ship has sailed long ago. All right, well, time for some caution, but very, very helpful there, Hormuz. Thanks a lot for putting that into perspective for us. The mysterious and phenomenal move in some of these shipbuilding stocks. But let's also get you a big voice from India Inc. We spoke to Puneet Chatwal, the MD and CEO of Indian Hotels earlier today. He said that the company is targeting 10% revenue growth over FY24 and will add 10 to 12 Ginger hotels every month. Listen in.
The job of the management is to navigate through all kinds of headwinds. As in the past several years, I remain cautiously optimistic about the guidance that we have given. And the guidance that we have given is a 10% growth in the top line over last year with or without G20. We think we are on track. And if the growth of Ginger starts in the way we have been thinking it should, like adding at least 10 to 12 a hotel a month just with the Ginger brand, then it starts diluting the overall average achieved rate, because a Ginger brand would do like 4,000 or 5,000 rupees as an average rate, whereas Taj would do north of 15,000.
Okay, let's take a short break on that note, but lots more coming up on the other side, so do stay tuned in.
Climate change is on our doorstep. It's time for a revolution to take root. And it starts with 1.4 billion Indians. It starts with one tree for humanity, one tree for Mother Earth, one tree for our future. Project One Tree, a News 18 network initiative.
Cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
And what a great way to celebrate our own 25th year, with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter-century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com.
Welcome back. You're watching Business Lunch on CNBC-TV18. Well, on to the political deadlock in France. The French leftist and centrist parties successfully blocked the far right from gaining majority in the recent elections. But a new crisis emerges as the race for control to the country's National Assembly is still to be determined. CNBC's Charlotte Reid brings us the latest on how France is planning to wade through this problem.
Well, Karen, it's a bit of the day after the party kind of feeling. Of course, all those parties that put an alliance together to try and block the far right successfully. Happy yesterday that they managed to do that and put the far right in third position. But certainly now the reality is kind of crashing on them, because who can form a government and who can reach a majority? All these three blocs in the National Assembly, including the left-wing bloc that came top, are very, very far from an absolute majority. The Nouveau Front Populaire that came in first position have 180 seats in the National Assembly, where we just standing now. The magic number is 289, so they are very, very far. Now they keep insisting that they came as top group, so they should be the one to have a chance and form the government. But certainly that's what the tradition would require normally, President Macron to name the top bloc, to name the Prime Minister. The thing is that bloc cannot even agree on who could be the Prime Minister candidate, because as we know, it's a group that was put together very, very quick, just 3 weeks ago, for the snap election, but on very deep issues and policies, they have some disagreement. So they have to agree on one name. And that's what they're trying to work on this week. They are meeting all along this week to try to come up with some solution and potentially a name for Prime Minister. Try to find a consensual name, because we know, for example, that Jean-Luc Mélenchon, the leader of La France Insoumise, one of the parties in that left-wing bloc, is too much of a polarizing figure. So they try to find someone maybe from the socialist camp that is a little bit more open to negotiations with other groups, because that's the key here. They will have to make some alliances with some other MPs from other groups, including President Macron's party that came second in this election. So we have to wait and see, because here again, it's not part of the French political tradition at all to make any sort of alliance or coalition. But given the fragmentation of this parliament, they might have to find a way and learn to work with other allies in the National Assembly. So what's at stake this week really in the government? Well, President Macron, as you heard, rejected the resignation of the current Prime Minister Gabriel Attal, so he can run the current affairs, because there's a lot of challenges like the Olympics starting in just 2.5 weeks here in Paris, and all the challenges around security. So the current team will remain in place until a new team can be put forward. But here again, it's very unclear on when that will be possible. So now, when it comes to the economy, where we heard from S&P yesterday talking about how they anticipate that the resulting government will struggle to implement meaningful policy measures, and that they will face persistent risk of a vote of no confidence. So that's what's at stake here, all these risks. And there's one thing that business doesn't like is uncertainty. And we heard from the MEDEF, the Employers Association, yesterday saying we want people to come with a solution, because we need the economy to keep moving forward, because there are a lot of risks out there. So again, a lot of unknown, uncharted territory when it comes to French politics, and the centrist parties here have a big responsibility of trying to put an alliance together, because otherwise this will bring more fertile ground for a potential far-right win for the presidential in 2027.
Okay, that's the latest on the political deadlock in France and all the action there. But with that, it's curtains down on this edition of Business Lunch. Don't go anywhere. Midcap Radar will pick up all the market action in just a bit. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Dr. Saneen, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics...
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Kayar. It's a new high for the Nifty yet again. We see one down day and then the markets come back, and how. It's a lot of these consumption names which are contributing. We do have earnings which have started trickling in, at least from the mid-cap space. But this is a week where we'll get the big earnings as well, so a lot to track.
Lot to track. IT will be in focus, especially towards the later half of the week, given the fact that you'll have so many of the IT companies that are going ahead and giving their numbers. Quite a lot lined up on the show. Let's start off with the top headlines today. Stocks trade firm. The Nifty hits a fresh record high. Auto and PSU banks are the prominent gainers, while metal, IT, along with oil and gas track. Mid-caps relatively underperformed.
Some of the chemical sector stocks surge after positive commentary from UBS. The brokerage issues a buy call with a target of 4,800 rupees for PI Industries and a target of 4,250 rupees for Navin Fluorine. They say pressure from China capacity additions may have peaked out for the sector.
Tea stocks like Harrison Malayalam, Jayashree Tea and McLeod Russell surged between 10 and 15% after tea production declines due to the extreme weather conditions. India production in the month of May declines by 30%, while prices surged 20% on a year-on-year basis.
CESC surges over 6% after it hikes its tariffs in the Kolkata circle, levies fuel adjustment charge at 40 paise per unit. IIFL says the tariffs should be good to cover CES incremental fuel costs and ensure complete cost recovery. Okay, all right, those are the top headlines for the markets. It is a 100-point uptick for the Nifty today. We are above the 24,400 mark at the day's high. It is not led by banks. It is not led by any other major heavyweight, but by a consumption name. So the Nifty consumption index, that is higher. We have the auto names which are doing really well, Maruti being that top gainer today. What is not doing so well is the metal index, which is slightly in the red. The energy index is also coming for some profit booking, but mid caps are doing very well, 0.2% higher there. Of course, it is still underperforming the benchmarks, but it is turning out to be a decent day. It has come off from the highs, and the advance decline ratio for now is in the favor of advances.
In favor of advances, we're also seeing data that's come in from AMFI as far as the mutual fund is concerned. We'll discuss that in greater depth going forward in the show. But at this point of time, it's a record monthly. Just looking at the numbers, the net equity inflow is at over 40,252 crore, and this is higher by almost 6,000 crore on a month-on-month basis. So it's a very strong number at the offset.
It's a record monthly flow, and that is something that we saw last month as well. That is what we spoke about, that it was highest ever inflow figure in the equity funds. And again, that is the case this time as well. Net equity inflow has come in at 40,252 crore rupees, which actually compares with a number of around 34,670 crore rupees in the month of May itself. It has been consistently increasing, and a number of 40,000 crore rupees, as we've been talking about it being at record high, has not been seen earlier at all. So looking good for the equity funds for sure, and that is something we've seen in the markets as well. The recovery that we saw after that 4th of June number and the election results as well, that has continued into flows into equity funds as well. Of course, we'll want to know what the large cap figure has looked like, what the small cap figure has looked like as well. And we'll get in reactions as well in just a bit. But
also
for now, the initial
track will be the monthly SIP number.
That is always important to track, of course.
April,
that is the important number. And it will be out at 2 p.m. in the conference call. So that is what we'll be awaiting. We are awaiting for more numbers as well. I'll just take a look quickly because there are a whole host of numbers that we have to look at. We'll go to that in just a bit and talk about it in greater detail. But let's welcome Shrikant Chauhan from Kotak Securities for a technical check on the markets. Shrikant, good afternoon. Thank you so much for joining us. Well, if you can quickly tell us the levels to watch out for on the Nifty and individual technical picks as well.
Yeah, good afternoon, Sonal. Good afternoon, everyone. I think, the markets are they are in the range. I'm not expecting any major activity on either side. But yes, if there is any correction in the market, then close to 24,200, 24,100, the market is having excellent support. So there we can look for adding some index heavyweight stocks. But at these levels, the rotational activity is on and we are seeing broad-based activity. Yesterday, oil and gas stocks were in limelight. Today, we are seeing some activity in FMCG and consumption-related companies. So the broad-based activity is still doing much better. And I think if we just go through with the any specific stock, then in that we like Max Financial, MFSL, which is currently quoting around some 1,010, 1,015. MFSL is like into breakout mode, and it has spent a lot of time within the range of 1,020 and 980 on the downside. Based on its technical formation, the next level to watch out for would be somewhere close to 1,080 or 1,100. So Max Financial is a buy at current levels with a stop loss close to 990. And the other stock on which actually Vivek was also talking, that is Latent View. I'm going to say all these IT companies, they are finding some support and we are seeing some buying interest in IT companies. So in that, Latent View looks good at current levels around 520. There we are expecting target somewhere close to 560 or 570. So it's a buy at current levels with a stop loss close to 490 on the downside.
Okay, all right. Thank you so much, Srikanth. So we have some more numbers coming in on the YAMFI data. The large cap funds have seen an inflow of 970 crore rupees, which compares with an inflow of 663 crore rupees. It's quite understandable because of the way Nifty has moved. We've seen that big move on Reliance Industries. We've seen that big move in some of these IT names. So the sectoral rotation is something that is seen in these numbers as well in the large caps. Small cap funds have seen an inflow, yes, but it has seen a decline versus the last month. So 2,263 crore rupees versus 2,724 crore rupees. That's the month-on-month number. The mid-cap flows also have slightly ebbed on a month-on-month basis. It just goes on to show how money is flowing back into large caps. Some of these bigger names that we've been talking about, the consumption names, be it HUL, be it the likes of Britannia and the other buzzing stocks in that particular sector. If we talk about one theme that has continued to do well, it's the sectoral or the thematic funds. There, the inflows have come in at 22,351 crore rupees. And you know, that is a big number. There have been a lot of NFOs. There was the Mirae Automotive Fund, the SBI Automotive Fund as well. All of these sectors, sectoral funds, are something which are putting a lot of money into the space as well. And that's why sectoral or thematic funds have done really well. So 22,351 crore rupees, that is the big number that we should talk about. There were 17 NFOs that mobilized inflows worth 15,227 crore rupees in the month of June. And that's why we are seeing that big number on the equity side as well. And we are seeing that big number in the sectoral funds as well. That's a very important number, and the graph for that should also come up for you on the screen. Apart from that, the dividend yield funds, 520 crore rupees is the inflow there. We'll just watch out for the debt funds as well, how they've done. But overall, it's a decent number, and the NFO rush is something for sure that is aided to all the numbers that we've been seeing. New fund offers, just look at that. It's 15,227 crore rupees, which compares with 10,140 crore rupees. Hybrid funds have actually seen a lower inflow this time around of 8,855 crore rupees, which compares with 17,990 crore rupees. Now remember, when people were not investing or very confused about where to invest, hybrid was one category which was doing really well, but that has seen inflows ebb a little in the month of June. Liquid funds continue to do well. There is an outflow again of 80,354 crore rupees. ETFs have seen an inflow of around 9,134 crore rupees. But again, as we said, we'll be discussing it with our guest very soon. But okay, so we do have Sandeep Bagla of Trust Mutual Fund joining us now. Sandeep, good afternoon. Thank you so much for joining us. Well, it looks like a lot of these flows are led by NFOs as well. But what do you make of the initial numbers? We have large caps seeing higher inflows, mid and small caps seeing some ebbing of flows here.
Yeah, so, the lion's share of the money has been mobilized through sectoral funds. So people are basically taking concentrated bets on specific themes. And I think people have invested in diversified funds for so long. So I think this is a good, diversification in the sense that people are taking now specific bets for the next 3 to 5 years, I guess. So even with the NFOs, and I think post NFOs also, these funds would have grown in size.
Sandeep, what's actually quite stark in this particular monthly number is the fact that the pace of inflows that were very strong both in the mid-cap and small-cap category seems to have just slowed off a little bit. What do you attribute that to? Is it purely the kind of levels that those indices are, or is there more risk-reward favor in towards the large-cap funds?
No. So investing is, there is always some element of a flavor of the season. So I guess, there are a lot of expectations from the budget. See, if you look at the thematic funds also and the sectoral funds, they will have an element, a very large element and component of small and mid-cap stocks. So I don't think it is only the valuation which matters here. I think the entire distribution industry is concentrating on the new themes, and people are very confident of the themes like defense, consumption, manufacturing, and all these schemes are now attracting investor attention and some distribution push also. So it is not the valuation, I think it is more diversification from an investor's perspective and taking some specific bets on specific sectors, probably with the budget in mind, probably with the announcements that are likely to come and benefit for the industries for the next 3 to 5 years.
The way we've seen that money flow into NFOs and the new fund offerings in the month of June and even last couple of months, that just speaks about how much there is appetite for newer themes. This time around it was automotive. Now we have the energy fund coming in from ICICI Pru. We'll have to see what kind of reaction it gets. But yes, definitely NFOs are driving a lot of money. Hybrid category, that is one category I want to speak to you about, Sandeep, because it has seen a decline, around 8,000 crore rupees of flows versus almost 17,000 crore rupees last month. What explains this fall? Because usually, or after whatever changes happen with debt funds, or because of all the confusion, people were like, okay, let's move to hybrid, this would be a safe category. What do you make of that?
I think it reflects basically the growing confidence in Indian markets. See, the Nifty returns has been spectacular. Mid-cap, small-cap returns have been no less than spectacular this last month. And if you look at the current calendar year, so current calendar year, I think mid-cap and small-caps have given a return of almost 20 to 22% at the index level. So that is giving a lot of confidence to investors. And the incremental allocation is tilted towards greater risk. So, which is why probably the hybrid schemes are getting lesser allocation. And it is a part of, the momentum trade that, you would like to be more with the market. You would like to take greater equity exposure. And so far, it has been paying off quite smartly.
Sandeep, one more important aspect will be the SIP numbers that will be out shortly, when AMFI hosts the call. April onwards, we've actually seen the number trend over 20,000 crore on a monthly basis. Given that is sticky money, do you see that particular trend continuing, or at these elevated levels, do you feel there could be some slowdown as far as fresh inflows are concerned?
No, I don't see that number coming down. There is a whole machinery which is working towards mobilization of SIPs. And also investors, some of the investors, you'll be surprised to know that they believe that the SIP is a separate category of investments. They disassociate it with mutual funds as a category. So they believe they are investing in SIPs, and SIPs has gathered a momentum of its own. So I don't see SIPs coming down at all, unless there's some liquidity tightness or there's some big shift in consumer investor preference. I think this will continue to grow for at least few more months to come.
Okay, all right, Sandeep, thank you for your take. In fact, we also have one more guest joining us, Suresh Soni of Baroda BNP Paribas Mutual Fund joining us now. Suresh, good afternoon. Thank you so much for joining us. Well, just wanted your take on the mutual fund numbers, the higher inflows in the large caps, big flow into the equity funds overall. Do you think it's driven by what we have seen with NFOs and sectoral funds, or do you think this could be a sustainable trend going forward?
Sure. So first of all, the overall AUM has touched a new high of 60 lakh crores. So if you just look at it, the industry just about 10 years back used to be 10 lakh crores industry. So it took us about 50 years from start of UTI to about May 2014 to reach a total landmark number of 10 lakh crores. And just in the last about 7 months, from December till about end of June, that's about 6 months, we have added fresh 10 lakh crores from 50 lakh crores to 60 lakh crores. So I think this is a good momentum that we are witnessing now in the mutual fund flows, where the previous 10 lakh from 40 to 50 came in about 13 months, and the last 10 lakhs from 50 to 60 came in just about 6 months. This is essentially on the back of increased awareness in the investors, increased participation that we are witnessing, and as well as the culture of SIP that we have started seeing. And that has continued consistently at about 20,000 crore plus for the last several months. And that is leading to a sustained inflow into the market.
Okay. Thank you so much, Suresh, as well as Sandeep, for joining us. It's a very good set of numbers, at least as the first take. We'll wait for what the actual monthly SIP numbers are as well. Let's now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
I was reading indicated that we just don't feel the need to brush more than once a day.
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning, to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly.
Welcome back to Midcap Radar. One particular trend that yesterday we highlighted, and especially some of the railway stocks that we highlighted yesterday, we told you about how some of them were trading at quite high valuations, and the kind of run-up that these stocks had seen had been quite high, especially in the last month and the last year. Today, a lot of these railway stocks especially are seeing quite a bit of a sell-off, in fact seeing quite a bit of profit booking from high levels. So if you look at the intraday chart of names like RVNL, Ircon, RITES, IRFC, all of them seems to have cooled off from the day's highest point. They had opened up in the green, but today you are seeing certain amount of sell-off. In fact, RVNL day's high close to 620 mark, now much lower, even IRFC. The other set of stocks that also today seem to have cooled off are the shipbuilding companies. So look at names like Garden Reach Shipbuilder, look at names like Cochin Shipyard, look at names like Mazgaon Dock. These stocks today seeing a bit of profit booking. Now moving on, rice stocks today are buzzing in trade as reports suggest that the government may review restrictions on rice exports. In our segment Midcap Spotlight, Vamakshi will be focusing on the rice stocks.
Well, absolutely. KRBL and LT Foods, all of these counters are abuzz in the trading session today after reports are suggesting that the government may review restrictions on rice exports. Now, before we get into that, let's also understand the current landscape, the current restrictions in place. The first one being that basmati rice can only be exported above a set floor price, that is the minimum export price or MEP. Keep in mind that the government revised the MEP to $950 per ton last year itself. The other restriction restriction is in terms of parboiled rice exports. They are subject to nearly 20% export duty. Non-basmati rice and broken rice exports are also completely banned. The proposed changes, as per the report, suggest that the government could replace the export ban on non-basmati and broken rice with a fixed export duty, as in the case of parboiled rice. They could also reduce the minimum export price on basmati rice, is what the reports are suggesting. Now, largely the impact is expected to be sentimentally positive for both of these counters, and I say sentimentally positive, and that is because in the past con calls, both of these companies have highlighted that the average realization for basmati exports is already above the MEP, so largely there is no impact as far as this restriction is concerned. Non-basmati accounts for a relatively smaller portion for them as well, and as a result, there is not much of an impact there as well. So overall, this development seems only sentimentally positive for all of these counters.
Okay, all right, Vamakshi, thank you so much for joining us with all those details and for that clarification as well, that it is just a sentiment positive on the back of which we are seeing those big moves in rice stocks today. But Kalyan Jewellers, Senco and Titan are in focus following their Q1 FY25 business updates. Mangalam is here with more details and analysis of what happened with each of them. Mangalam.
Well, the jewellery sector is, the verdict is out now for the first quarter. And as you see, Titan's doing well today. Kalyan Jewellers is seeing some bit of profit taking, and the big decline is what we're seeing on Senco. What do we know so far of the updates that are there so far? Kalyan has actually shown a revenue growth of 29%. Senco has shown a growth of 11%, whereas Titan has shown a growth of 8%. Now you would wonder, why is it that Titan, being the biggest of them all, is growing at the slowest pace? Well, the biggest reason is that because it is the biggest of them all, base effect may be catching up. If you look at the last year's revenues for Titan, Kalyan and Senco, Senco is just about over 5,000 crores, whereas Kalyan is around 18,500 crores. Titan's jewellery business did revenues of almost 42,300 crores with margins which are 500 basis points over and above the industry itself. So as a result of which, even if they added around 11 stores in the first quarter as against Kalyan, which added 13 stores, on a high base of 490 stores, 11 stores is a 5% addition, whereas, we are seeing 11 stores is a near 2% addition, whereas for Kalyan, a 13 store is a lot more. It's a 5% addition. And for Senco as well, which has 165 stores, 6 store addition aids their growth. So if you look at the headwinds and tailwinds of the industry in the first quarter so far, the biggest headwind is a 20% increase in gold prices. There were lower wedding dates, there was the heat wave, elections, all of that impacted overall consumer sentiment. But the big tailwinds came across to a lot of the smaller players. So we had store expansion. Akshay Tritiya actually did well. So telling you that underlying demand is good. It's just that the street is waiting for more occasions. Higher growth coming in modern formats, the likes of Carrot Lane and Candier for Kalyan Jewellers, as against the overall company growth itself. So what is it important to track going forward for Titan and all the other players? For Titan, additional penetration of stores. They're still at around 490 stores. Let's see at what pace can they increase Tanishq stores, and at what level of the unpenetrated areas do they go ahead and open stores. Faster growth of newer players is something that we'll watch out for, and growth in optionalities for Titan along with the competitive intensity. And finally, if you look at the valuations, Titan trading at around 53 times, Kalyan Jewellers swiftly narrowing that valuation gap at around 41 times, and Senco trading at a big discount to the other players. But then again, it's the Titan versus Kalyan valuation gap that we need to keep an eye out on.
Thank you so much, Mangalam, for putting that into perspective for us. Let's now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Climate change is on our doorstep. It's time for a revolution to take root. And it starts with 1.4 billion Indians. It starts with one tree for humanity, one tree for Mother Earth, one tree for our future. Project One Tree, a News 18 network initiative.
Also, availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
Welcome back to Midcap Radar. Well, the benchmark indices continue to trend higher. The Nifty continues to hold above the 24,400 mark. The Midcap index continues to trend above the 57,000 mark. We had the AMFI numbers just now, and the numbers were quite strong. We'll wait for the SIP numbers. Some stocks from the broader end of the markets that are doing quite well. Have a look at Rain Industries. Stock up almost 6% in the session today. Union Bank yesterday came out with operational details. Good set there. Stock up almost 5%. Have a look at Apollo Tyres today. Tire stocks recently have taken price hikes, and this is something that is aiding the upmove as far as the stock prices are concerned. And certain sugar stocks today, like Balrampur Chini today, are doing quite well. Apollo Tyres, Balrampur Chini, even the Pharma Pack last couple of trading sessions has been under the weather. They have seen some selling pressure, but Aurobindo Pharma today has bounced back quite sharply, up almost 2.5% in the session. But that's all the time we have on this edition of Midcap Radar. Mutual Fund Corner when we return.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial.
Hello and welcome to MF Corner. I'm Sonal Bhutra in the Mumbai studio. And before I introduce the guest for today, let's talk about the AMFI data. We just got the numbers a while back, and it is important to talk about them and throw greater detail and throw greater analysis on that as well. So we got the equity fund number. This time around, it has come in at a record high of 40,573 crore rupees. Considering the moves that we've seen in the markets in the month of June, this is something which is not a surprising number at all. And we've seen a lot of money coming into the large caps as well. So this time around, if we talk about the large cap funds, the inflows have been at 970 crore rupees, which compares with 663 crore rupees that we saw in the month of May. Of course, it's still lower than the 2,100 crore mark that we saw in the month of March. But yes, there was a lot of interest in large caps this time around, be it Reliance Industries, be it HDFC Bank, or be it some of these consumption names as well. So that has translated into flows into the large caps. Small cap funds, the inflows have ebbed a little. So 2,263 crore rupees, those are the inflows, which compares with a monthly number of 2,725 crore rupees in the month of May. This number still is above that 2,000 crore of monthly mark that small cap funds have been seeing in terms of inflows. Similar is the story with mid cap funds, where the June inflows have come at 2,528 crore rupees. This is slightly lower than what we saw in the month of May. Now, hybrid funds, let's talk about that because they've been seeing a lot of flows in the last couple of months. It ebbed a little in March, but this time around again in June, we are seeing that big drop that has come by. It is coming at 8,885 crore rupees, which compares with 17,991 crore rupees that we saw in the month of May. Let's talk about what led to all these numbers. There was a big inflow coming in from NFOs. So new fund offers, they saw inflows of 15,227 crore rupees, which compares with 10,140 crore rupees on a month-on-month basis, and a lot of it in sectoral funds, because we've seen how sectoral funds have seen a lot of interest. A lot of these NFOs have come in the sectoral funds. So that is the number that you should be watching out for. Big inflows there, 22,352 crore rupees. I think this number also is at a multi-month high. So this is the picture as far as the mutual fund data is concerned. In just a bit, we'll be talking about the systematic investment plan numbers, or the SIP numbers as well. It was at record high last month, near the 20,000 crore mark, and we'll see which way things go in the month of June as well. So that's the synopsis when it comes to the monthly AMFI data. Now let's get in the guest for today. I have with me Karthik Jain, MD and CEO of Shriram AMC, and Deepak Ramaraju, the Senior Fund Manager, Shriram AMC. Today we are going to talk about their investment strategy, their top funds, more ideas, and the outlook for investing in markets and mutual funds as well. Gentlemen, good afternoon, and thank you so much for joining us on MF Corner today on CNBC TV18. Mr. Jain, let me first start with the response to the Nifty one-day rate liquid ETF that has been listed today. Just wanted to understand, who is the instrument generally suitable for, and how is the Shriram ETF different from the others?
Thanks for having us here on the program, Sonal. So the Shriram Nifty one-day rate liquid ETF, of the ticker symbol liquid Shri, is a product that actually invests in the overnight money market. Therefore, it's fairly secure, stable in terms of the returns. It's an ideal product for customers or investors who have surplus cash, which they would like to park through demat accounts in a product that gives fairly stable returns. Also for traders, and therefore also gives them, maybe more returns compared to a savings account, right? For traders, this is once we have the margin approval, this product can be used by them as collateral for margin pledge, and also for cash equitization, where if you sell a particular stock, and if you have a running account with your broker, you can same day move the money into a liquid ETF like this, like liquid Shri. The other point about this product is it's a growth plan, it's a growth option, and it has benefits like it avoids the need to track fractional dividends, because here the returns are reflected in the daily NAV. You also have a more easier tax calculation, because you only pay the capital gains tax when you redeem the fund, and not with every dividend payout. And finally, because the returns are come in every day, you have daily compounding in the growth option. So all in all, a very unique product that meets specific customer needs and helps in cash management in a very easy and a simple way.
Okay, take that point. Thank you for that explanation. And an expert advice is needed in such instruments where people want to invest, but sometimes it's difficult to understand that as well. Mr. Ramaraju, let me come to you. Let's try and understand more about AMC's strategy and a lot more. Can you explain what is the EQI model that the AMC follows? What does it entail, and what do you plan to achieve with that?
Thanks, Sonam. Thanks for having us on the show. EQI stands for Enhanced Quantum Investments. So it's a fund house philosophy that we are following across all the schemes in our company. So it's Enhanced Quantum Investments, combination of quantitative investments and fundamental analysis as well. So it's a combination of both quants and fundamentals coming together to form the quantitative quantamental framework. So here what we are looking at is the quantitative analysis acts as an input for our fundamental analysis, basically. So we have a team which is a quantamental team, which consists of both quant analysts and as well as a fundamental analyst, working together, forming the quantamental framework, basically. And the quantitative analysis involves a lot of factor models where we look at trying to analyze companies, shorten the universe basically, and then try to minimize the kind of simplify the research process. Once we simplify the research process, that will act as an input to our fundamental analysis. Basically, we are looking at shortening the NSE 500 universe, or for that matter, NSE 100 universe, come down to a shorter set of universe where the stocks are driven by the factor models. Those universe of the smaller universe is used as the fundamental analysis. The stocks are further refined, and then kind of the fundamental analysis overpower that, and then kind of relook into that in detail, build a conviction around that, look at the fundamental analysis aspect of it, and then based on that, finalize the portfolio of stocks. The fund managers pick stocks based on this aspect, basically.
Okay, all right.
So it's a,
yes, please go ahead.
so the fundamental analysis finally will be like kind of overpowering the entire quantitative analysis. It's a combination of both quantitative and fundamental. So the main advantage that we get here is that we're able to kind of identify the winning set of stocks based on different factor models like your momentum, volatility, or valuation. That will enable us to identify kind of a sustainable trend and also deliver sustainable alpha in the medium to longer term. And that actually, the fundamental analysis actually looks at individually the stocks and build a conviction around that based on the stock models delivered by the quantitative analysis. So that conviction actually helps us to build a sustainable portfolio in the longer run. So that's EQA for us, basically.
Okay, thank you for explaining that and making sense of what the strategy Shriram AMC is following here. Mr. Jain, let me come to you. I wanted to understand what is the current AUM of the AMC. How has it grown over the last couple of years? And you know, you've been in the market for a very long time, but this number is not as big if we compare it to the mutual fund industry's AUM. So what is the plan to grow this number?
Yeah, so our current AUMs are above 750 crores. And if you look at the number we were in March last year, we were 272 crores. We've grown over about 2.5 times since the last March. So as we're building out our, our products and our distribution. So the AMC is now in a pivot and transformation mode, where we have launched what's called SAMC 2.0 or Shriram AMC 2.0, where we are rejuvenating and refreshing what the AMC stands for. There are three key pillars that we are using to drive sustainable growth. 3 Ps, if you will, the way I call it: the performance, product, and placement, as in distribution. So performance, like Deepak mentioned, is that we're focusing on the EQM model. We are going out there and saying we're a quantum metal fund house. And we deployed this very efficient, effective, sustainable alpha generating quantum metal approach to all our equity funds. And the impact is such that our funds have moved. We deployed this model in September last year, and all our funds have moved from quartile 4, quartile 3 to quartile 2, quartile 1 performance. That's the first P, the performance part, and we have built credibility in that space. Second is our product. We are launching products that essentially cover the risk return spectrum that a customer looks for. So be it equity funds that give a higher return and at a higher risk, where we have our equity, we have a flexi cap or our tax saver, or be the shorter end, we've got debt funds with lower return and lower volatility or lower risk. And we also have our bouquet of hybrid funds. So we are, even today's launch of Liquid Shree essentially deepens our debt solutions, and strengthens out this portfolio. That's the second P. And we'll continue to launch differentiated, unique products that meet customer needs in a very relevant way. The third, of course, is the third P is placement, where on distribution, where we are having a two-pronged strategy. We are working very closely with the Shriram Group channels. The Shriram Group has a very large footprint and strong brand trust, and across their entire branch network, their agents, the customers, even employees, to deepen that ecosystem. And we also parallelly, second leg of our strategy is to reach out to the external distribution channels. Mutual funds still remains a distributor-led, primarily distributor-led kind of industry. And the group, Shriram Group, is known for working with channel partners closely to build the businesses, right? So we're working closely with distributors and going out to them and showcasing our approach, a quantum metal approach, a very customer-based product positioning. And I must say that we're getting very strong, very positive traction with all the distributors who we meet. And they've clearly said that this particular quantum metal approach and the results, no other, not many or none, no other AMCs might be following an approach like this as a quantum metal fund house. So that covers our penetration and building a strong placement. Idea being that reaching out, making sure that our products are available to our customers. A final point there, today's product, Liquid Shree, also is available on the exchanges, and any customer can access it through their demat trading account. So again, we're making sure that the products are available to the clients. So this 3P strategy is what we are driving. We believe that if we get this right over time, it'll help us build sustainable growth in the AMC.
And you're right about how distribution plays a very important role here. And there's still so much ground to cover, right? We do have a lot of investors to reach out to who are still not investing in mutual funds. So that makes total sense. Mr. Ramaraju, let me come to you. This is a question I'm sure you get very often, but considering that this is the hot topic, I want to understand your sense in markets currently. Let's first start with equity, and then we'll discuss the other segments, because we got the equity flows as well at a record high yet again. And this is coming, just after that big election news. We have the budget which is upcoming as well. What is your general sense?
Definitely, yes, the retail participation has been increasing in the markets. That's clearly visible in the flows that we are seeing in the mutual funds. And more importantly, purely from a market perspective, markets are trading at all-time high, driven by the stable government at the center. We're also having the prevailing strong economic conditions, and the government-led policies and reforms have been quite strong. The spending and the capex spending from the government side has been very strong and robust. That's also initiating some more capex spending from the private capex as well. So these are some of the factors which are driving the markets quite significantly. And obviously, the valuations have been quite stretched, especially in certain sectors or counters. Might be the mid caps and small caps. Some of the stocks might be trading at expensive valuations. And more importantly, the markets are set for kind of a 100-day agenda. I am having very high expectations on the 100-day agenda of the government. That's kind of what is kind of prevailing in the markets as of now. And more importantly, the capex and the order flows have been quite strong, and that's driving some of the sectors like your defense, railways, energy, or some of the sectors like this. And some of the consumption-led themes are also getting played out because of this, actually. So these are some of the sectors that can prevail, and some of these themes are multi-decadal themes that's going to play out, because India as a country needs huge amount of capex spending, and especially in the space like infrastructure or defense or railways, and even on the transformation of your energy as a whole. These are some of the sectors that will play out for multi-years going ahead. And more importantly, what we need to watch out for is the execution risk. Though definitely most of the companies are getting the orders and the order flows are being quite strong, the execution risk is what we need to be monitoring pretty closely. That can be detrimental if the companies are not able to stand up to the order flows or the kind of earnings expectations. So those stocks can get beaten down as well. So corporate earnings momentum is continuing to maintain, and we are going to see a sustaining momentum coming in the earnings front. And some of these factors are going to remain on the top, and make sure the valuations are also being expensive, and they're going to remain expensive for some more time. So we're not going to see a major correction in the markets despite all these factors, because even if the correction comes, it's going to be a price correction at certain stock levels. I'm not expecting a deep correction coming into the market, because the retail participation is quite strong, and they're going to continue for the medium term and the longer term. And obviously, the inflation is coming down. We are also heading closer towards a stable inflation regime. So that means to say the central bank can also cut interest rates, which can boost further, kind of stimulate the growth further. So that's going to be the factor which is going to drive the markets further more. And it's kind of getting priced in over a period of time, and we are heading as we get closer to the rate cut cycle. So that's more about the markets as of now.
You know, you spoke about how SIP number is something that would keep the markets the way it is. SIP inflows have come to 21,260 crore rupees. We just got that number from the Association of Mutual Funds of India. It is at a record high yet again, 1.7% up on a month-on-month basis. And there's been just one sustainable growth that we are seeing for the SIP number for sure. Again, at the 21,260 crore mark, very close to that $3 billion monthly SIP figure. We'll be soon talking about that number as well. But for now, that's the big number that we are talking about. We'll do one thing, we'll slip into a short break. But before we do that, SEBI has announced new regulations allowing passive funds, including ETFs and index funds, to increase their investments in the listed companies of their sponsors. It has put out a circular with rules governing these increased investments. My colleague Shivani is joining us with more details.
Well, following the push by the mutual fund industry, Securities and Exchange Board of India has relaxed investment restrictions for passive funds. This comes in the form of a new circular. Previously, mutual funds could only invest up to 25% of their net assets in listed securities of their sponsors' group companies. However, SEBI has now amended its regulations to permit equity-oriented ETFs and index funds to increase their investment limit. These funds can now invest up to 35% of their net asset value in the group companies of their sponsors, provided it, they follow the weightage of the constituents of the underlying index. This change is particularly relevant for equity ETFs and index funds that are based on widely tracked and non-bespoke indices. Now, what is that? Widely tracked and non-bespoke indices are those that are tracked by passive funds or serve as primary benchmarks for actively managed funds with a collective asset under management of 20,000 crore rupees or above. SEBI has identified 21 such indices which include prominent names like Nifty 500, Nifty 50, Nifty Midcap 150 and BSE 500 as well. These qualifying indices will be updated biannually based on the AUM threshold as of March 31st and September 30th. The Association of Mutual Funds in India, or AMFI, will publish the updated list on its website by April 15th or October 15th each year after obtaining SEBI's approval. For passive schemes based on indices which are not included in this identified list, they must rebalance their portfolios within 30 business days. The industry has been advocating for the change, arguing that passive funds mirror indices and should not be burdened with the complexities of active management. Back to you.
Thank you, Shivani, for joining us with all those details. With that, we'll take a quick break. On the other side, we'll continue our discussion with the top management of Shriram AMC. Stay tuned for that.
Significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we're looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage. Way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter-century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community.
Welcome back to MF Corner. We still have with us Karthik Jain, the MD and CEO of Shriram AMC, and Deepak Ramaraju, the Senior Fund Manager at Shriram AMC. Gentlemen, thank you so much for patiently waiting by. Mr. Jain, let me come to you. Now that we are talking about markets still being in fine fettle, retail investors also pumping in a lot of money, any themes that you're liking in a market which looks very overvalued? Any pockets where you can see some value left?
So I think the value, it'll largely be in sectors that still have some momentum still left in them, and obviously driven by the policies at the central level. And for example, you have sectors like possibly the auto, capital goods, or even real estate that could potentially be continuing their momentum. And of course, the perennial favorite IT is still waiting for a comeback. So we need to check if when that returns, although we do believe that there could be mid or small cap or mid cap kind of product-led IT companies that could start to show earning momentum and therefore more interest in the sectors. FMCG chemicals also could see a comeback as well. FMCG, once I think the rural turnaround is around the corner, supposedly, hopefully, with a good, strong, stable monsoon. And if the upcoming budget is more inclusive and socialistic, one can hope that there'll be more consumption, surplus or at the rural level, which can help FMCG as well. So yeah, there are a couple of these sectors that could possibly be looked at. But clearly, like you said, it's a high momentum market with valuations that are at all-time highs, and investors need to be cautious. And of course, here, if they're looking at equity, they should be here for the long term and take at least a 3 to 5 year view. And ideally, like we always say, get into the market through the SIP route.
And they are doing that, right? With record high numbers yet again, Mr. Jain. Mr. Ramanajulan, let me come to you. This time around, we saw some ebbing of flows into small caps and mid caps. What is your fund house strategy here? Is it still a space you would be comfortable with?
Yes. With increasing retail participation, I think the mid caps and small caps are going to be kind of expensive and trading at expensive valuations. They're going to trade at expensive valuation. We're not going to get them at cheaper valuations at all. But having said that, one has to look at a long-term view on this sector segments, and that's where the earnings momentum is also picking up. It's not the large cap which is driving the earnings momentum; it's the mid cap and small cap which is driving the earnings momentum. And investors are clearly chasing the earnings momentum here, and that's what is visible in the kind of flows in the SIP numbers as well. And we will continue to stay invested. We have a flexi cap fund as of now where we make allocations towards more and towards the mid and small, and we are largely tilted towards the mid and small compared to the large, compared to the benchmark. So we'll continue to stay invested, and the EQS strategy will help us to pick out the right kind of stocks into the portfolio. So that's where we'll continue to stay invested on the mid and small. But we'll be cautious about the execution. So that's the key thing here.
Okay, and that's where it's best for any retail investor to go to an expert and experienced fund managers as well. Mr. Jain, let's talk about debt funds, because India has now entered the JP Morgan bond index. There's possibility of rate cuts. How are you looking at that particular space, the debt fund performance going forward?
The JP Morgan bond index, India's allocation would increase from currently 1% to about 10%, and we're already seeing, we expect about incremental inflows to be about $20 billion, of which about $8-10 billion already has come in. So this clearly, I think, with the upcoming rate cut as well, it should give a result in terms of better, lower. Of course, the real yields go down, higher MTM impact on the debt category.
Okay, all right. And this was one category which at least the investors were very wary of after the debt taxation changes. But that makes sense. Gentlemen, it was a pleasure speaking with you. Thank you so much for joining us today and talking to us about your strategy. What plans do you have for the AMC going forward and your outlook on markets as well?
Thank you so much.
Thank you.
Thank you. Okay, all right. Before we wrap on the show, let's quickly talk about the SIP numbers, because they've come in at a record high yet again. And the number has come in at 21,262 crore rupees versus 20,904 crore rupees. That bar just keeps increasing. That's the kind of contribution we are seeing from retail investors. So that's the mutual fund report card. But with that, we'll take your leave on this edition of MF Corner today. Stay tuned for Closing Bell to take you through the last hour of trade.
At 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Dr. Sunil, you know, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, you know, one of the statistics that or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans.
We have the Taiwanese index, which is up around 130 points. Prime Minister Narendra Modi arrives in Moscow for the 22nd India-Russia Annual Summit.
For the Nifty Bank, watch for 51,996 to hold.
So ITC is showing signs that maybe it wants to get out of that zone that it's been in.
The company on an overall basis has flattish sales growth, double-digit constant currency growth.
Nifty is starting about, 18, 20 points higher.
The risks are increasing. I think there's no doubt in anybody's mind.
Quite a start, but it appears things are, picking up a bit.
This is a subsidiary, the terminal business subsidiary from Aegis Logistics, and it's a large IPO.
Buyers of hybrid cars in Uttar Pradesh have started getting a 10% exemption.
Is a 100-point uptick for the Nifty today.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Okay, it's a good-looking screen. Indices were flat yesterday, but no such problems today. Markets are up 0.5% odd, across indices. We'll sort of talk about markets in greater detail. This is Closing Bell. As always, we're coming to you from the CNBC-TV18 Motilal Oswal Studios. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, good afternoon.
Hi, afternoon. New record highs for our markets and consolidating now above 24,400.
And I think we have a star mover, right? It's Maruti.
Yeah.
Without a doubt, it's Maruti. And really 6.5-7% move on a stock, which, by the way, it started in the morning with a 3% pop. And since then, it's added 4.5% on top of it. So it's quite something. And we'll focus on that one in greater detail. The auto indexes, thanks to Maruti, up 2% as well. PSU banks, pharma, FMCG are some of the indices which are higher. You got the small cap index, which is up 0.5%, mid cap index, which is up 1/3%. You got gains. And it's not just, of course, the indices which are doing well. Lots of stuff which doesn't find any mention in any of these indices is also doing well outside the indices. The smaller micro caps, it's absolutely a vibrant rocking screen out there. And really, you go down the list of stocks and every day you find stuff, newer stuff which has not performed for a couple of years, and suddenly it's in the mix and you wonder, well, what has changed? Is something happening at the margin? I think more than anything else, the one explanation is essentially people running out of ideas and expanding their horizon of what they want to do, what they can do, because otherwise, it's been a pretty sharp, strong run up in well-owned names, especially. So you're essentially looking outside of the well-owned list and down the market cap curve and outside of the benchmark indices. I think that is the one explanation which I think makes sense with what is going on with so many parts of the market right now. Prima.
Well, some of those pockets today are the refining names. So Chennai Petro, MRPL are seeing outsized gain. Tea stocks are flying high. Pull up the tea names like a Jayashree Tea or Rossel India, Harrison Malayalam. These are stocks which are up close to about 12%. But can't take away from the fact that today the markets have hit new record highs and the Nifty is holding on to levels of 24,400 and consolidating. The star stock has been Maruti, but giving it company is also M&M. You've got Hero MotoCorp and ITC. ITC has been that, you know, the stock which has moved up close to about 7% in the last fortnight, and it's playing a bit of a catch-up because year-to-date, even after the 7% up move, the Nifty IT index is down 2% versus the Nifty FMCG index, which is up close to about 4%. So it was a bit of an underperformer, and it's playing that catch-up. PSU banks like State Bank of India, Union Banks, and IOB, IDBI Bank, all of these stocks are higher in trade, and railways are seeing a bit of a reversal and sharp downticks. So RailTel, Texmeco, Ircon, RVNL down about 4-5%.
Well, that's right, and ITC is coming back. Actually, if you look at it on a year in the last 1 year, still the stock hasn't even moved up 1%. In fact, it's still down, by 1% or so. That clearly is making a big comeback. As Rima mentioned, it's playing a comeback. There is valuation comfort. The street believes that maybe we're not going to get any kind of shocker from the budget as well. Normally, the ITC is a little bit nervous going into that event. And, besides that, the monsoon has been good, which could bode well for some of these FMCG names. So that one has been the big mover. Now, in fact, it's breaking out at around that 450-odd mark. How do you trade the final hour of trade, though? We have Mitesh Thakkar who joins us. Hi, Mitesh. Good afternoon. Good to see you. Well, we're sitting with a gain of around 100 points odd, but I think the bulls will want the Nifty to go ahead and decisively conquer the 24,450-odd mark, which as of now has not yet happened. How would you approach trade?
That's right. I think, the level to capture is 24,450. And while we haven't captured it, we are now, decisively close to it because the option I think is at 24,500 and then 25,000. So 24,500, 450 zone would be important just as you approach the 24,500 mark. I think it will be an important level. Let's see how it goes. We've not still traded the index because, while we've made a new high, the indicators are still flat. So there's no sign of a vibrant breakout taking place. So we'll keep our wait and watch mode on. But I think as you're rightly highlighting, it is the individual stocks which are showing good traction. And that's where, a majority of action is taking place. I have a buy on M&M with a stop at about 2,900 for targets of 3,010. And Lupin is showing good continuation after the breakout. So Lupin is a buy with a stop at 1,780 for targets of 1,850.
Okay. Stay on, Mitesh. We'll come back to you. Deepak Shenoy from Capital Mind is with us. Deepak, Maruti 6.5% up move. We've heard the news now, but does it warrant this kind of a 7% uptick that we're seeing? What explains it?
Hi, Rima. I'm sorry. I think I might have missed the news. In fact, I just saw the numbers being up, so maybe I'm not aware of why they've gone up. Is this because of the numbers or is this something else?
So Maruti is moving up because Uttar Pradesh has waived the registration fees on hybrid cars. Yes. So that's the only piece of information that we have. So a bit of an incentive towards hybrid cars. So Maruti is reacting positively to this, but it's in Uttar Pradesh.
Yes, it's. I think it's specifically for the sugar lobby because in a pure electric car you can't have any ethanol blending. So and they've given so much, to sugarcane farmers. Specifically matters to UP and Maharashtra. So I think the UP government has decided that you can't have electric takeover, even though it may be more efficient. So hybrids are better in that context. So and hybrids can actually do a very good job with running on higher blends of ethanol as well if the engines are right. So I think that prompted them. Maruti has almost no presence in electric. M&M does. We own M&M for that, as a disclosure. So in that context, kind of more biased towards M&M and perhaps some of the larger vehicles in this format. But I mean, I think good for Maruti as well. It's been a good year for the auto industry in general. I think in the stock markets, hopefully the sales numbers also start showing up.
Right. But in this case, so Maruti has sort of, lots of models which offer, it's a combination of CNG and petrol, right? I mean, so it's got a strong portfolio in that sense. And there are some estimates which suggest that for Maruti, I'm just looking at what the numbers are, but UP is about 12% of Maruti's domestic volumes in FY24. And of course, I mean, hybrid is very, very small. But it's a very strong sort of move on the stock, I guess, also because it's sentiment positive, right? What can happen in other states, etc. It's a growing market.
Yeah, I think UP has the most incentive, but not really any other state. So why would Karnataka, for instance, want to do that? Because we don't have that many sugarcane farmers in comparison with Maharashtra and UP. But I would say here the big deal is Delhi. It is not actually UP itself. People in Delhi can buy cars in Ghaziabad or Noida, qualify for the lower UP numbers. Delhi is one of the largest registrations of cars as a single region. NCR region in India is probably the highest percentage of cars as a representative region compared to any other in India. It's been like that for about 30 years now. So maybe that's what drives a lot of potential here because, you could stay in Delhi, buy a car in Noida and still drive it around without having to, pay any specific taxes. Whereas in Karnataka, if you bought a car in Tamil Nadu, you'd end up paying a lot more taxes. So the cross-state kind of mechanism isn't there. These are also added factors here, which probably play into thought processes on growth. Plus, Maruti entirely gave up its entire diesel line a couple of years back. So they said no more diesel. I'm an unfortunate, victim of that because I own a Maruti diesel car, but, it's a good car, but, they've stopped the entire line. It gives them more potential as well. So I think overall good sentiment there, but does it warrant a 6% gain? That is, the market's call. Perhaps I would wait to see the numbers, but, it will still take some time for much of that to show.
All right. Hi, Deepak. Good afternoon. Good to see you. And let's talk about ITC then. That's playing catch up. You're just pointing out that the Nifty is up 25% in the last 1 year and ITC is actually down a couple of percentage points. However, today you're seeing the stock move, I think, put today as well as yesterday's move together. Last few sessions, it's up nearly around 8.5–9%. What do you make of the stock at around 455? A couple of reasons why the stock could be higher. It's playing catch up. It's still valuation wise trading at around 24 times, or with the yield of closer around 4%. The monsoon has been fairly good and the street is not expecting any kind of shocker from the budget going by the stock price move. At around 455, what's your view?
I think it's the cheapest FMCG company around, to be fair. I think, Najil, the problem really is, ITC has been subject to a lot of, thought processes around tobacco and FMCG. It's more an FMCG play now, according to me, in the longer term. And because it has such a large rural supply chain, they're going to benefit in some way if the government kind of in the budget gives some more impetus to rural development and perhaps infrastructure development in the rural areas, which will probably help ITC. And to be fair, many of these quality names, whether they're ITC or some of the others, have actually lagged the market severely in the last couple of years, which is why a lot of quality-based funds have not really been able to make any meaningful headway in comparison with the indexes. So maybe you're right, it's a catch-up play. IT did a catch-up play maybe a week or two back. So FMCG was the other laggard. So, I think it's every, there's a little bit of sunshine on everything nowadays, but at different points of the day.
Analysts also pointing out, as Nigel was saying, there is a low chance of another cigarette tax hike because we saw a minor tax hike take place last year. And analysts are quick to point out that we seldom have 2 consecutive years where there is taxation on cigarettes. Otherwise, there is an increase in the illegal consumption of tobacco. And therefore, the probability is quite low that we will have anything adverse coming out on the 23rd of July on the budget day. So, Deepak, any new ideas from your Ken?
Not so many. Actually, we're still bumping up the old ideas. We still have LIC, L&T. I think L&T has actually done something interesting recently, starting to get into some more areas. Now they're talking about semiconductors as well. But there's also a few other companies that have been in our portfolio for a while. For instance, Keynes, which is in the semiconductor space by itself, and has a pretty big field ahead of it in terms of potential expansion. Of course, many of the projects are early. The stock's up 4.5 times or 5 times in a year and a half, so it's not like the stock is underpriced. But I think the valuations probably reflect the fact that there's a very large market out there potentially, and semiconductors are semiconductor-based things are our third largest import after crude oil and gold. So it makes sense for India to at least provide more impetus for domestic companies to add value in that space. Additionally, I think the defense and the shipyard plays are still going strong. The field there is, it's not 1x or 2x, it's been 5x or 10x higher than what they were maybe 2 years ago. Stock prices have also gone up correspondingly, but we still hold some players there. Lastly, I think we've been very positive on high-end manufacturing in India. So companies making machine tools or higher-end manufacturing of engines and so on are companies which are in our focus. So we've added more to them. I'll wait for results before I actually add a new idea. But I do have some, very small amounts of cash, so maybe useful to deploy it after the results.
I like how you said it. Everything gets some sunshine at various points in the day, right? And the sun is really shining on play. It's not shown in many years. It's really quite something. Remarkable markets we're kind of experiencing. Paytm, I remember Deepak used to have some position. It started to. I'm sure you would have read that interview with Vijay Shekhar Sharma yesterday. And do you have that position still, or what? Do you have a view?
No, we're not allowed to comment on Paytm Prasad. We have a conflict, so we've not owned it for over 2 years now. So it just no comments at all.
Okay. Any of the other, the PB FinTech or the platforms essentially, or Zomato? Swiggy, by the way, there was another story today saying that in secondary markets, Swiggy shares have started to change hands ahead of the IPO. Of course, it's got Zomato as a valuation benchmark. Thoughts?
Yeah, I think Swiggy has been talking of an IPO for a while. It's for a change, a Bangalore-based company that's going IPO. I think that will be an interesting thing. Also, because Zomato has been the only player in that sector. Though Zomato, I think, is going up more on the lines of Blinkit showing better numbers. Swiggy has relatively lesser share in the instant delivery of grocery segment, but pretty good numbers on the restaurant delivery front. I like these plays for the restaurant delivery business more than the grocery and instant delivery business, because I think at some level this is just too competitive a space for anyone to get a clear win, even with all the dark store dynamics. I think India is just it's just too competitive on last mile retail for any clear winner to emerge. Having said that, I think short-term plays, momentum plays, they might still make a lot of sense. PB FinTech has more leeway to it because I think they're going with the insurance brokerage license. They get more better economics. They also have some of the sales that's been happening since the IPO. That's starting to peter down because some of the VCs have been selling their shares and more stronger players have been buying. So once that peters down, you actually get a little bit of bump up. That's what's been happening with the stock as well. So I think that way it's a decent longer term play because hardly anyone sells what they sell, specifically term plans. And hardly any big player or established player does that. So they get a pretty good leeway in that. But the growth has been a question, and we'll have to see where that goes because growth has not been very kind to the industry and definitely not to intermediary players.
Okay, all right. Deepak, you may want to sort of listen into this next story because I think you'll have views on this one. And this is a exclusive coming in from Money Control. Now, in a move to curb the F&O frenzy in the market, SEBI's expert committee, the working sort of committee which was appointed to look at this, is likely to propose new regulations. Sources tell Money Control that these suggestions will be reviewed by the Secondary Market Advisory Committee before a final decision is taken. My colleague from Money Control, Mahalakshmi, is here with the details of what she's picking up from her sources. Mahalakshmi, over to you.
Yeah, thanks, Prashant. So obviously there are 6 or 7 recommendations that the advisory committee has made. This will obviously go to the Secondary Market Advisory Committee, and then the final decision could be taken, or SEBI could also put in the consultation paper for public comments and then take a final decision at a board meeting. That is all still not clear, but let me tell you some of the points that I've picked up with respect to what are the recommendations. I think the most important recommendation is increasing the contract value, the size, lot size from 5 lakhs to about 20 to 30 lakhs. That's like a 4 to 6-fold rise, which is essentially to curb the frenzy and make sure that they're suitably expensive to for retail investors to get out of the trade. So that's point number 1. Second is right now you already have, like, on every single day of the week you have some expiries. So exchanges will have to, particularly NSE, because it has the maximum number of contracts, will have to choose, and they will only allow 1 contract per exchange. So BSE can have 1 contract and NSE could have 1 contract. The other things are like minor stuff, which is more risk management proposals in nature. For example, increasing the margin requirements closer to expiries, as we've been seeing that on the day of the expiries there is extreme volatility, what we call injections because of high-frequency traders coming in, etc. This other thing is intraday monitoring of positions in F&O. That again is a risk management proposal. More or less, this is what it is. Right, so the first 2 are the most important things.
No, absolutely, and we'll see how this goes. These are likely to be recommendations, and
yes,
then we will kind of see how they are, what is finally implemented. But it's sort of good to get the details at this stage. Mahalakshmi, thanks very much for that. Deepak, we'll leave it there for today. We'll sort of have you back once we have, these are important sort of recommendations which are being made, and I think there'll be a fair bit of debate around this since it's the largest market now, largest futures and options market in the world now. We'll take a quick commercial break here as well. On the other side, we'll have Vijay Kedia. He's, of course, a large individual investor, really needs no introduction, joining us from Ahmedabad. He's also someone who has strong views on, the euphoria which is going on in the markets. He's got some views on, a lot of the trading speculative frenzy, as he himself has put it in our previous interaction. So all of that coming up in just a bit from now.
Cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So it's, I would assume, looking at the stats, that the rural problem would be slightly more because also availability of, toothbrushes, toothpastes and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
Welcome back. As promised, we have Vijay Kedia now joining us. He's a large individual investor. He's managing director at Kedia Securities. Really needs no introduction. Vijayji, great to have you with us here. Thank you very much. You're joining us from Ahmedabad. I'm assuming it's a business trip with maybe a visit or two at Atul Auto as well. And that investment of yours has done fabulously well. But today, let me start by, we'll talk about the electric vehicle theme, etc. But let's just start with the markets, because every time we speak with you, between the last interaction and this interaction, markets are up a couple of thousand points, literally. Right? I mean, that is the kind of remarkable markets that we are in. I don't know if you just heard our colleague from Money Control, Mahalakshmi, was talking about the, some of the measures which SEBI is now looking at, SEBI expert panel is looking at to curb F&O, the huge frenzy in F&O trading. It's something that is close to your heart as well. I mean, you have, over the years, over the last 1.5 years, spoken about investing, not trading, looking at the longer term, etc., etc. So how do you look at this? What is your view on the markets right now? Let's begin there.
So I have been talking about all these things not for last 1 or 2 years, maybe for last 10 years or something. The first song I had written about against this F&O and all, maybe in 2016 or 17. Anyway, now, unfortunately, I could not hear what Mahalakshmi ji talked about all these things. But I am very much sure that the SEBI is really, working very hard. And they really want to stop this frenzy, which is, or this euphoria, which is going on in this market. SEBI is definitely worried about it. And if I can use the word, I think it is not euphoria. It is like a stampede in the market. Even here in Ahmedabad, whoever I am meeting who is not at all related to stock market and from different walk of life, different field, business-wise, career-wise, and everybody's talking about stock market only, that they want to trade, they want to make quick money, and they want to, break their FD, and they want to, somebody was telling me yesterday only that he's working in some IT firm and all, and he want to quit and again, join stock market and all. So I think that this situation is not, personally, I may be wrong because I have been proven wrong many times in the past. But I think this will not end well. So SEBI should take very strict action to curb this kind of frenzy in the market or stampede in the market.
Vijay, you say stampede. Stampede, people get hurt in a stampede. Here, people are making money, hand over fist, maybe a little too easy, right?
Yeah.
And you talked about Ahmedabad. If there is one city where people will talk about markets, it is Ahmedabad, right? So it is not. But are you saying that it is getting a little too much? I mean, the very, very rosy kind of optimistic scenario. And are you talking about the overall market or only what's happening in F&O?
The F&O overall market also, I think there is a frenzy in the market, even in cash section also. And it is not Ahmedabad, you can say, call it, because people here, all this community or Ahmedabad is, they know stock market, they understand stock market. I was in Bhubaneswar 5 days back, and there also people were really talking only about stock market and all, what to buy, what not to buy. And most of the people were discussing about a future and option only. So this option is a new buzzword, in India now. Every Gen Z or whatever you call them now, they want to try their luck in option, future and option. So it is going out of the way, no doubt about it.
Vijayji, afternoon, Rima here. Give us your views on the budget, because you are of the opinion that we will see some sort of taxation on capital gains. So first your view, and if it does come in any form, how much will this be the straw that breaks the camel's back? Do you think it's going to hurt tremendously? How will the markets react?
If you ask me, I think there's some tinkering capital gain tax is going to happen. Maybe either they are going to increase the tenure, which is now 12 months, maybe they will increase it to 24 months, or they will increase the capital gain tax rate, which is 10% to maybe 15 or 20%. I think it is going to come because best time is the best time to bring any reforms. Okay, when in worst time you cannot bring all these reforms. And I will give one different perspective, Rima. You see this, whatever volume is happening in this market, this is 90% or more than 95% volume is of future and option only. Hardly 10% people are investors in this market. And out of those 10%, 10% of those 10% are long-term investors who really hold the shares for 12 months or beyond that. So I don't think it is ultimately it is going to hurt the masses and all. On the contrary, all these people who are indulging into this future and option and buying today and selling tomorrow, and this momentum buyer and momentum trader and all, they will be happy. That because they are paying full tax. Okay, so I don't think it is going to hurt the market. As it is, market will need some some excuse, to cool down. So maybe that would be an excuse to cool down the market. But I think government will certainly consider. This is what I personal view. If it does not come, good. I would be happy.
Hi, Mr. Kedia. Good afternoon and good to see you. And what I fear is when I go home from work, I go in a cab and sometimes the cabbie is already, he's looking at the rates, he's trying to do something. I'm happy when I'm going home because I know the market is shut. Otherwise, they have it at their display, which makes me a little bit worried. So you're calling for some action from SEBI. You're saying maybe the government will tinker with the rate or maybe with the tenure as well. So let's see how that goes. But let's focus on a couple of themes. One theme that has come to the forefront for the last couple of years at least is the EV theme. And you've taken a big chunk in Atul Auto. That's been one of your big winners out there. We spoke to the management just a week or so ago, and they were talking about EVs being around 25 to 30% of their mix. Don't you think but that valuations now have got a little bit expensive for a lot of these EV plays? Atul Auto, I think the other way you're playing it is precision camshaft as well. So give us your comment on it.
So we are not discussing about any individual stocks, but just for reference purpose, since you took the name of Atul Auto, so let me tell you, not Atul Auto, all electric, all EV shares, you name any shares, all are expensive in this market. So and all are rising on this expectation that that earnings will catch up. So if suppose if earnings don't catch up in next 6 months to 12 months, then of course they will also go their own way. So as on today, if you ask me, looking at the previous past balance sheet or past numbers, all those shares are expensive.
Okay, all right. So EV is a little bit expensive. The theme on the whole.
But future is bright. But future is bright. Again, you have to take a call that you want to take a call for 6 months or you want to take a call for 5 years. If you ask me, since I am invested, I am taking a call for 5 years. So that difference, that perspective, change of that different opinion is because of this only.
Got it. Okay. All right. So you need to sit in it for a longer ride. You can't be looking at this short ride out there. So that's on the EV themes. Expensive, but there is a runway. And in the years to come, we'll see that culminate. So that's good news. The other theme you've been quite positive on is on the infra theme. And that's as well, a lot of investors, they have been talking about this infra boom here in India. One of the stocks that you're invested in is Patel Engineering. And we had the untimely demise of the promoter, Mr. Patel. What's your view on the theme? And if you want to comment on this particular stock?
No, again, I think it is against SEBI rule that I shouldn't talk about particular stocks and all. And since you have taken the name, so my condolence to the, that family and the company because of this, untimely death of Mr. Patel. Let me tell you one thing. It's very clear. I have also thought about it, but there is one thing, as we always say, that show must go, go on. This is the difference between a proprietorship firm and a private limited company and a listed entity. All these listed entities are run by professionals and by the team, and this business is so complex that one single person actually cannot run this business, as we all understand. So I think this phase will also pass, and of course, and this company is quite old. So I think they will manage. I remember one thing, Nigel, on this topic. I remember one thing. I'm not going to take the name. And again, we are not talking about Patel. We are just talking about the concept. The same thing happened in one company where I was one of the money that was a big chunk of my portfolio, my worth. That was 15 years back or something. The company was doing reasonably well, but not like flying. And the son of MD joined the company, and he really changed the company dramatically. Brought new efficiency, new technology, and expanded in a big way and all. and the company started doing well. The stock price also went up 4-5 times from the bottom. And one day suddenly he died. He met with an accident and he died. And the stock price fell 20-30% just because people also thought that he was the key person behind all this transformation. And after that, the company went up 20 times, 30 times. The stock price went up 20-30 times. So I'm not saying the same thing is going to happen in every company has different dynamics and, different strategy and all. So, but I think all these companies, they are self-sufficient and they manage themselves.
No, got that. So unfortunate sort of news on Patel Engineering, but you're saying that life goes on and the show goes on in that sense. Now, Vijay, another area, right, where we've seen a lot of action is telecom. And suddenly, from talking about just one player or two players, there is a viable third player. Tariff increases is essentially what has done it now. You have an exposure in the telecom space, not directly there, but you can't talk about specific stocks. At least I can sort of preface my question by naming the stock, Tejas Network, where you hold about 1.9% equity. How have your views evolved there on the telecom space? Because we've seen these tariff increases take place and increasing optimism.
So let me tell you, Tejas Network is also very expensive, although I am the maybe individually largest shareholder into the company, but that does not matter. Valuation wise, if you go by the March numbers and last numbers and whatever, share is very expensive. But let me tell you, because now the pricing power is coming with all these telecom service providers, like Jio has already increased the rates and Bharti also has followed the suit. And same is with Vodafone numbers, 15 players has shrunk down to only 3 players and BSNL is 25% players, so 3.5 or whatever you call it. So, and one thing is for sure, now, earlier we used to talk about, in India, roti, kapda or makan. So now this is roti, kapda, makan or mobile. As I always say that when my driver keeps 2 mobile, I keep only 1 mobile, but my driver keeps 2 mobile. So how can you go wrong in all these things in this telecom? I think now since they have started increasing the rate, and so I think best time is ahead of them.
So the only issue is that, say companies like Bharti have run up so much. 3 years back, Bharti was sub 500 rupees and now it's close to 1500 rupees. Another 2 sectors where there is a lot of long-term visibility is defense and railways. Order books are swelling. So the earnings growth is going to be strong, likely for the next few years, but the valuations are a big concern. So where do you stand on defense and railways, even for someone who has a long-term time horizon?
So let me tell you about like Bharti, since you took the name of Bharti. So I'm not recommending to buy shares. I'm just saying the future of telecom sector as a whole is bright. And stocks are different, and because stocks sometimes they become overvalued, sometimes they become undervalued. The stocks are different and sector is different. So let me clarify this thing. I'm not talking about Bharti or for that matter any shares. They are expensive. I do agree with you, but they had always been expensive. So that investor, I do not have any position in Bharti, Airtel and any other and all these telecom service provider. Let me clarify. So we're not talking about stocks, just for the sectors. And for the same reason, I think all this defense story is also expensive, railway or defense or whatever you call it. According to me, I do not have any position. So maybe I'm a fence-sitter. That is why I feel maybe my opinion is biased because I do not have any position. But I really find them that they are expensive. But story has not ended. The story will continue to grow. The story will continue to be there maybe next 4, 5, 10 years and all. But stock market keep on adjusting. The price keeps on, price keeps on adjusting itself. So this, again, as I said, you have to take your call that if your position is for 5 years, then it is all right. But if your position is for 3 months, 6 months and 1 year, then you should be worried about it.
All right, Mr. Kedia, just wind this down then. Defense as well as railways, well, a lot of people will be looking forward to the budget because they'll be expecting some kind of continuity of policy and also, in terms of spends. You've already told us maybe we could see some tinkering in the long-term capital gains. That could be a possibility. Hopefully it doesn't happen. But what else will you be looking forward to in budget 2024?
I think ultimately whatever policies has been laid down, been declared by this government, I think that will keep on continuing. Infra will certainly get a big push. Anything which is, economy or GDP enabler, I think that will be, they will push all those reforms and all. And of course, the biggest worry, if you ask me what is the single most worry, reason to worry about India is that unemployment. So I think government will also take some decisions, to create income, whether it is rural or whatever it is, and to create jobs and all that. That should be the priority of this government. This is what I feel.
Okay, all right, Mr. Kedia, always a pleasure speaking to you. But let's wind this down. As you were speaking about various stocks, we got a lot of inputs, a lot of messages I got, whether you're going to end it with a song. You want to give us a couple of lines, a 15-20 second song before we wind down?
तो सोच कर समझ कर इन्वेस्ट कर, रूमर पे टिप्पे न टाइम वेस्ट कर, नॉलेज और पेशेंस का बिजनेस है ये, अनुभव से सीख और बेस्ट कर.
क्या बात है. I thought you were going to sing it for us, but I think next time you're here in the studio. There's just one last question. When you see your portfolio stocks, and these are stocks in the public domain, especially where you have more than 1%, and you own many of these for a long period of time. Most have done very, very well. If you had, you said that I think you did say that cash is little, you invested, right? But if you had cash, where will you, are there any sort of, is there value in any of these themes without naming companies, any of the sectors, or where there is growth potential also? Because a couple of times you said growth is there, but valuations are rich. But is there any area where both are reasonable?
No, I won't invest anything in this market. If I have fresh money, I would not invest any money in this market. For the simple matter, maybe there is a value in the stocks, but if market falls, that stock will also fall, if entire market falls. So maybe, just to give peace of mind, just to have peace of mind, I will not invest in this market. I will just be a fence-sitter or cheerleader and enjoy what is happening in the market and watch the match.
But at the same time, even though for your own holdings, a couple of times you said that they are expensive, but you're not you're not selling anything, right? Because
no, I'm not selling in a meaningful way because, as I said, that I'm not playing the test match. I am playing the series. So I in the past also I held so many shares which I continue to hold for 2 or 3. I showed them 2 or 3 bull markets. So I have habit of this. So I'm not worried about that. So I will hold them. As on today, as of now, while I'm talking to you, this is my view. Maybe I will change my view after our interview is over. But as on today, I feel, it's okay. No problem.
No. As Rakeshji used to say, I reserve the right to change my sort of view, right? That is always there. But since you are firmly of the view that generally it's looking very expensive, and it's not a question I would ask you normally, but we're at what, 24,000, almost 24,400, 500 now. Do you think by the end of this year, we'll be here, we'll be lower, we'll be higher? Just any thoughts at all? I'm just only asking you that because you are very firmly of the view that markets are in a bit of a frenzy.
Difficult to say, but I don't expect that it could be higher than where we are today. This is what I feel. Yeah, it shouldn't be higher than where we are today.
Okay, all right. Got that. Vijayji, great to have you with us here. Thank you very much. Enjoy your trip in Ahmedabad, and we'll see you back once you're here in Mumbai. Look forward to our next one with some songs here in the studio. Thank you very much for joining us.
Okay.
So that is Vijay Kedia with his thoughts on the market. We're up 100 points, by the way. 24,430 is where we are trading at. We'll take a break. We are back with some short-term trading ideas with our technical experts. That's coming up next.
Climate change is on our doorstep. It's time for a revolution to take root. And it starts with 1.4 billion Indians. It starts with one tree. One tree for humanity. One tree for Mother Earth. One tree for our future. Project One Tree, a News 18 network initiative.
Well, the wish list was that we end virtually at the high point of the day, and it appears we're on course for that. Pharma stocks have moved up in the last few minutes. You have Divi's Laboratory, you have Sun Pharma. Both of them have spiked a little bit. BPCL as well, that was trading in the red, that's moved into the green. And Hindalco as well has moved up a little bit. So some of these stocks, they have moved up, explains why we're closer to around that crucial number of around 24,440 odd. Mitesh Thakkar is back with us. Mitesh, you've got a couple of buy or sell recommendations for a reverse trade in the next few days?
Nigel, I have, in fact, two buy calls because the market, despite the fact that we are close to the resistance, the market is closing near the day's high, and then you always have this chance of continuation happening. So we'll go with the BTST and MFSL with a stop at 1,004 or 1,004, 4.5, and look for targets of around 1,030. And a buy call on MRF. Tire stocks are showing some good traction today, and MRF is breaking out. So that's a buy, not a BTST, but more of a positional buy. Keep a stop at about 12,700. 1,27,450, and look for target of 1,40,000 here.
After 3 days of consolidation today, you've seen the markets move up close to about 0.5%. Autos is the star sector. The Nifty Auto Index up more than 2%, and Pharma too has started moving up. The Nifty Pharma Index up 1.7%. Fertilizer names are coming in for buying. So NFL is up 4%. Madras Fert is up close to about 8.5%. Jay Bala is now with us from cashthechaos.com. Jay, afternoon. Thank you for joining in. Little bit of consolidation, but now you're seeing traction. The Nifty, the Sensex, both of them have hit record highs in today's trading session. What's the setup looking like?
Hi, Rama. Good to be here. See, the market continues to be up as long as it stays about 24,000, the round number. In fact, the support is about 24,026 or something. But, you can take that round number as a very important support. Unless the markets were close below that level, this stretched up move continues to proceed ahead. The nearest resistance for Nifty is about 24,650. And for the banking index, the resistance comes about 54,000, a long-term trend line. So the markets are still continuing to inch up, but continues to be stretched until the markets turn below 24,000. I think there's not much to worry about on the downside.
Okay, all right. Hi, Jay. Good afternoon. Good to see you. And Jay, what about individual stocks? What are the ideas you have for us?
Yeah, I have, as usual, two names. One is Pidilite from the F&O space. I think it's got an unfinished up move towards fresh record highs about 3,500. I think it will hold up the support at 30.20. So the objective of 3,500, the stop loss of 30.20. And the next one is from the mid-cap space. It's KRBL. The stock is breaking out of an inverse head and shoulders pattern. The stock has been underperformer since 2017, and usually inverse head and shoulders pattern marks the start of a huge reversals after, if it were to come after a prolonged decline, and this is possibly the case. We'll be very conservative. Place a stop as about 282 and look for 380 and possibly much higher, but we'll take it conservatively because the markets are stretched.
Okay, all right. Jay, I request you to stay with us. Let's focus on the general insurance stocks. They are buzzing in trade post their Q1 updates. Yash joins us with a detailed analysis on that. Yash?
Well, Nigel, before I get into individual players, the industry growth in the month of June has slowed down as compared to April and May. So the industry in April and May was growing at 15%. That has now, in the month of June, slowed down to 9%. The first quarter growth for the industry stands at 13% growth as far as the premium is concerned. What hasn't changed, though, is that ICICI Lombard is the player which continues to outperform the industry average growth in the month of June as well. So for ICICI Lombard, the June premium, that grew by about 16%. The first quarter premium, because of even stronger April and May, the growth for the first quarter stands at 20% in premium collection. The market share in first quarter FY25 versus first quarter FY24, there's a gain of about 62 basis points for ICICI Lombard. New India Assurance, the downfall continues, if I could say that. June premium is up just about 4%. The first quarter premium growth of just about 3%, sharply underperforming the industry average. The market share first quarter FY25 versus first quarter FY24 is down 203 basis points. Go Digit General Insurance, the recently listed company, June premium growing at 13%, first quarter premium growing at 18%. Market share, there's a growth of about 11 basis points in the first quarter. Star Health Insurance, the standalone health insurance industry average growth stands at 22%. In the month of June, Star has grown by about 16%. First quarter growth for Star stands at 18%. Now, market share for Star Health Insurance amongst all general insurance companies, if one were to see, stands with a gain of 21 basis points. But amongst the standalone health insurance players, there is a contraction of about 252 basis points when it comes to that market share.
Okay, well, thank you very much for that, Yash. Appreciate it. Let's focus on one stock where I think there is some action activity. Emami. Citi's issued a buy rating on the stock after they've also raised their price targets. Mangalam is here with details on this one. Stock's up almost 4% now. Mangalam, over to you.
So the stock's been doing well. If you look at Emami over the last 3 months or so, it's up almost 70%, a little over that as well. A couple of factors working for them, and I'll talk about what Citi says in just a bit. The most important thing is that they have a portfolio for all seasons. So they do have the winter portfolio. Alongside that, they have the summer portfolio. So both those seasons did well for them. For winter, especially the moisturizers, etc., did well for them. The extended winter in the fourth quarter. And now the strong heat wave is going to do well for their cooling products business. And as a result of which, the company is likely to report a good performance in the first quarter itself. Add to all of that, the hopes of a good monsoon actually is reviving sentiment as far as rural demand is concerned. So all these factors working for Emami in the very near future. Cities increased their target price from 625 rupees all the way up to 900 rupees. And while they talk about the near-term triggers such as, heat wave working on their summer products and monsoons, improving the demand from rural as well as some of their monsoon-related products as well, the long-term strategic initiatives that the company has been taking provide for re-rating of the stock is what Citi believes. So the most important thing, increasing their sales and distribution force on the ground. Secondly, looking at tech and digital at the same time, increasing the sales coming in from the newer channels like modern trade as well as e-commerce, which currently account for 20% of their sales. Increased revenue coming in from newer, products or innovative products is something that the street is looking at, along with the company looking at increasing their ads as a proportion of their sales. Remember, Emami has among the highest gross margins in the industry and is, as a result of which, able to spend more than other larger players in terms of advertising, despite having industry high margins itself. So those are a bunch of things that Citi likes in Emami. Remember, despite the 70% up move that we've seen on the stock over the last couple of months, still trading at a good 30-35% discount to all the other larger FMCG players.
Thank you very much for that. Citi is also bullish on Affle India because of the increasing marketing spend done by advertisers on the digital media, on mobile-only platforms. So Affle is an ad tech play, and Citi has put a target price of 1,600 on ad tech. So Affle, they say that Affle India has managed to hold out on its own. It's, you know, in a market which is dominated by giants like Amazon, Google, etc. in the, you know, ad tech space, in the marketing space. But moving on to CESC, that's in focus and buzzing after it hiked tariffs in the Kolkata Circle by over 5%. Vivek joins in for more. Vivek.
Well, that's right. So CESC is in focus today. What CESC has been asking the regulator for quite some time now has been there's been a twofold demand as far as CESC is concerned. Number one, to go ahead and hike the tariffs, which is still not rectified. Number two, they wanted to go ahead and put in a surcharge where they could go ahead and recover the variable costs on account of increased fuel prices. So, the second one has fructified. So from the month of June, CESC has gone ahead and started levying fuel adjustment charge to its consumers. The total quantum is 40 paise per unit, which effectively translates to a tariff hike of 5.7%. IFL says that this particular hike is good to cover CESC's incremental fuel costs and will ensure complete cost recovery. Also, what they say is that the accumulated regulatory assets stay in the range of 3,000 to 3,500 crore and will be recovered gradually with the regulatory approval. They are saying this particular development is quite important and positive from the stock point of view, given the fact that CESC actually trades at a discount to its peer set like Torrent Power, Tata Power, Adani Power, given the fact that tariff hikes as well as it was unable to go ahead and recover the variable costs. On the back of that, IFL continues to maintain a positive stance as far as CESC is concerned.
Thank you very much for that. Phoenix Mills is a big mover today, and that's up close to about 7%. Came out with their Q1 business update 2 days back. It's a good 25% year-on-year jump in their consumption and 13% on a quarter-on-quarter basis. Big move, 6.5% on Phoenix Mills today. Get into a break. We'll come back with more market talk. Stay tuned.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Welcome back. 5 minutes to go for markets to close. And after 3 days of consolidation, this is turning out to be a pretty terrific Tuesday because we are virtually closing at the day's high. We've been in conversation with Jay Bala of Cash the Chaos. Jay, we've been highlighting the catch-up played by ITC. That said, it's still an underperformer year to date or over the last 1 year. Do you see upside in ITC?
Yeah, to me, ITC's move looks corrective. But if you recall from our conversations in April and May, I had said that FMCG index has got pending upsides to work with for 60,000. And that's what the FMCG index is doing. It's now at 59,000 unchanged, probably higher upside to come with. I had even pointed out that the weight for the index will come from HUL or HUL. And the laggards in the FMCG space like Dabur and Imami, they would be making the move. And that's exactly what happened. And there's a slight change to that. There's a possibility that HUL could go back to test the all-time high at about 2,800. Yeah, when it comes to ITC, I think the resistance comes at about 474 to 482. So that's even reasonable upside if you're a trader. But I don't think it's going to fresh all-time highs.
Okay, all right. Talking about global cues, I just wanted to focus on two of them. One was the dollar index. It gave you a bit of a fear, but then it cooled off yet again. So how do you see the dollar index behaving? And also, if you could give us your view on crude. That as well has cooled off from the last time we chatted. Went to around $88 per barrel. That's Brent. And then it cooled off. Your take?
Yeah, most of the important global macros are at cross currents, Nigel. The dollar index, if it were to drop below 104, I think that will favor the bearish case. If dollar index were to cross 106.5, it'll be extremely bullish for the dollar index. And the main, as I pointed out last week, the main strength could come from the weakness in USD/JPY or the yen's weakness and strength in USD/JPY cross. When it comes to Brent, if Brent were to start trading above 87.5, we'll once again see a very strong move past 90. But that's not my base case. I anticipate Brent to drop somewhere close to 70s. But be prepared for what happens if the Brent were to cross 87.5, 88. That's an important decision point for me from the market saying that my bearish view on Brent is wrong. Likewise, the US S&P 500 has gone on for about 70 calendar days without a 1% drop. So again, there, if that were to start turning on, there'll be some sort of risk of the Bitcoin already is below the April low. That's already signaling some level of risk off. So watch out for cues from these global macros.
Okay, all right. Jay, we'll leave it there for today. Thank you very much for joining us. It's a pleasure and good conversation as always. So that's Jay Bala of Catch the Chaos. We're going to sort of start wrapping up things and where we are sort of leaving off today. So it's a pretty good close. Nifty Sensex new highs, Bank Nifty, mid-cap, small-cap indices looking up and nothing to really complain. The one space where we saw complete kind of reversal, but it could be just a day-on-day sort of phenomenon, are the railway PSUs and the fertilizer PSUs. RVNL, Wright, Circon, so many of these names all down 4-5% today. There were some of the largest volume-led losers, and some of the fertilizer names like Chambal, etc. were also down. But there was so much else which took its place on the winning side. Rice companies and the LT Foods and the KRBL. Jubilant Dreva was a big mover, and so much else which really picked up pace. Some of course what we discussed, Phoenix Limited, as Rima mentioned, CAMS was a big mover. Really long list of big volume-led gains today. Rima.
Well, frontline action, the top gainer is Maruti Suzuki, 6.5% up, followed by M&M with a 2.5%. So the auto index was the best performing index today, up close to about 2.5%. ITC played catch up, closing up above 450. So ITC has gained close to about 7% in the last 2 weeks. Hindalco, Titan rebounds after losing for the last 5 or 6 trading sessions. A bit of a rebound taking place in Titan. On the way down, Tata Consumer, Reliance, Kotak Mahindra Bank were under pressure.
Well, a few stocks that I'll be watching out for because of the F&O action that we saw. Chambal Fertilizer, that stock was down close to around 5% because, in fact, it went into the F&O ban. So let's see what's the action on that front.
Hindustan Copper, it appeared that it was bracing to come out of the F&O ban. So let's see whether that happens. So at the end of the day, we'll be getting that file. So Hindustan Copper will be a stock in focus. It moved up towards the second half of trade. So keep an eye out on that one. And a couple of other names like IEX and Balrampur Chini, they could be making their way into the F&O ban. So I'll keep an eye out on all these stocks. IEX, Balrampur Chini, as well as Hindustan Copper. For the time being, we'll wrap up on this edition of Closing Bell, but you don't go anywhere. Markets Forward comes up next.
Dr. Saneen, you know, one of the statistics say that only 50% of India.
Sensex and Nifty hit record highs in trade today after a day's break yesterday. Autos and consumer durable stocks drove the markets higher. Equity mutual fund inflows, by the way, the data came today, have risen 17% in June, crossing 40,000 crore rupees to hit a new high.
Maruti perks up after Uttar Pradesh waives registration fees for strong hybrid vehicles. The move raises hopes of other states following suit. In a positive for Maruti, Toyota and Honda.
The SEBI-appointed working group to curb speculative trading in derivatives is likely to call for increasing minimum lot sizes of contracts by at least 4 times. It's also eyeing restricting weekly options to only 1 expiry per stock exchange per week. That's a Money Control exclusive. Hello and welcome to Markets Forward, your go-to program where we aim to get you everything you need to know as you gear up for the next trading session. What a session we've had once again. New highs for the Nifty and the Sensex. I'm Prashant. With me, my colleague Rima. Rima, hi.
Hi, quite the terrific Tuesday, right? We've got you covered for the next 20 minutes with all the big news, key developments in the Lal Street, top corporate voices, the events to track ahead. But first, the day's market action.
what else but new highs? New highs for the market, new highs for flows, mutual fund flows into, investor flows into mutual funds. And, you know, it's just that kind of a market phase that we are in. So today's, of course, star mover was Maruti with a 6-7% kind of a gain. Started in the morning with a slow 3% gain, but then sort of ticked up through the course of the day. Mahindra & Mahindra crept higher and ended about 2.5-3% higher. There was an ITC which participated. So that's a Nifty for you, large caps, right? In the broader market, and, you know, there was enough activity, although there is also, you know, very sharp rotation which is happening. So what was the biggest winner yesterday? PSUs, you know, the railway PSUs, RVNL and IRCTC and RITES and IRCON, etc. They were all the top volume-led losers today, all of them down between 3 and 5%. But there was enough to take its place on the sort of winning board today. And it really, you know, big, long list of volume-led gains. And it wasn't really one pocket, but across the board. It's a very broadened out market. It's not a narrow market. That's one thing you can't complain about, that this is, you know, being led up by this group of, like, for example, the US, you say, is the AI stocks which are leading the market higher. I don't think you can make that complaint here. It's not valid because it's a very broad-based move. And people are really expanding their horizons in the hunt for new ideas, because so much of what is well owned is already done very, very well. So small cap index up 0.5%, the mid cap index up about 0.4% high today. Rima.
So fresh peaks on Dalal Street after 3 days of consolidation. And the good part is we pretty much closed at the session highs. The Nifty closing with a gain of more than 100 points. The Sensex up close to about 400 points. Autos, pharma, FMCG. These were the three lead sectors when it comes to the frontline action. But as Prashant pointed out, in the broader market, very vibrant. You had tea stocks doing well, fertilizer stocks higher, refining stocks saw a lot of gains, and individual names like CSC, Phoenix Mills also were up on pretty large volumes. And of course, the cherry on the cake was the equity inflow, 17% up in the month of June, a number which is well above 40,000 crore rupees. We'll talk more about it. SIPs too, improving on a month-on-month basis. Here's a lineup of what we have for you on our show today. We start with the top movers and shakers of the day with Vivek. Today's trade saw Maruti and CSC buzzing with excitement, while June's mutual fund data also came in. Stay tuned as we'll tell you more on that. And last but not the least, we delve into the key market events to watch out for. But first, it's over to Vivek now for the big movers and shakers of the day. Vivek.
Well, thank you so much for that. You know, like you mentioned, a record-breaking session once again. Today, you know, the entire pack, especially if you're looking at the Nifty, the top gainers actually belong to the auto pack. Maruti, of course, you know, had the positive news flow that actually drove it ahead. But not only Maruti, you know, even other names, even two-wheeler stocks did quite well in the session today. So the first set of stocks that we discussed were auto stocks doing very well. The next set of stocks, in fact, were from the cement pack. A lot of cement companies today saw quite a bit of buying traction. So look at names like Shree Cement, Dalmia Bharat, India Cement, JK Cement. All of them, especially in the last hour, saw quite a bit of buying movement. The third set of stocks that we're talking about, within that, you know, we'll focus on one, was the rice companies. LT Foods, with names like KRBL, Chamanlal Sethia, all of these stocks, you know, belonging to that particular pack did quite well. You know, some positive news in terms of restrictions being reviewed in terms of exports. Now, talking about Affle India, that was another stock that did quite well. Citi initiated coverage on the stock. They have a target price of close to 1,600. Stock ended higher by 3.5%. CSE was the other stock. We'll discuss that in later, in detail as well. Tariff hike, much awaited tariff hike coming in, and that was something that analysts believe will lead to a re-rating for this particular stock. From the broader end of the markets, one particular stock was BBTC, Bombay Burma Trading Company. The top gainer as far as the NSE 500 index was concerned, today up on strong volumes, almost 16% higher. And Blue Star, you know, this particular stock, especially in the last hour of the trading session, saw very strong buying activity, up almost 12.5%. But on the other hand, certain set of stocks that saw a bit of profit booking from higher levels, it was the entire railway pack as well as the shipbuilding names. So look at names like RVNL, Railtel, IRCON, Muscat Dock, Garden Reach. All of them cooled off a little bit from the recent highs. Raymond, this particular stock that has seen a stellar rally in the last 3 to 4 trading sessions, today cooled off a little bit. And lastly, RBL Bank, especially after the operational update came in, today fell for the 4th straight session.
All right, Vivek, thank you very much for that. So a comprehensive look at what was sort of what moved today, really. Jay Bala is with us of Catch the Chaos, and Sudeep Bandyopadhyay of IndiTrade is also with us. Gentlemen, good to have both of you here. Good. And Jay, let me just start with you. Price action. in the near to medium term, how is it looking? New highs today, once again, for the benchmark indices?
Yeah, I don't think the markets are going to get into any trouble as long as it stays about 24,000 on a closing basis. But the markets are quite stretched. That's the main complaint against the market. And most of the frontline names have been moving up quite a bit. So as long as the market can hold up about 24,000, there is no trouble for the market. But below that, that can be because the markets are stretched. And when it comes to the banking index, there's a very long-term trend line coming at about 54,000, around the 54,000 mark for the Nifty banking index. So that could put in some pressure for the market. Looking at the structure of HDFC, I think there is some volatility due for the banking index. So it could be offset by bullishness in HDFC going down and going up, and then rest of the banking players dropping to offset the banking index not tearing away much higher.
HDFC Bank was quite the disappointment today. It was under pressure for the last 3 trading sessions. It opened up in the green with a gain of about 0.5%, but ultimately closing absolutely flat. But let's get to the stock of the day, and that's Maruti. The shares surging up 7%, the top Nifty gainer after Uttar Pradesh waived the registration fees on hybrid cars. The move came in as a positive, and it's a positive not just for Maruti, but even other players like Toyota and Honda. Parikshit joins in with the latest details. Parikshit.
The UP government had brought out an electric vehicle manufacturing and hybrid policy in the year 2022. Now, this brought about a complete exemption of road tax and registration on electric and strong hybrid vehicles. The hybrid cars were also included in this policy. Now, while the exemption on electric vehicles as part of the policy was implemented from the year 22-23 onwards, the clause on exemption for strong hybrid cars was not for some reason. Recently, we believe, according to the Federation of Automobile Dealers, a customer went to court and got relief, and the court ordered the UP government to start giving exemption on strong hybrid cars under the policy as well. So from the first week of July, buyers of hybrid cars in Uttar Pradesh have started getting a 10% exemption, which means a complete exemption from road tax and registration charges on a strong hybrid car. So this literally brings down the cost of your hybrid car by about 2 lakhs. So if you were buying a Toyota Innova Hi-Cross for that matter, the cost could come down anywhere in the range of 2.5 to 2.6 lakhs. If you're buying a Grand Vitara hybrid, which costs around 19 to 20 lakhs, your cost could come down by about 2 lakhs or so. So this is a big benefit, so to say, but this has happened on the orders of the High Court. Toyota and Maruti are the companies which are selling hybrid cars in India, so this is a big boost for them. Nationwide, companies have been asking for tax relief on hybrid cars. That has not come through the GST Council. It's not been taken up either by the GST Council either. But for the moment, this is only applicable in UP, a 10% tax reduction and complete waiver on road tax and registration charges on hybrid vehicles in Uttar Pradesh.
Parikshit, well explained. Thank you for that. Sudeep, come in on Maruti Suzuki. The news is no doubt positive, and it's a big relief for consumers in Uttar Pradesh, but it's one state. How much can it account or move the needle in terms of volumes to warrant a 6.5% up move in Maruti?
Well, I understand about 10+ percentage of Maruti's volumes does come from UP. And Rima, you have to remember that many states may follow, because this is a kind of a competition among states, and to attract hybrid cars, more and more sale of hybrid cars. I think multiple other states may get into the act, and that won't be a bad thing. It's environment friendly as well, and it does help Maruti definitely in a big way. Toyota, of course, unfortunately, is not listed here, so we don't get to see the benefit in the markets. But as far as Maruti is concerned, it's definitely a benefit. Now, Maruti, even otherwise was doing well, and on top of this, UP benefit, which probably will affect 10% plus of its vehicle sales, is definitely a welcome news. And the prospect of further states getting into the act and giving some relief, encourages the stock even further.
All right, now got that big move today, though, almost 7% higher in today's session. Well, we just want to talk about one more name here, which is CESE. The stock was up 5%. The company's increased effective tariffs by almost 6%, and it started levying a fuel adjustment charge. And that's a result of which these effective tariffs are going up by that much. Vivek is here to tell us more. Vivek.
Well, that's right. So CSE, it's been a long-awaited ask of the company, where the company has been wanting to go ahead and do two things. Number one, they wanted to raise the tariffs, something that's still not fructified. Number two, they wanted to go ahead and at least recover, what was the excess charges that they were incurring on the back of higher fuel costs. Now, what's actually happened is that from the month of June, CSE has started charging its customers what they're calling as a fuel adjustment charge. Now, this fuel adjustment charge, they're charging to the tune of 40 paise per unit, which translates to an effective hike of 5.7% increase as far as the tariffs are concerned. What the IFL says on the back of this particular development is that they're saying this particular hike should be good enough to cover CSE's incremental fuel costs and ensure complete cost recovery. They also say that accumulated regulatory assets stay in the range of 3,000 to 3,500 crore and will be recovered gradually with regulatory approval. They're talking about the impact as far as the stock is concerned. They're saying from the stock prices perspective, this is a significant development, and they call it a positive development given the fact that on the back of these headwinds, the company was actually trading at a significant discount to its peer set like Torrent Power, Tata Power as well as Adani Power, and they believe such price hikes can help narrow down the valuation differential that CSE currently trades at compared to its own peer set.
Thank you very much for that. CSE is up 150% in the last 1 year. Sudeep, do you believe that CSE will be able to narrow the valuation gap versus peers?
Absolutely. I think this is what was missing as far as CSE is concerned. This tariff hike should take care of, recovery of part of their incremental costs. And eventually, the valuation gap definitely should narrow. They may not still come in the league of a Tata Power and some of the other top names like NTPC, but definitely, somewhere closer to Torrent Power would be my guess.
Okay, got that. Let's shift our focus to mutual funds now, right? Equity mutual